Traders Corner's 7th Annual Thanksgiving Investors Summit. I'm your host, Anthony Chapman, and we're thrilled to have you with us for what is truly one of the most opportunity-rich trading weeks of the year. With volatility surging across stocks and options, today's summit brings together a hand-picked lineup of top strategic trading mind experts who will show you exactly how they're identifying, navigating, and monetizing today's fast-moving market conditions. From breakout patterns to option setups to institutional flow to chart-driven precision trading, each presentation is packed with actionable insights you can put to work immediately. We'll be running sessions all day and after each speaker. You'll also find exclusive Black Friday specials that are once-a-year offers available only to summit attendees. I'll be placing those links in the chat after each session. So let's get started. Our first presenter is known for her decisive, high-precision approach to reading gaps and tracking the flow of institutional money, and we are talking about the great Melissa Armo of the stock Swoosh. Today, she'll show you how to identify the gap patterns institutions rely on, why volatile conditions make these setups especially powerful, the key signals that reveal high probability directional moves, and how to trade them with confidence. So everyone, please welcome Melissa Armo.
Good morning, can you hear me?
Good morning, Melissa.
Hello, welcome everyone. Great to be here today. Well, today I'm going to talk to you about trading on the side of institutional money for success. So it is a good time to get prepared really for 2026. I mean, again, it is almost December. Monday is December 1st. We have what's going to be a very interesting month because of the Fed meeting, but we pretty much are through, I think, the most of the volatility of the tariffs that happened this year in 2025. So I think we can go into December really focused on interest rates, what's going to happen with that. And of course, we still have earnings. We have retail earnings in December. I do a lot of earnings trades. And again, I focus on gaps, and that's what we're going to talk about today. If you're interested in more information, you can email me at melissa@thestockswoosh.com. Again, you can call me at 929-3200-GAP if you have questions or if you want to sign up for any of my classes at the end. But like I said, I'm really in my mind wanting to close out 2025 really strong and then prepare, mentally for 2026, getting organized. Do I want to increase my risk for next year? All of these things. What did I, going back and reviewing my year, could I have done better? Could I make some changes? This is the time of the year, again, it's the holidays, taking a couple days off myself here with Thanksgiving tomorrow, and really kind of reviewing what I accomplished this year and what can I do better next year. So again, if you're one of these people that you've been trading, you've been trying to make a trading for a while, and you can't seem to ever get some progress, like where you're taking, 8 steps forward and 20 steps back, where you're really not making money and moving forward, you've got to get out of a rut. If you're trading and you are not profitable, and again, it's 11 months into the year, then whatever you're doing does not work, and you have to change. You have to change, and it's okay to change, and change can be scary, but we have to do it. So again, why are you here? Maybe you're here to learn more about what I do. Maybe you're here to learn, just about trading in general, how you can make money, how you can trade for a career. But really what I do is based on a lot of common sense. I am following the moves that institutional money makes in the market. Then I am capturing those moves on a small time frame in a small period of time daily. So again, we're going to go over what a gap is in a minute. But when I'm saying institutional money, I mean hedge funds, big banks, large traders, professional traders that move stocks. So for example, today is not a good day to trade, okay? People are off, it's the holiday. You're not going to get institutional money moving any stocks today. You're going to get fake outs. You're going to get something that looks like it's going up or looks like it's going down and then doesn't have any follow through. So on days like today and Friday, where the market's only open a half day, you don't trade. There's not ideal conditions, and the market's closed obviously tomorrow. So I want to trade when the conditions are ideal. So I developed a system called the Golden Gap. It's one system that I use every single day that I trade to make money in the market. Now let's talk about what is a gap. A gap is a difference between the close and the open. This is a daily chart, it's a chart of BA. Stock closed here at 4 o'clock and closed at one price and opened lower at another price. So what happened? it gapped down. Okay, so there are gap downs and there are gap ups. What's a gap up? This is a gap up, closed here, gapped up, closed at one price at 4 o'clock. The market opens at 9:30 and opened higher, rallied. Okay, so this is an example of a gap up. Now we happen to short BA. We did a bunch of shorts in this. We did quite a few shorts in this in October and November. And again, the stock sold off. This was a really nice short. We did puts in it too. So here was a put that we did in BA. We did the 210 puts that I called 1029. Just want to show you here, again, this particular day, which the stock gapped. So it closed here, gap down, and I bought a put. Now, when I'm trading options, I'm buying the put to enter it, selling it to exit it. And again, we did the 210s. You can see where it went. Do. Came all the way down, boom. Fell, broke 200. This is within the time of the trade. It expired on the 7th. This was a nice trade. So again, this was a 410% return on investment. One of the benefits of doing options for me personally is that I can hold for longer moves and bigger moves overnight. I know people want to trade options because they can, trade options without a margin account, but really the larger benefit and the greater benefit is that you can capture bigger moves with a fixed risk. So again, this is an advanced trader risk. I'm going to show a beginner risk in a minute. You could have paid $275 for one, could have spent $275, and you still could have made over 400%. So I risk an advanced trader risk. I risk $96.25 and I made $39,375. I get out of it on the 5th. Okay, so it's about a week. We're doing the weeklies. If you risk $13.75, you could have made $56.25. This is a huge profit for someone, particularly with a smaller size account. I'm saying beginner risk. Again, you could have done one, you could have done two, and you could have day traded this, which we did as well. But as I was saying, that move in BA, okay, was made with institutional money for whatever reason. Who knows why? It doesn't really matter. I don't care. Whatever the reason is, people dumped it. Okay, they sold the BA. So opportunity sets up daily and gaps, and that is very important if you want to trade for income generation. Whether you're doing this full-time, part-time, if this is something that you want to do, I'm not a long-term investor. I tell people I'm not a swing trader. I'm not a long-term investor. I'm looking at stocks to get in and out with a move, okay? And I focus on shorts. I prefer to short, but I will go long. But I'm looking for a fast, quick move, okay? That could be in a day, could be in 5 minutes, it could be in a week in an option. That's still fast. I'm not buying the stock and holding forever. And in this type of market, honestly, you could get killed doing it. Now, this was actually, well, this is 1 week in a run. This wasn't last week. This was 2 weeks ago now. From the 7th to the 13th, I'm going to go through every trade here that I did in the live room. Okay, profit was $42,740. And again, this is just an example to show you, if you want a day trade, you have to have a margin account. You can trade with a prop account, but again, day trading or options or both, I like to do both. There's moves in the market. And if you don't have a lot of time, the fast trades, the day trades are the trades for you. So we did here on the 11th, okay, or no, the 7th, I'm sorry. We shorted the market, 11.7. Why? The market closed here, gap down. This is a QQQ, this is a daily. We got the drop, boom, got in, got out. Here was the trade. I shorted this at 607.05, boom. Got out at 599.25. This was a huge trade. The market fell and crashed this day. And so again, you would have had to have a margin account to do this, but if you didn't, you could have bought a put. We did puts too. Okay, we did puts too. So you could have bought a put, and they have daily put expirations in the queues, and you could have got in, got out here too. Nah. That was a really nice trade. And again, I could have even held that a little bit longer there. So that was the one day. Then we also, we did the BA that day too. We did the BA that day too. Here was the 7th. Closed here, gap down, open, dropped. Again, this is a short. Okay, this is a short. This is a day trade. Entered the short at 195.25. Boom. Got out, got the drop, $2, 193.30, made 87.75. Again, you could take 500 shares. You could have taken 100 shares. Either way, it's a $2 drop. Now, again, could have done this prop, could have done it as a margin account. Like I did here, you could have bought a put. Again, we've been doing puts in this. But again, if you did not want to do the day trade on margin, you could have bought a put and got in, got out, done, boom. So again, what happened here? The BA fell. So people shorted it and they dumped it. They sold it. Again, why? I don't care. It's the point of making money. And how do you make money? You got to get the direction right. You're going to lose in trades if you don't get the direction right. And that's one thing that people are going to start to find trippy and have since actually October. So from October till November, up until like the end of last week, again, I'm discounting this week because it's a holiday week, people are struggling now, and I'm generalizing here, active traders, retail traders, because they were buying every dip for the 6-7 months of the year from April up until about September, and it was working for the most part. That's off now. That's not working now the last 6-7 weeks. So, and it's not going to work the rest of the year either, by the way. So again, I developed a system and a strategy where I'm focusing mainly on shorts, and I'm shorting in a bullish market. I'm shorting in a bearish market, but again, it's very beneficial when the market turns because the market helps shorts when it goes. Amazon was the 10th. We actually went long this. This was actually a long. This is a bullish gap. Stock close here, gapped up, rallied, boom. You could have gone long this, okay? And again, you could have bought a call, entered it. Again, this is a day trade, 249.30, boom. Got $1 plus out, done. Made $3,000. Again, you could have bought a call and got in, got out. Then on the 11th, we did NVIDIA. We've been loving NVIDIA. Loving NVIDIA. This was a short. Stock close here, gap down, open, fell. Okay, NVIDIA's tanked here. And you could have shorted this right in here, 194.50. Again, I'm usually trying to get $1 or more. I'm happy with $1. 193.15, fast trade, got in, got out, made 47.25. Again, how do you put together a week? How do you put together a month? How do you put together a year trading? You chunk it. You chunk it out. You take a trade, get the move, get out. It's not trading all day, trading all day. My trading room opens at 9 a.m. We start trading at 9:30. I'm done by 9:45, 10 o'clock, 10:15 the latest. Like, I'm done. I don't mess around. I don't keep trading. I understand that the odds are against me. The more trades I take in a day, the odds are against me the longer that I'm in the market as the day goes on. You have all kinds of things happening, economic news, White House press conferences, Trump tweets. When you're up money in a trade, it's never over to the fat lady things. You have to take the profit. I'm telling you, fast trades is the key, okay? And any questions here as I'm talking, you can plop it in the room. And then on the 12th, we didn't do any trades. And then we did NVIDIA again. This has been a good one. Closed here, gap down, fell. This is the 13th. Again, another short, shorted at 190.70, exit 189.60, profit 4,400. Beautiful short, the NVIDIA. And again, for 5 days, basically an average week here, 42,740, and my average risk for trade is about $4,500 a trade. Again, these are margin trades. If you want to do options, again, I'm doing options. I showed you the earlier trade, but again, you could do my day trades as options if you want to, and some people are doing that. Some people are doing that. But the point is that, again, I'm looking for select criteria. I'm looking for certain stock picks. I'm looking for a stock to have certain criteria for me to take the trade. If it doesn't meet those criteria, guess what? I don't do it. I don't do it. Or I don't do anything that day if I don't find anything that meets my criteria. And again, that's part of it too. Like one of these days in here, we didn't trade. Any questions here this morning? How are we doing? Hello, is anyone there? But again, getting back to what I was saying, you put the odds in your favor. Using a high win ratio system is the best chance for success, because otherwise it's a 50-50 crapshoot, or you're looking to get a move with the market. Now, with the market power trends, which we've had some power trend bullish days in the market this year in 2025, we've had some very, very powerful power trend bearish days in the market in 2025. If you look back from January to now, there's probably been more power trend days this year than any year that I can think of in recent history. And we made more brand new all-time highs probably in recent history this year. And we didn't hold all of them. But the fact is that it's rare to have power trend days in the market. Somebody's asking a question. I only trade gaps. The criteria that I'm looking for that someone asked is what I teach in my class. The class is a paid class that I do once a month. I'll talk about it at the end, But the class for December is 13th and 14th, and it is a 14-hour class. That is where you will learn the criteria. Today, we're just talking here for 45 minutes to give you just some basic information to see if you have any interest in anything that I'm doing or want to ask me questions, since I'm here with you live. I'm here with you live today, the day before a holiday, for you to ask me questions on, you know, my strategy gaps or the market or anything you want me to look at. If you want me to look at stocks, we have time at the end. But I teach the criteria in a paid class. I only trade gaps though. One of the reasons for my success, again, I started trading in 2008. It took me 3 years to figure out my system, but trading now for almost 18 years. It'll be 18 years soon. But again, one of the reasons for my success is for myself personally and the people that come to me and take my class, and then the business that I've had now for, you know, for 15 years, is that I only do one thing. I don't profess to be an expert or a jack of all trades and all kinds of things. Like if you have certain, you know, if you're following trading educators, they teach futures, they teach Bitcoin, they teach crypto, they teach options. I just do gaps. That's it. That's all that I do. And whether you want to do it as an option or a day trade is really up to you. Again, I do both just so I can hold a little bit longer in an option. But I didn't do options actually when I started trading in 2008. I didn't trade options. I didn't start trading options like 2014, 2015. I've been day trading though since I started. The options are sent as newsletters, which goes to your email, which is a service. The room, you got to be there live. You got to be there live to take it. Set your levels. I don't know what you mean by that question. You'd like to know the best way to set your levels. I don't understand what you mean by levels. If you want to explain that. But we were talking about making money at the beginning. Obviously, everyone wants to make money. Costs are high. Interest rates are still high. Inflation is still high, as far as I'm concerned. Now, it might have gone down in the last 12 months, but you know, we're not seeing 2019 prices. You know what I mean? We may never see 2019 prices again, which kind of stinks, you know, and we don't even know if we're going to see interest rates go back down where they were before. I don't know. Again, that's going to be really on top. The meeting for the Fed, I think, is not this week, but the following week. Yeah, it's a week and a half away. No, yeah, it's 2 weeks from today. Actually, 2 weeks from today is the Fed meeting. Today is Wednesday. So again, everyone wants to make money, especially around the holidays, because we want to spend money, we want to buy presents, and we want to enjoy ourselves, and we want to take some time off and rest and relax and eat, drink, and be merry, and we don't want to worry about money. And so again, that is the goal, is to trade, to make money. I think a lot of people sometimes forget that because they end up getting involved with trading and they get involved in a trading community and they get into this. But if you're losing, that's not fun. You know, actually it can be very stressful. So again, talk about what I was saying. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. A big flow of money going a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of the power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Justina's asking about setups. Well, again, you have to take my class to learn how I'm making the stock picks. But if you're asking me what's the best chart to view everything, it's the daily chart. The daily chart, you get all the information you need from the daily. So that, if someone said to me, Melissa, you can only trade with one chart for the rest of your life, it would be the daily chart. That is key, okay? So again, becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Learning advanced technical analysis is required to be successful because price is really what counts. What does this mean? It means reading price action and charts. Again, you need to do that. You need to have charts. So it's technical analysis. I make decisions based on technical analysis, not on fundamentals, not on what somebody's tweeting, okay? Not even on what the Fed's going to say, because who knows what the Fed's going to say. The Fed could say, we're going to drop rates 0.25%, and the market may fall. It may not react positive to that. You know what I'm saying? So you can't always buy into it. It's the same thing where you could have great earnings in a stock, and the stock could crash. You say, wait a minute, the earnings were fabulous. Why is it selling off? Sometimes it doesn't add up to that with the fundamentals, and that's why it's really important to learn to read price. Comprehending how to redefine and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself through trading your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading the market. And I'm telling you, if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. And that's what I teach in my class. Knowing how to read what institutional money looks like is essential to become a successful trader. It's like I'm predicting what's going to happen next. I'm not predicting the gap. I'm predicting what's going to happen next. You can win big trading on this side of the power. You can make money in the market if you know what to do. Many people don't, or they get sucked into bad trades or not focusing. So just don't do that. I'm going to try to bring up my chart here. Can you see, without me clicking on and off, the SPY? I just want to show you one thing quick. Can you see the SPY? I'm going to go to NVIDIA here. So I was talking about predicting. Just pull this up here. Again, I'm not predicting what somebody's going to get. Like, you know what I mean? But I'm not predicting what the Fed's going to do. I don't know. You can make estimates, but you don't trade based on guessing or, you know, crapshoots. You look at it and make a determination based on the chart. So I'm going to go back here. This was 11:20. NVIDIA had earnings. Let's blow this up. So NVIDIA had earnings and gapped up from 11.19. It closed at 186.52. Boom. Open at 195.95. This is NVIDIA, and it gapped up in the earnings. I did not go long it. A lot of people were going long. If you follow this, everyone's excited about NVIDIA, but the stock failed on the gap up on the earnings. It actually sold off. A lot of people wanted to go long that, and I'm generalizing here, a lot of retail traders. Again, I appear on television. I talk on Fox and other channels too. In fact, they asked me to be on Newsmax tomorrow for Thanksgiving. I said, no, I want the day off for Thanksgiving, but everybody was really hyped to go long this stock after the earnings. And I'm not going to deny it. The stock was up $10 on the earnings. There it is. You see it. It's right there. But I didn't go long it. And I thought, you know what? If it goes, it goes. And then I'm not going to get it. I didn't lose money. I didn't make money if it goes up. But I didn't like the gap. Why? Because I used the criteria that you have in my system, and I rated the gap as a bullish gap. And I said, no, this isn't good. This isn't good. And so I didn't go long it. So again, you can't go long every gap up, even in an uptrend, which this is. And you can't short every gap down. And you can't go long every gap down, and you can't short every gap up. Like this could have held, this could have, but I didn't like it. And it didn't rate good. So again, making decisions based on what's happening actually in the price is critical. Because again, actually you could look back and say, whoa, the earnings were good. This makes no sense or whatever. But it fell. In fact, it crashed. You see it? It was John Mungo bar. In fact, in 2 days, it went from 196 all the way down. It fell 20 some points in 2 days. That's a big move. Okay. So it's extremely important to look at the chart, make a determination based on the gap, which is what I do based on the direction. And how do I do that? Again, with the rating system. I use one strategy to trade. One strategy, one focus. This helps keeps me focused, and it's called the golden gap. So again, what is the gap? A stock gaps in the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Almost everything gaps then. So how do you know if it's going to go? How do you know if it's going to have a big move? How do you know if it's going to hold the direction? How do you know if it's a good gap, or what I call a golden gap? You don't until you rate it. And again, I teach the rating system in my class. But again, this is another example here. This was Amazon. Stock closed here, gapped up. This was back in the earnings. This fell too. Here was the day we went long this here, and this pop up here in November. But again, this is a bullish gap, and here is a bearish gap. So there's all kinds of gaps. Here's another one here. PLTR is a popular stock too. Stock closed here, gap down, fell, boom. Then did it again here. Closed here, gap down, fell off a cliff, boom. So again, there's lots and lots and lots and lots and lots of stocks to look at that are gapping. There's no shortage of stocks to look at every day. There's no shortage of gaps. There's a shortage of quality gaps. There's a shortage of quality to look for that has the big power money, the huge opportunity, because not everything is getting bought and it's going to have a big move every day. And gaps have huge opportunity because they spot the power money. So again, how do you find gaps? I developed a criteria. It's a checklist. The checklist tells you what to look for in the price of the stock. You find gaps and rate them using a checklist, and gaps have to be qualified. Again, going with the crowd always, and NVIDIA is a good example where you're like, oh, everyone loves NVIDIA. Its earnings were great and it's up a lot. Let's do it. That's not the answer, okay? That is not how you make money. There is only one thing and one thing only that can move the direction of a stock, and it's money. It's not a little bit of money, but a lot of money, or what I call power money, okay? Power money is in charge. Power money is in charge of the stock's direction. Trends are set and move with the power money painful, of which there's a lot of in the market. So again, gaps happen in the market on a regular basis. However, some gaps are better than others, and some gaps are nothing gaps. So again, something could gap, and then I say, I don't like it, and then I won't do it. And then again, like I said, NVIDIA was a good example. Bullish chart, beautiful chart, great chart, gapped up on earnings, didn't go long it. And if I had, I would have lost, actually. Okay, so I'm glad I didn't do it. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power money will flow to pay you. So again, I use a 26-point checklist. I go through this as if I'm performing surgery every morning. Again, if you go in for surgery, there's a checklist, do, and they go through it, okay? This is how I look at, this is how serious I look at what I'm doing when I trade. Why? Because I'm risking my own money and I don't want to lose it. And if I'm gonna risk money, then it better be good. Do you know what I'm saying? That is how I look at it. And I'd rather not trade than take something that's crap. And yet, if I see something that's good, again, that BA was really good. But if I see something that's good, I say I have 100% conviction, then I'll go hog wild in it. I'll do a day trade, I'll do a pet, I'll do a couple trades in it, I'll do a bunch of different strikes. I'll hold it, okay? I'll take more risk. But again, the key to profits is power money. And that's what I'm looking at. That's what the criteria tells me. When you think about it, you're thinking about it intellectually, you're like, okay, well, this totally makes sense. Go with the big money, go with the power money. I don't trade low float stocks or penny stocks or cheap stocks or stocks with no volume. You're not gonna have a hedge fund buy something like that. Again, I was telling you how I'm not trading this week. So yes, we rallied this week. It has no meaning. I'm just gonna tell you right now. This is like whatever. So don't read anything into this Monday, Tuesday, Wednesday, or even Friday trading. It's sucking in a lot of buyers that are retail traders, that's true, but you're not getting any institutional moves in this market rally this week at all. In fact, I wouldn't be surprised if we collapsed in the next 2 weeks. Well, maybe we'll make new highs, I don't know, but I wouldn't be surprised if all of this is wiped out in the next 2-3 weeks. So when you think about it, just seriously, just common sense, it makes sense that you should be trading on the side of power. So pinpoint the direction of power money by reading price, and that will help you see what's happening. And again, what does selling look like? It's a big fat red bar. We got a lot of them here. That was a PLTR. There's some more. Close here, gap down. This was Meta. Closed up here. Again, expensive stock, over 750. Could have bought a put in it. Gap down here. This is crazy. Gap down here, almost 100 points. Fell off a planet. Look at it. Boom, 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 boom. Came all the way down, broke 600. This is crazy. So from the day before, this had earnings. This was an earnings gap. From the day before, this was the day before Halloween, it had earnings. Look at it. It lost 160 plus points. This is just like in 2 weeks. So that's a great example, again, of what? Selling, okay. So before that, before the earnings here that we had buying, just want to show this here. So this was buying. We had a gap up here at 720, and it took it up here, but it didn't last. And again, market, shorting the market here, close here, gap down, fell, close here, gap down. Anyways, it's easy to press the button when you know what to look for. When you have conviction, it's very difficult for people when they don't have conviction to press the button. Or people, what they do is they chase it. They'll see PLTR and NVIDIA sell off. It'll have made, 70% of the move. They'll jump in late, then it'll flip, then it'll bounce. They'll have a crappy entry. They'll jump in it late, then they'll kind of scalp it, or they'll make a little or lose a little. They never really get the good entry. I'm in these stocks. I'm in these trades very aggressively. I'm almost in these shorts at the high of the day. You know what I mean? So again, I'm aggressive, but I have it all prepped out, all worked out, all situated before the market even opens, knowing what I want to do and knowing what I want to trade. That conviction of the rating system that I'm using to make the determination of the direction helps me make money. When a lot of people are floundering or trying to figure out what to do or waiting for the market direction of the day or waiting even to take a trade till after 10 o'clock, or like I said, jumping in late. And you need to have conviction to make money. You need to have conviction to make a lot of money. But even if you have small goals in a small account, you need conviction too. Because if you have a small account, then you really got to be careful. Do you know what I'm saying? Then you almost have to pick even more quality trades. Do you follow what I'm saying? So if you want to trade effectively, you cannot go with a crowd of day traders. And unfortunately, a lot of people are, like I said, been buying the dip all year. It hasn't been working the last several weeks, and it's not going to work between now and the end of the year. And people are going to get burned. So my edge is really looking into stocks ahead of time, way before the market opens, and making the decision what I want to do ahead of the open. And also shorting, because a lot of people don't short. I'm very good at shorting. And again, I'm good at the fast trades, but earning power is extremely important, because even if you have a small account, like I said, you could grow the account and grow it up to a larger account if you know how to trade. If you have a lot of money, you'll lose it if you don't know how to trade. So everyone says, well, if I had, $500,000, I could do this, I could do that. Yeah, but if you don't know how to trade, if you don't have a good trading system, you'll lose that $500,000, and you can lose it very quick. Trust me, I've heard horror stories from people. So the knowledge and information you gain in my class to learn what to do, how to make the pick, is invaluable, whatever size account you have and whatever amount you want to risk. Okay. Any questions here so far? How are we doing? We good? Okay, keep going. Okay, getting back to what I was saying, if you want to consistently make a lot of money in the market, the only way that's going to happen is, number one, you need a high winning strategy. Number two, you need good money management, okay? And number three, you need a good mentor to follow in the live trading room. So I run the room, I call the trades, and I'm doing them with people live. And if you're, if you join, you're in the room, you're doing the trade with me. You decide how much you want to risk, okay? But I'm calling the trades live. And if you go to my YouTube, you can watch a bunch of trading room videos I have on YouTube. And again, I'm very fast. We're doing the shorts. We're in and out quick, because time of the day is key. Between 9:30 and 10 a.m. is a critical time to get the fast trade. So I'm trading on the 1 minute chart, but I'm developing and understanding and making the choice for the trade decision that I'm doing in the stock pick on the daily. I find that the morning is a very important time to trade. That's where you get most of the moves and the biggest moves. And again, like I was saying, the benefit is that you can trade from home. You can be anywhere in the world and do this. And it's very interesting. There's so many people that are interested in investing and trading the US stock market from other countries. The US stock market has rules, it has set hours, there's so much volume, there's so much volatility, there's a lot of money in the market. Everybody wants to be on the US stock exchange. So again, people want to be invested in the market, and the market has had, quite a ride. The last 12 months, even if you just go back to, it's over a year since the election. Just go look at where we were since the election last November. It's hard to believe, but the election was only a year ago. And here we are. It's almost a year, and look at the move that it's had. Someone's asking the cost of my program. I'm going to get to that in a minute. So the class is called the Golden Gap course. The Golden Gap course teaches a 26-point rating system to find the stock to trade each day. The course also teaches how to enter and exit the stock of the day. The course teaches price analysis and technical analysis on an advanced level. It teaches one solid strategy to trade gaps effectively by reading the side of power in charts, and it teaches how to read support and resistance to take positions in the right direction. It teaches a more proficient and advanced way to read charts focusing on technical analysis and gaps, and it teaches how to get conviction in your trading in the market as a source of wealth by trading with the side of power for consistent profit. So even if you want to trade and do swing trades, you're still better off actually doing the gap system for the long-term trades. But for me, it's about income generation. I say chunk it out. You take the trade, get the move, get it out. Whether you take 500 shares, 1,000 shares, 2,000 shares, you've got to have conviction no matter how much money you're risking. And again, if you don't know why you're taking the trade, or you can't tell me the direction the stock's going to go, and you can't tell me, the target, you shouldn't be doing it. You could say, well, the earnings were great, or this, that with the Fed. No, I mean, that doesn't necessarily add up, because if it was that easy to trade, then everybody would just go long every time there's a good earnings. It doesn't work like that, okay? So again, if you're one person and you want to do this, you can open up your own account, you can go trade wherever you want. If you want a referral, give you a referral. I teach people my system in a class, okay? So I empower people to trade themselves. And you've got to empower yourself to trade too. And remember, if you pay for a program, you're investing in your future. You're investing in yourself. Again, it's the holidays. I know we're buying gifts for other people. I've already started Christmas shopping. And yet, you know what, Black Friday's this Friday. And I'm like, okay, what do I need anything for myself? Do I need anything for the house? Do I need some other things? We can buy gifts for ourselves too. And education is a gift to yourself, because you're investing in yourself and your future for 2026 and beyond, for a method to trade. Because if you don't have one, if you don't have a focus, if you don't have a system, you're not going to be successful. Or if you have one now and it doesn't consistently work under any market conditions, you're not going to be successful. A lot of retail traders made money in the uptick from the April drop off, then when Trump stopped the tariffs, when he paused them, just buying every dip from April, May, June, July. That is over people. And even though the market's still bullish, that is over. If it was that easy to just make money, we just buy every dip, but it's not. There takes some knowledge and information, and I think people got lucky this year in certain periods going long. Here's some testimonials. What else? Okay, so the class is called the Golden Gap course. It's a full 2-day course in how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Cost of the class is $6,999. Someone just asked about that. That's how much the class is. It's December 13th and 14th, 9 a.m. to 5 p.m. Eastern time, last class of the year. If you want to sign up, you must email me for sign-up forms at melissa@thestockswoosh.com. Now, I am doing Black Friday sales. I live in New York. The Thanksgiving Day parade is tomorrow, Macy's parade. It's the 99th parade. It's going to be fabulous. I think it's going to be a nice weather. But I'm doing 2 specials for Black Friday. Lot of bonuses in this. So I have a bundle, which is normally $8,999. The Black Friday sale is $79.99. With that, you get 3 classes, the Golden Gap, the Trends, and the Options class. You get the $1,000 off, which is a Black Friday special, and you get the room and the newsletter and the market report to the end of 2026, which is a huge, long time. So basically 13 months. You sign up now, start trading with us Monday, and you get 2 one-hour mentoring sessions with me. This is the Black Friday bundle. Then I have a combo, which again is normally $79.99. It's $69.99 for Black Friday. It's $1,000 off. You get the Golden Gap course, the Trends class, and then you get all 3 subscriptions free till the end of next year. So basically, you get all my trades for 13 months free. So this is worth it. And you do the class, and then you get the Trends class, which is good actually for options if you're going to trade options or swing trades. So that is the cost of the classes, and I am doing Black Friday sales that end on Friday. Today is Wednesday. So if you want to sign up, you email me. And any other questions? Here's the information. If you want to email me, melissa@thestockswoosh.com. Again, this is the bundle. What else? Listen, be careful. If you're trading this week, which I would not do, I'm not trading this week, I would be extremely careful. Again, I think the market's just going to go into the doldrums the rest of the day today and have like next to no volume on Friday, in my opinion. But it is going to be a good December. It should be a volatile December. It should be exciting December. Again, it's going to all be about the Fed, economic data, and what the Fed decides, you know. Any questions from anyone? If anyone is interested, again, you can email me at melissa@thestockswoosh.com. Any last minute questions here? I think I'm good on time. Listen, happy Thanksgiving, everyone. Happy Thanksgiving. Thank you for having me. You're welcome. Any last minute questions? And watch the Macy's parade. 99th parade tomorrow. So next year's the 100th parade. Tomorrow's the 99th. It's really something. Listen, have a wonderful day. You're welcome.
Thank you, Melissa. Did we lose her?
I'm here. Are you there?
Oh, okay. I'm sorry. Yeah, I'm here. Yeah, thank you for your presentation. Really appreciate it.
Thank you. Happy Thanksgiving.
Thanks. You too. We really appreciate you being here.
Thank you. Bye.
Thank you, Melissa, for an outstanding and extremely valuable session on gap trading and institutional flow. Email Melissa for her Black Friday special. I put her email in the chat, so be sure to do that. And check her out on YouTube, and she's on Fox and everything else. She's a really, really great resource, and she's killing it. So thank you again, Melissa. And we're wishing you a happy holiday season. Thanks for being here today. Our next speaker brings more than 30 years of equity options expertise and is a co-founder of Master Trader. And I'm talking about Dan Gibby. Dan will walk you through one of Master Trader's most potent igniting patterns, a powerful candlestick sequence that often precedes explosive moves. You'll learn the psychology behind the pattern and how to enhance it with bar-by-bar analysis, retracements, and void analysis. So please welcome Dan Gibby. Hi, Dan, are you there? I think you're on mute. And we started a couple minutes early. I think Melissa had to get going a little bit early today, so I apologize. Oh, Dan, I think you're still on mute. All right, audience, it's my fault. We ended Melissa's a little bit early, and I think Dan's probably not quite ready. He was supposed to go on in about 1 minute, so we'll give Dan a little bit of time. If you need to get something to drink or something, check the market. Now's a good time. Which I haven't checked the market. It was up early in the morning. I haven't checked it since. Yeah, it looks like all indexes are still up. VIX is down about $1, 1757. All the major indexes are about 0.72 to 0.82% up. Gold's down about 0.5%. I have a question for the audience. What does everyone usually trade? Are there certain certain products, indexes? Yeah, you'll get a, Justine is asking, will we get a recording of this presentation? Yeah, you check your email and you'll get an invite to rewatch it. And I suggest doing that because we do get a lot of information. So Dan, are you there? We see your screen, but I think you're still on mute.
Yeah, excuse me. Yeah, sorry about that. I had to help a neighbor with an emergency. All right, I had the button about share my screen. Here it is. Let me try again.
Oh, you're sharing your screen. We could see it.
Well, but I'm sharing the wrong one, I think.
Oh, okay.
There. Okay, yeah, I'm ready whenever you give me the green light.
Yeah, you got it. I already did an introduction, so you're good.
All right, excellent. Yeah, sorry for the late start there, but we have a phenomenal presentation here for you today. So let's just begin. All right, Master Trader, we have a technical-based approach to trading anything that moves, stocks, options, cryptocurrencies, commodities. And today we're going to be talking to you about trading stocks and options on one of our top patterns. I think it's my favorite one. And as pattern traders, that is our starting point. Price is king. There's many ways to skin the cat in the financial markets, and our approach is give me a compelling setup on the time frame that you're trading, any instrument at all, doesn't matter. It could be a 5-minute chart, it could be a weekly chart, and that is my starting point for a trading opportunity. Then I take that pattern, the starting point, and I say, okay, well, what trend is it in? Is it on support or resistance? What about multiple time frames? Is it showing relative strength or weakness? We say that volume and moving average is secondary. We don't need them, but you'll see on all my charts, they're there, and they help speed up the analysis. And what are the broader markets doing? I mean, right now, broader markets are in Thanksgiving party mode. It's up 4 days, and the risk is rising to put on new swing trades right now. Market internals help us keep us on the right side of whether we're at turning points for bullish or bear. We have levels both for swing trading and day trading. If you don't have proper position and money management, then you're not going to survive. I don't care what business you're going into. You need to, and trading is a speculative, systematic, objective business. It's not a hobby. So you need a trading plan that lays out your method, and then you got to have the trader psychology to be able to follow your plan. This slide is just showing you 9 very simple, what we call, bullish money patterns to trade anything. So these are just examples. We have many more. These are examples of saying, hey, this is my starting point of a bullish pattern, a buy setup, continuation, breakdown failure, 180 reversals, W bottoms. Today, we're going to be focusing on just this one pattern. And then as the prior slide showed you, then that's our starting point. And then we overlay those other concepts, and we're always analyzing the price action of what led up to this pattern that I am trading. This, I just, these were 2 old examples, so I'm just going to use this for our definition. It turns out they're 2 separate daily charts, and there's 2 different 1, 2, 3s. Our daily charts are this simple: color-coded candlesticks. I have The 20 is blue, 50 green, red 200. It's just in color-coded volume, and these moving averages, it speeds up the analysis because I can actually take the candlesticks off and have an educated opinion on what this underlying issue is doing on short to intermediate and long-term timeframes. Now we put the candles back on, and that's what we're trading. So I have a rising 50 here. I have a consolidation into an intermediate term uptrend. Here's my 1, 2, 3. It is this simple. I can teach an 8-year-old. So hopefully you do have some minor children here, because I promise you at the end of this session, you are going to be able to confidently trade this one pattern I'm going to be showing with you. I want a wide range bar from consolidation. What's a wide range bar, Dan? Well, just ask little Johnny sitting next to you. I want a big fat green candlestick with little or no tails. Well, how do I measure that? You just look at it compared to the data from the past, and they should jump out at you. Here's one, but it's not a 1, 2, 3. So that's a big green bar with little to no tails. Here's one, and here's one. But the 1, 2, 3 continuation setup, I also am now looking for one or more bullish inside bars that stay in roughly the upper third of the range of the wide range bar. You buy over the high of those 2 bars, your initial stop is under the wide range bar, you manage in between. So I want these bars from consolidation and not far from the 20 period moving average. So this same pattern way up here, far from the 20, is probably near the end of its run. This is one also at the rising 20. Engulfing bar, little to no tails, inside bar. Here's one, wide range breakout from consolidation at the 20 and 200 and 50. There's my inside bar. And one more concept that's implicit in every single one of our setups is the concept of a price void. What does that mean? It means look to the left of where the 1, 2, 3 or any other setup for that matter. You want insignificant resistance to allow it to move higher. All this consolidation here, now I have a closing breakout. I have insignificant resistance all the way up to this prior high. This one over here, well, I need more data. This one here, you know, they're at new highs. This one here looks fantastic. It had a nice 5-bar run. It's rested, and it's given me a new 1, 2, 3 setup. Buy over the high, stop under the low. Now, every 1, 2, 3 I'm going to show you. Well, let me rephrase it. Every bullish setup that we are willing to buy or short the underlying stock or ETF, we call that a directional trade. And every directional trade is a candidate for an option trade. We buy calls and puts on directional setups because we get the benefit of leverage and limited risk using options. But you have to make sure they are liquid. And that's what keeps us out the majority of the time is, you know, you only got like 125 of them that are really liquid. We also sell options at turning points, as we call it, an income trade. So every quality 1, 2, 3 setup that's a directional is a candidate for selling a put spread under the WRB. Under the WRB, I'd be looking to sell an $11 put spread Well, this is $1.60 stock, so there's not going to be any options over there. But let's continue. I got tons of examples here that that we'll just go through in the allotted time. This is a sloppier 1, 2, 3, but I'm doing it to show you the 15-minute chart. It's still a very tradable one because it's slopped around here. I got my wide range bar with little or no tails. I got my inside bar, and I got a price void. This is my price void. I don't have overlapping bars. I don't have congestion. So you buy over the high, stop under the low. But here's what I want to show you. This is a 15-minute chart of the 1, 2, 3 setup. NYSE hours are 9:30 a.m. to 4 p.m. So that's 6.5 trading hours. If you divide that by 4, you have 4 15-minute bars in an hour, right? That's 26 15-minute bars per day. This was our igniting bar day. Closed, it started off near the low of the day, closed near the high of the day. That's this bar right here. So this is now the power of the 1, 2, 3, and I'm going to show you examples of 1, 2, 3, 4. They have multiple consolidation days. So the next days, you can barely see this dotted line. This is my inside bar. It gapped down, rallied. There's nothing to do here as a swing trader. It's consolidating all day long, closing near the high, and that's giving me my bullish inside bar right there. Let me just pulling this question sheet out. Okay, so examples. Look at this flat, all these flat MAs. And so then it exploded to the upside, came back. This is what we call a master trader buy setup. It's a pullback and reversal on support in an uptrend. So could you have bought over the high of this bar, stop under the low as a buy setup? Yes, you could have. The next day, there's my wide range bar with little or no tails. Now I have, now one of you might be saying, Dan, that's not an inside bar. This next one, you told me they had to be inside, which means it can't trade over the high of this WRB. And my response is, you're correct, I did say that. But my response to that is, trading is not that, don't be that exact, don't be that anal. These are two bullish consolidation bars. So now I have two inside bars that stay in the upper, third 40%. And so imagine now if I have 2 days of 15-minute consolidation bars, right? So that would be 52 15-minute bars. And your entry is over the high of those two. I have a price void, and you manage in between. This one, we actually just bought the stock because cheap stock over here. And we didn't have a good option to buy. Look how, all trading is not this easy. I'd totally be misleading you if it was. All we did was trail under a prior bar's low, and which hasn't even happened yet. But this being, we call this a wide range ending bar. You get a big fat acceleration bar far from the 20. That's a good sign that you have people getting on board late because of greed. It's the opposite of being in a losing trade and then them selling near the low, saying, I can't take this anymore, I'm selling, get me out of this. promise I won't trade anymore. And that's what sets up those climactic buy setups. So, you know, every trade I'm going to show you is different, but you're going to see that the messages are the same. So we had a nice uptrend, deep retracement. This should not have come down all the way this far. It's rebuilding. It's building this base over time. So that's constructive, bullish price action because it moved up vigorously for 3 bars, and it's not retracing. Now I have my wide range breakout. Look at this. I got 3 inside bars. When we say a 1, 2, 3, 4, we define that as another inside bar that trades under the low of a prior inside bar. So that acts as a mini shakeout. This is a closed trade. We track every trade of ours in the open and closed members area on a spreadsheet. We give the date, the symbol, stock or option trade or ETF trade. We give them the technical setup. 1, 2, 3, 4 breakout at the 50 MA, right here. That's right there. We've spent 15 minutes together, and you already have learned that. I have a 1, 2, 3, 4 from consolidation at the 50 period moving average. Buy over the high of those, stop under the low, manage in between. Now that this bar closed strong like that and starts to move up, I'm moving my stop under this bar, go into trail mode. We held this 4 days, and there are the numbers. And obviously we give trade management along the way. I have all 3 moving averages are rising. So I have a multi-week consolidation within a longer term uptrend. Remember I told you we're always looking at price action leading up to it. Let's start right here because this was a bearish gap down, right? The bottom, the opening of this real body is where the stock opened. That was a shock. That should have gone lower, but it didn't. It filled the gap and closed with what? A bullish wide range bar. Now I have 2 inside bars. That was a tradable 1, 2, 3 stop under the low. If you did enter there, you know, it's just dead money here for a while. But here is a second one. Now this one is a closing breakout, range expansion engulfing bar. Whereas see this one closed at the top of the range. So this one is much more reliable. Now I have 2 inside bars. You know, that's what we call a no-brainer setup right there. And you know, whenever we trade, and this applies to every one of us, the reason we trade, whether we buy or short something, is because we have a belief about its future price movement. That's just a fact. Or else you're just a gambler and, you know, following your buddy at happy hour and you're trusting him. Oh, he's buying it, so I you know, I'll do it too. Our belief system is formed with that first slide I showed you. Our technical approach to trading anything that moves. Now, my bias on this, my belief system of this setup right here is 95% sure that over the high of these 3 bars, this stock is moving higher. Does that mean trading and technical analysis is infallible? Of course not. That's why we have stop losses. This thing could have had some bad news, gap down, and closed down here at $84. Guess what? I stopped out then. Remember that first slide also, money management? You have to calculate the position size of every single trade that you take so you know your maximum loss, other than, you know, catastrophic gap that none of us can guard against. And so now I'm in management mode. Mess. To me, there's nothing to do in here. I mean, maybe selling some put spreads and call spreads, but I'm not going to get into that today unless it involves a 1, 2, 3. But what is interesting to me is this ugly closing red bar should have gone lower. And it traveled all the way back up to fill the gap. And now it's building a higher range base at the 20, above the 50, above the 200. Here is my wide range bar closing breakout. You've learned this already. I've shown you half a dozen examples already. It's a closing breakout from a multi-week consolidation. There's my inside bar. It stays in the upper 40%, let's say. I say third or 40%. And I don't worry about the tails as much. The tails can whip down. So the real body, you want to stay in the upper 40%. There's my 1, 2, 3. Look to the left. I have a price void. We bought the stock. Just went into trail mode. You know, made 29 points on this thing because of this setup. My partner Craig, he loves to say same but different. And then, you know, it's kind of like a professional poker player. And this is not gambling in that sense, but I consider professional poker players not gamblers. It is a calculated, systematic, objective method involving risk management. You know, their fold is a stop loss, right? So, you know, the reason I'm saying that is because a poker player, you just get dealt cards and then you play a new game. So regardless of the cards dealt to that poker player, he or she knows what to do based on the objective teaching and based on seasoning and position and money and risk management. The same here. Look, this was a little breakdown failure. Now I have a wide range closing breakout inside bar. Here's my price void. It's the same but different as those other ones. You're never going to get a setup that's identical, but if you understand the pattern and the concepts that were on that first slide, and the void, and the trend, and the support and resistance, and the bullish gap with no follow through to this little red bar, that's an amazingly bullish setup right there. What did we tell subscribers? It's a bullish 1, 2, 3 after a bullish turn at the 20 MA. So that's this little downside shakeout. We call that a turn. It went down and it came back up, and that's a turn, 3-bar turn. I'll talk more about this later, but this time of year, you know, happy Thanksgiving ahead of time, which is tomorrow. Holiday season's coming up. We only do this once a year. We have amazing holiday slash prices on our letters, our seminars, our green room, mastertrader.com holidays. But we'll come back to that in a few minutes. This is in a downtrend. Look at my 20 and 50. What jumps out at me that grabs my attention? Because nothing here grabbed my attention really. It's just, look, red green, it's just a mess. A bearish gap down that closed with an engulfing bar. That's my wide range bar. That's my inside bar. Now, would I have bought over the high of these two, of that red bar? No, I wouldn't have, because of the term. Remember I told you, void? It doesn't have a clear void like those other examples yet. But now I have another green bar. Now I have a closing breakout. So now I have more confidence that the power of this gap reversal bar is going to hold. Now I have a void. This one booked 2.5 points. Just, you know, we're swing traders. A swing trade, this is not a pattern I would marry, you know, using that analogy. I'm not marrying this thing. I'm trying to have a compelling setup, and if I can get, you know, a couple points out of it for a 2 to 5 day swing trade, take your money, on to the next one. Same but different. The stock's in a coma. Flat 20, flat 50. Why can you, so is little Johnny next to any of you? Little Johnny, where are the bullish wide range bars on this chart? He'll say, well, don't forget about this one over here, Mom. That's a bullish wide range bar. That doesn't mean it's an actionable event. I'm saying just tell me where they are. And it's a wide range bar relative to the others with little to no tails. So this one jumps out at me. In a coma, wide range closing breakout. This thing closed over weeks of data. Now I have 3 inside bars. I have a price void. Look to the left. This is a momentum move down. So there's insignificant resistance till it gets all the way back up here. Does that mean that I'm going to sit there and hold it until it gets to 120? No. But it has a monster void, and then I just go into management mode. Made almost 6 points. This is I remember, well, this is a beautiful 1, 2, 3, 4. Has a bottoming pattern. So you're in a downtrend. Look at the 2050 and power downtrends. Had a big move up, went sideways. Here's my wide range breakout. There's my inside bar. So remember I said this is a refresher now. This is a buyable 1, 2, 3. Everybody should be nodding their heads. Yep, yep. I got bullish consolidation. I'm above the 20, range expansion, closing breakout, price void, inside bar that stays in the upper third of this. Yep, Dan, I'm all with you. Now I have another inside bar that trades under the prior bar's low with a bottoming tail. That's my 4. That's why I call it a 1, 2, 3, 4. So this one is more reliable because I have a downside shakeout and 52 bullish bars. Carolyn, is that? Yeah, Carolyn's asking me, or just making a statement, which I respect. Isn't hindsight wonderful? Too bad it isn't possible to trade after the fact. Carolyn, I am so glad you made that comment, and here's why. Unless I'm showing you my live screen right now and scanning for these 1, 2, 3s, I'm giving everybody the textbook education. Remember I said the path to becoming a skilled trader? Step 1, getting the objective knowledge to have a systematic and objective method to deploy your capital using your method. And ours is technical, using those other concepts. In the allotted time, I wish I could show you new charts, but I have this offer. Well, I don't want to take you away from the other folks here, but every Wednesday, Master Trader on YouTube, it's called Master Trader Live, and we cover one subject like this, but we save at least 15 minutes to apply what you've just learned in real time, and we scan and look for setups. Second thing that I'm going to mention in terms of that, and let me move on, if time's getting small, is our objective information, you're correct, is the past. And our batting average is 80 to 85, so you'll never hear me say we're 100%. Of course, we take stop losses, and they're all the P&L is in our closed spreadsheet. But our live green trading room is where we walk the talk moving forward, right? So when a live trading room is going forward, I'm not showing you slides of the past. So go to mastertrader.com. It's only $7 to spend an entire week with us, and you will watch us walk the talk, looking for these patterns and others, and trading together. Pull back here. I got a nice uptrend, 20 above 50, above 200. I got a 1, 2, 3, 4. Just a no-brainer entry. No-brainer. This one, sloppy, big move here. But look, even with this big move, there's nothing that I really feel comfortable with in terms of my patterns. This is a pseudo 1, 2, 3, but it's far from the 20. I would never take that one, even though it did go higher. Here I have a little downside shakeout. Here I have a closing breakout. Here I have a 1, 2, 3, 4, just like I showed you a couple of examples already in this short amount of time. That's a no-brainer entry. Buy the 1, 2, 3, 4, stop near the low, manage in between. Could I get stopped out 10 minutes after I enter the trade, Carolyn? Absolutely. We've already talked about that's what stop losses are for. Everything we do applies to the downside. All three of my moving averages are pointing down. This is a rally to resistance. This green bar actually looked like it wanted to keep plowing higher. This is what we call a 180 reversal. So here is my bearish wide range bar. And now that is a bear 1, 2, 3. Now I have one more inside bar that trades over the prior bar's high. So I have a bear 1, 2, 3, 4. Do I have a price void? Answer, yes. Price void is all the way to this prior low. It exceeded it. And then we're just in trail mode. And there's a description, a bear 1, 2, 3 continuation after a sell setup at the 20. Downtrend, look at these flat MAs. Now they're starting to roll because of the data, drags them lower. So where can I get on board here? Aha, we call this a TELL, a TELL. Why? Because this was its attempt to move higher, and it closed with a minor topping tail. Now I have a wider range. Not the little Johnny wouldn't say, oh, well, that's not as big as this green one, Dan. And my response would be, you're right. You're right. So let's throw this into the category. It's bigger, but it's not that big. But it's a closing breakdown in a downtrend after an attempt to move higher that failed. Nobody can argue with that fact. Now I have an inside bar. Look to the left. There's absolutely no support here to stop a move lower. And that's a no-brainer setup. I'll keep repeating it. Does that mean I won't get stopped out? Of course it doesn't. My stop's over this prior wide range bar. Once the trade is comfortably working, I go into trail mode. Look at my moving averages here. Look, so I can just look at these moving averages. This was a big move up, big move down. I put a box around here to show you that its attempt to move higher is failing. Here's my closing breakdown. There's my inside bar, nothing to the left, no brainer. You see, I promised you in 45 minutes that I'm going to teach you the strategy. I'm going to show you no-brainer ones, and then it's seasoning after that. We use TC2000 as our scanning tool, and subscribers of ours, Greg creates all these scans. We give them to you for free. You know, some people like to come on here, oh, I'm going to sell you my proprietary indicators, $5,000, and then they're going to want to sell you their optimized ones because they keep them current. And, you know, you'll never hear us using the word proprietary on anything we do. It's objective price action. We don't hide anything. That's great. Our courses give you that information on trading stocks and options. And from that point forward, it's seasoning. I'm a private pilot. I only got a couple hundred flight hours. So I do not have seasoning. My commercial buddies have 40,000 hours. I've been trading full-time 30 years. I have at least 30,000 trades under my belt, at least. So I just have undeniable confidence when I see a pattern that I've seen 1,000 times. Like, have you seen the Halloween Part 88 movie? It's just my silly analogy. You're like, yeah, you know, it's 1 in the morning. The music's playing. The girl's going in the kitchen at night to you know, try to get a beer. And guess what? What are the odds that she's going to get her throat slashed? Pretty high, because I've seen the first 87 movies. The odds of this going lower is just astronomically high. Doesn't mean I won't get stopped out. It means I have a conviction. I have a belief. I'm going to calculate my position size. I'm going to enter the trade, and I'm going to manage in between. There's nothing else you can do. This is just to show you that patterns work on intraday time frames. This is a 15-minute chart. I had a morning gap down. There's my wide range bar. There's my inside bar. You could have bought over the high of the day for a day trade. Guess what? It didn't trigger. No problem. Didn't trigger. This one did trigger. There's my trade. This one gapped up the next day, inside bar. That one did trigger. Head and shoulders top, actually kind of with 2 heads, right? But I don't care about the name. I care about price action. It's a bounce and a downtrend, and the 2 heads were attempts to move higher, which failed. Look at this bar. Folks, we've just been over this. And so I hope you're getting excited about the ease of learning this pattern and the power that it can have. Wide range bar. I got 2 inside bars. I got a price void. Short it or buy puts if they're liquid. Stop over the WRB, manage in between. Rinse, repeat. Bullish gap over a red bar. Would I buy this opening print? No. There's no pattern. There's no price void. There's no, you know, it's gap into resistance. Now it's a closing breakout. Would I buy over the high of this? No, it's run too much for me. It's run from whatever, 75 to 93. What about now, Dan, that you have a 1, 2, 3, 4 that stay in the upper 50% of this with a price void? Yep, now I'm interested. Now I'm interested. Buy over the high. In this case, I'd put the stop under the bottoming tail. That's just showing you multiple time frames. Look, same but different. Look, I mean, look at this beautiful setup. Look at the moving averages. What do these tails tell everybody? I've already answered it in other examples, but what do those tails communicate? What is the message of that? I'll tell you. they were attempts to move higher, which they did intraday, right? Visualize a tail at the high or low of the day. So at the high of the day, this did break out. That did break out. And then they closed with a tail, which means the sellers slapped them right back down. So that is communicating a bearish consolidation. Correct. Morale, correct. Selling pressure. That's exactly right. And it's occurring within the context of a bearish pattern. It's also occurring at the flat 20, declining 50. Here's my wide range closing breakdown. I got two bearish inside days. Look to the left, there's no support. I mean, hopefully in this time already, folks, you should be thinking, where do I find these setups? Because I follow what Dan's saying. These are no-brainer trades. And that was my message for you today, to share with you this no-brainer trade in connection with the overall pattern. Remember, you want them from consolidation, not far from the 20. And the same but different. So look, this 1, 2, 3 came from a retest. Here's my void. But you find these right here. Remember I said we use TC 2000? So in Carolyn, if we were in our green room, this would be a perfect example where I'd say, let's go scan for bear 1, 2, 3s right now. Bearish consolidation, converging MAs. I have a big price void, closing breakdown. Look, JHG right here. Negative 1, 2, 3 is how we define bear 1, 2, 3. And this popped up intraday. We found this intraday, but of course you can scan them at the nighttime also. So we use TC. We don't own it, but we'll give you our scans if you're a customer of ours. And then I say, yep, I like it. I type it up. I send it to Telegram for our subscribers. Weekly options trade. I grabbed this was last month's results. So Carolyn, look, this shows our month's results on selling options. The whole month, let's see, 78% success rate. See, but we stop out. We have trade management. These are selling options around turning points. I didn't talk a lot about selling options today, but that's another, $5,000 gain in your account for not buying options or stock, but by selling them at these turning points. We call that an income trade. Another no-brainer. I mean, you all see this. Bear 1, 2, 3, 4. Just a no-brainer. No-brainer. 100% retracement, going sideways, gap reversal, inside bar, nothing to the left. I mean, you see, you can hear it in my voice. I get it. I love this pattern. I love trading. I said 30 years, but I'm not even counting, the 15 years before that when they didn't have internet. And I was reading quotes in the Wall Street Journal, trading off that. This is a no-brainer setup, particularly because of this gap reversal engulfing bar. Here's our holiday specials. We have courses. My partner, Greg Capper, I've been working with him for 25 years. He's like one of the fathers of technical analysis. The best in the industry that I know. So we have option courses, stock courses. We have buying options, selling options. We have bundles at significant discounts. We have this live green trading room I've been telling you about. You get 40% off an annual. We have 3 advisory letters where we're giving you trades that go in the future, not showing you PowerPoint slides about what we did. We give you the open and close trades. We give you Telegram management along the way, open of the trade to the close. Check it out, mastertrader.com/holidays. Email me with any questions, dan@mastertrader.com. I hope I accomplished my goal here today of showing you an amazing high probability setup, trading stocks and options, one of my favorite. And I wish you happy holiday and the best with the rest of the show today.
Thank you, Dan. Fantastic presentation as usual. Thanks for breaking down that pattern and giving us such practical tools for stocks and options. Dan's Black Friday special is now in the chat. Dan, wishing you and your family a blessed holiday season as well. And thank you for sharing your many, many years of experience. We really, really appreciate it. All right, our next presenter is a veteran trader known for his quantitative approach and deep expertise in options. We have here today Price Headley of Big Trends. Price will reveal his proven strategy for trading TSLA options, including 3 price action gap patterns backed by a moving average filter, and why overnight Tesla trades can produce fast, high potential results. So everyone, please welcome Price Headley.
Oh, thank you so much, Anthony. Great to be with you all. And well, I'll get right into it here. I wish you all a very happy Thanksgiving. It's really a pleasure to be with you. And it's been a great year for us here at Big Trends. We just had our 26-year anniversary. And I see a lot of familiar names in here, folks to thank for being a supporter of Big Trends. If you're new, welcome. Bottom line is it's about finding an edge in your trading, right? Anything you do, you got to have a clear, definable trading edge. And so we're going to share with you the edge that we use with Tesla. You know, Tesla, of course, has been a polarizing stock in the sense of Elon Musk tends to bring out a lot of different opinions about people and their belief of if they think he's on the right track or the wrong track. I always say that controversy is actually a great thing as a trader, right? If there was no if everybody had the same exact opinion, there would be no movement in the stock, right? And so the reality is that we take advantage of both the upside and the downside in Tesla, as it's had its share of both. We're going to walk you through these gap patterns and moving averages. Let's get right on into it. And remind you as we get started that the information that I'm sharing with you in this presentation is based on our proprietary research. It's intended for illustrative purposes only and should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards. Let's face it, they also have large potential risk. I'm going to talk to you about how we manage risk on every trade. You've got to limit your risk, and we're looking for bigger reward relative to risk in these Tesla trades. Remember, the past performance of any trading system or method is not necessarily indicative of its future results. So do see our terms of use on our bigtrends.com homepage for more information here. So with that behind us, let's get into it. We like to trade weekly options, and especially weeklies on Tesla. You know, what are weekly options? That means every single Friday there's an options expiration in most all the big name stocks out there. And so the key is we're going to walk you through when we buy this week's options, when we buy next week's options, you know, and we're going to walk you through strategies I've learned in my 36 years of options trading experience. I caught the trading bug while I was a student at Duke University and pretty much just got right into trading right out of college and saw the power of options right away to create great leverage, but also, you know, you can customize options to any different goal you have, whether it's growth, income, protection, you name it. Options are a great vehicle for all those and more. So we'll show you a bunch of success stories, chart examples when this works. Also, if it doesn't, how our stops kick in to manage our risk. And then we call it Tesla Options Trader, not a creative name, but it's what it does. We like to get into Tesla on one afternoon to trade it for the very next trading day only. So we're not day trading, but at the same time, we are quick trading, right? This is like a fast swing trade from one afternoon to the next. Obviously, ideally, we'd like to catch these gaps into the next morning so we can hop in, hop out real quickly with still not ever having a day trade with a strategy. So we'll walk you through how you can start taking advantage of it. Like I said, I've been trading for 36 years, launched bigtrends.com 26 years ago, November of 99, and always have been focused on a systematic approach, right? Everything we do has to be systematic and quantitative. There's no room for subjectivity in your trading, right? What'll happen is if you get your emotions involved, if you think you know better, believe me, I've been there. In my early years of trading, I thought, hey, if I study harder, if I work harder than everybody else, I'll do better in trading, right? I can dig in deeper. No, you can dig yourself a deeper hole. That's what you can do. You don't want to get dug into anything. You want to be maximum flexibility, maximum speed of changing your mind, changing your opinion, changing with the market, with, in this case, with Tesla, right? So the key is that we can have any belief you want about where Tesla's headed long-term. We're trading it from one afternoon to the next trading day, right? That's all we're interested in, is continue to execute this pattern. Also, I don't want you, I personally never want to get too high or too low, not just emotionally, but financially into any Tesla options trade I do, right? So I'm going to be really consistent and encourage some new subscribers coming in. We've got a super great Thanksgiving Black Friday special for you to get started at the end of my presentation. But the bottom line is that, look, it's about start small and build your confidence before you worry about building your portfolio. You got to build your belief in what you're doing, right? So let me show you why I believe in what we're doing on our test options approach and walk you through it here. So let's show you one that we actually called on the downside. Okay, so everybody always thinks, hey, it's been a bull run since the tariff lows in early April. You know, it's probably going to be looking at a lot of call trades. Sure, we've had a lot of call trades, but guess what? Tesla's stock changed like the market back here in this about the second week of November. What we have on this chart is we've got daily candles. So we're just looking on a day-to-day candle basis. Why would we not look at an intraday chart if we're looking at relatively quick trading? Because I want to find the bigger trend, the truer trend. And that's the name bigtrends.com. When I launched it 26 years ago, I'm always looking for those bigger moves, even on a shorter time frame, right? So the goal here is to say, okay, look, that we've got a day-to-day price action that was breaking to the downside, right? These red candles mean that we're closing below where we opened. And of course, we also watch gaps, right? So when we can get a combination of a down gap and a down close, and we've broken the moving average, which you see the moving average filters in light blue, you know, we've been holding to the upside into early November. And then you can see as things broke, you can see what happened here. That basically Tesla broke this moving average filter, closed below it right here. Then it tested back up, but you see it closes underneath that moving average, still hovering underneath the moving average, right? That is a change in trend where it had been holding at a support on the left side there. We were only considering bullish trades on the left side of the chart, but as it breaks underneath the moving average, we're only considering puts, right? So that changes our entire view of Tesla in the short term over just a matter of a few days of breakage and testing and basically showing that the moving average is holding now as resistance rather than previous support, right? So if you don't know a moving average, of course, it's just an average of recent price action on a close to close basis over whether you're looking at the last 10 closes, 20 closes, 200 closes. You can look at any time frame you want. We have one customized time frame we like that's kind of a sweet spot of what we think is a lot of different key time frames. But the idea is that, okay, we aren't getting into a put until this arrow here, right? At the end of the day on November 13th, you know, so you can see here, at that point, the stock has broken hard to the downside on that day, and it is also gapped. You can see the gap differential from the prior day's close, which what you can see was that little hash mark close on that red candle close there, to the next day's open right here. That's a gap down and then a continuation of momentum on the downside, right? So our play is to bet that Tesla's got even more downside to come into the next trading morning or next trading day. So we want to get into those trades in the last half hour when we get a daily chart signal. So there's a couple of benefits to this. One is that we make sure that the daily candle is indeed confirming what's happening by the end of the day, right? You don't want to overreact early in the day and then it fakes you out and does something totally different by the end of the session, right? So we say, okay, we get the confirmation that's happening by about 3:30 p.m. Wall Street time, about a half hour to go before the options market and stock closes. And so we're buying those puts. We bought the 392.5 strike puts. Okay, now which strike price, I should say which expiration did we buy? Now, usually, this was on a Thursday. Usually on a Thursday, we would go out to the next Friday's expiration. But in this case, we saw something that we liked that we said, you know what, this is such a powerful pattern based on our history. We're actually going to buy these short-term options that are going to expire the next day. We don't usually do that. This was a little bit exceptional here. We would usually say be a little more conservative on a Thursday or Friday, buy the next Friday's expiration. But we said, look, this really is a quite unique pattern that really has some downside gap potential. That's indeed what happened, right? It gapped down that next trading morning. So right off of that next morning's open down here, you can see that open is happening down around 387 or so. We've got a 392.5 put, right? So right off of the open, we had just closed the prior day, by the way, about what, 402, 403. We gapped down to 387. So the stock is gapping down some 15 points, right? 15-point drop on about a $400 stock. That's about a 4% move down in Tesla. Look at what it resulted in our option. Our option, when we rang the register the next morning right off of the open, was up 341%. This is an outlier, folks. We are not expecting these types of gains usually. This was definitely much better than expected. We're usually targeting doubles, okay? So we've got a double target. If it gaps past that, of course, we take it. Now, you can see this is another advantage of also taking it quickly when you get a double or more, because by the end of the day, it did reverse back up. You see the stock by the end of the day closed up here at 396. So guess what would have happened? If you were passive and you had a 392.5 put and you held it to the end of that trading day, you would have lost what you put into the trade, 204 bucks a contract, right? These are volatile, right? I mean, usually that's why we won't cut them this close to the expiration, but we really felt like we weren't going to hold it all day with that particular setup. We were wanting to get out in that first hour of the trading day, regardless, on an expiration. We usually wouldn't hold it into an expiration day, but that was a rarity, and we got paid for it well, right? 341%. That was a $2,700 plus profit in basically less than an hour of market time held, right? Held in the last hour of the prior trading day, out right off of the open the next trading morning, right? So that's your very limited time window where you're really about taking advantage of the power of this setup of both the gap and the strong close down. And we get that kind of strength on the downside. It's usually got even more pressure to come. So $2 in, $204 a contract in, $900 a piece out, right? So if we were buying $1,000 worth, that would actually only get us 4 contracts. It would just miss getting us 5 contracts. 5 would have cost $1,020. So we only got 4 contracts in for 816 bucks out of 4 contracts for 3,600 bucks total, right? What's your commission cost? It's no more than $1 per side or $2 round trip per contract. So no more than $8 on a $4 contracts in, 4 contracts out trade like this. So you keep the vast majority of what you earn. Okay, so the goal of this is to say that you really want to focus on how you can leverage this type of an opportunity here. The goal always is to be smart, be sensible, and not be overreactive. Okay, not if you had a losing trade last time, doesn't mean you shouldn't fire in the next one. If you had a winning trade, doesn't mean you should load up even more on the next one. You want to just be steady in your capital allocation. So the average holding period here is 1 full trading day or less, but never having a day trade. So I don't know if you saw recently they're proposing taking the day trading requirement down for those who are active day traders in options. If you do 4 day trades in a 5 trading day span, they mark your account as a pattern day trader. That means you got to have 25 grand in or more, right? Now they're talking about taking that pattern day trader rule down to just 2 grand, a minimum account size. So when that happens, if it happens, you're going to see day trading of options, I think, explode. But we don't, in the meantime, don't want to cause a problem for smaller account traders. This is fine for small, medium, and large accounts. So it can work well for any of those because there's no day trades. So point being that, okay, we're going to show you, that was 1 price action pattern. We'll show you 3 different price action patterns tied to gaps, tied to the daily chart patterns, and tied to getting on the right side of the bigger trend, but then catching the momentum on a short-term basis. By the way, we're not doing this strategy every single trading day. We are picking our spots. You've got to be careful about trying to be a hero every single day. Part of being a great trader is being a great observer of price action, of trends, of where things are setting up on a day-to-day basis. So which options we trade, we're going to buy a call for bullish. In the last example, we bought a put when we were bearish, betting on the downside. And usually we would buy the same week expiration if we're on a Monday, Tuesday, or a Wednesday. Now today, of course, we've got we wouldn't buy this Friday's expiration because, of course, we've got the holiday tomorrow, right? So basically, if you bought today, it's almost like you're buying right in front of the expiration day on Friday. And remember, Friday, with the markets closed tomorrow, Friday, the markets are closing early at 1 p.m. Eastern. It's usually the lightest volume traded day of the year, the day after Thanksgiving, Black Friday, right? So we got to keep all those things in mind. So when you get signed up for our special, you may or may not see a trade this afternoon, right? We may say it's not worth the risk. If we did take a trade this afternoon, it would likely be into next Friday's first week of December Friday expiration. Okay, so keep that in mind. But on a Thursday or Friday, we usually go out to the next Friday. So the point being that, you know, we want to find these signals once per day. The great thing about this is it saves you a lot of time in screen watching. It saves us a lot of time too. You know, we know that we can run this system, run it right before 3:30 and say, okay, do we have a signal? If we don't have a signal, no email sent, no text alert sent. If we have a signal, we send a real-time email and text alert to all Test Options Trader subscribers right at 3:30 p.m. Eastern time, give or take a minute or two. Okay, so the idea being that you got at least a half hour to get into a trade. It's not platform dependent. You can use any options trading platform that you want, that you can execute your trades on, right? So basically, and it's the simplest, if you're just setting up options accounts, simplest execution level, just buying a call or buying a put. and we'll exit that the next trading day. So the idea is that, okay, just one action point per day keeps your life really simple. This eliminates a lot of the market noise, still allows us to take advantage of the power of weekly options, the leverage that weekly options can provide. Obviously, it was really exceptional on that last put example, but typically looking for 50% stops and 100% price targets. Okay, so we'll show you more examples of both here, but plenty of trading opportunity too and profit potential. So look at the average contract entry price going back to the beginning of 2023. So we've got almost now 3 years of look back, and you see our average contract entry price was 5.73. So these are not cheapies, right? These are the last one I showed you, $204. That was a relatively cheap option, right? Because it was a next day expiration. Usually would not trade them that close. We just really like that pattern, and so we said, okay, this is worth that little bit of extra contract risk, cutting it closer to the expiration. Usually we're going to go out and hold it and be out before the expiration day. So the idea is that, okay, $573 to enter each option contract controlling each Tesla 100 shares of stock. And, as you know, Tesla's been volatile, as we said, the markets have been volatile as well, right? But the idea is that when you look at Tesla right now, if you're buying 100 shares of TSLA, it's 420 bucks-ish, right? It costs you 42 grand. This is controlling that 42 grand worth of stock for just under 600 bucks, right? For about 1.5% of the cost of the stock. So that's where the leverage comes in. Now we'll always get out the next trading day no later than 3:30 p.m. Eastern if we haven't gotten our 100% or more profit target, and if we haven't gotten our 100% profit target, our 50% stop loss, right? We're looking for a risk reward ratio where we're getting twice the reward relative to our risk on average over time. Obviously, when you get a 300+% winner like the put we just had, then yeah, it can boost your size of winner even bigger. But the idea is that consider that an outlier, and consider that we're generally going to be targeting doubles on the upside, 50% stops on the downside. When you take away the individual examples and look at all the trades we called out for subscribers, going back to the beginning of 2023 off of this Tesla option trader system, it says, look, if you were trading a $25,000 model portfolio and allocating $5,000 a trade, it would have taken your initial 25,000 starter stake up to over 134 grand, a gross profit over $109,000 in less than 3 years, right? And so you see here that can grow quite dramatically. But remember, when you look backwards, past performance never guarantees future results. Future results are going to vary. They could be better or worse than this in the next several years, right? The idea is that there's going to be times where it's really working even better, times where it's not working as well, right? The key to your long-term success in short-term trading is being consistent in your capital allocation and ultimately in your execution, being able to take each trade, enter and exit without any emotion, right? If you're feeling too emotional on your trades, you're taking more risks than you're comfortable with, and cut back your risk level, right? You've got to get your risk down to where you know that your first objective is not how much money you can make. Your first objective is, can you follow the system over time consistently? The more consistent you are with your system following, the more consistent you'll be as a trader. And I think the more confident you become as a trader. And that's using a $5,000 amount per trade that never grew in the amount invested per trade. We keep the amount static, right? So if you're investing less, you can divide these numbers down, get a rough comparison. It won't be exact, it'll be a rough estimate of what you could do depending on your capital allocation. Just reminding yourself always that past performance never guarantees future results. Skip back into setups. Remember, we're looking for not one pattern, but 3 different price action patterns tied to these gaps, tied to these candlestick momentum patterns. 2 of these patterns are actually bullish. The one I showed you earlier is our one bearish pattern. We get that kind of power move on the downside. If we don't get one of those 3 patterns, then we don't trade, right? So we're not gonna trade every day. We're gonna pick our spots, and we would expect somewhere in the neighborhood of maybe an average of about 7 trades a month with the Tesla options trader system. There's about 21 trading days a month. It's about 1/3 of the time we expect to get a trade. Okay, so we're using that simple moving average filter to make sure that we're on the right side of the bigger trend in Tesla, right? That's helped us to avoid a lot of fake outs. Then we're looking at the day-to-day price action momentum of the individual candles, tying it in with the gaps or lack of gaps, and then we're confirming all that stuff through. And actually bearish trades for us require even a little bit more confirmation, because as you know, bullish trades, the market's generally more bullish, Tesla's generally more bullish than bearish. but when you catch the bear once right, like we showed you before, they can fall really fast and can give you, as I often say, stock can take the escalator up, but often takes the elevator down, right? That move down faster than they move up usually. But there's going to be examples here where you see some really fast up moves as well, right? So when you see the setup of this pattern before I even mark it up, what do you see? You see that the moving average says, guess what? The price action is above that blue moving average. I cannot take any of those bearish, what look like hard red candles down, right? That would be fighting the bigger trend. And you see, it would have been a mistake in every one of those examples, the stock gapped up the next morning, right? So on those big 3 red candles on the left side of the chart, right? So don't get sucked into just a one day, what looks like a momentum to the downside. You've got to factor in that momentum against a longer term trend, intermediate term trend here, which is up. And this was back in late September, September 30th, actually, we said, look, we liked this pattern here where, okay, if it doesn't open higher, then basically you want to see that it's had what I would call a flush. What does a flush mean? It means prior day's low. A lot of traders will set their stops under that prior day's low and get flushed, get faked out, get frustrated, right? A lot of F's there. But bottom line is that what you're looking at here is that those flushes, we don't want to be one getting flushed, right? We want to be one taking advantage of that and saying when the stock flushes out others and then comes ripping back and closes up near the highs of the day, that's an important flush and fake out that says that it's actually likely to now break out the other direction the next trading day. So we want to be in late that day after those flushes have happened. This is another unique pattern, right? So you say, well, gee, it didn't get that initial gap up, but it actually flushed some people. Then it came back by the end of the day. So we recommended to Tesla Options Trader subscribers to buy into these 452.5 strike calls. The stock is just about what, 441, 442. It's almost what, 10 points or so out of the money. And we still paid $755 a contract, right? You got to multiply times 100 because each option contract controls 100 shares. So when they're quoted at 7.55, that means you pay $755 on average getting into the trade. You say, wow, it's 10 points out of the money and I pay $755. That seems like a lot. But look what the stock does the next day. On October 1st, it rips on up here, gets up over just over 460 intraday. And you say, well, how can I, at 460, we know intrinsically you got a right to buy at 452.5. At 460, it's worth $7.50. How am I able to sell it out for double that at 15.10? Because we own the options that are still have, in this case, a whole nother couple of days to go before the expiration. So there's still meaningful time value that's still priced into those Tesla options with a couple days left as we cash it out on the 1st. So we get our target. Anytime we get the double target intraday, you take the money and run. You do not try to hold for more. If you get a gap past that, great. But the bottom line is that, you know, you really want to be focused on how to be sensible with your leverage, but also take advantage of knowing when to run. It's like, you know, you get a big winning hand, don't keep staying at the table all day, you take the money and run at a certain point, right? This is when we take the money and run on a trade. In comparison, remember, we're using a 50% price stop. So if it tagged below our threshold level, yes, we could have gotten stopped out. But in this case, this is why you don't use a tighter stop. Because you see what happens. The next morning, it actually opened just a hair down. You can see intraday on that V there, it traded down maybe about 2 or 3 points from where it closed the prior day. If you're using a 10, 15, 20% price stop on an option like Tesla, you're setting yourself up to get whipsawed and faked out on a lot of stop outs. So my view is I'd rather trade less contracts and give yourself a little more room to move, a little more room to not get faked out. Still have an uncle point at the 50% stop loss to say, okay, if you go that far, it's not the right kind of pattern. It's not the right kind of winning setup. But you don't want to get whipsawed out down 10 or 20% and then it rips on up to 100% gain. That's double frustrating and double faked out. And when that happens, right, if you're sitting on a loss and it turned into a win. And thanks, Randall. I believe, yes, they are recording all these. So they'll, I believe, send an archive out later on that. Thanks to Anthony and the team for doing that. But bottom line here is that, look, here's obviously a monster move that Tesla was having back in September. We actually caught the couple of those big white candles up on the left side, but this is actually the follow through after that. You see, it went into, I'll go into those other ones too, but it went into a kind of a slower move throughout the week, but it had a nice little pattern here where it went ahead and finished on up. And you can see here, we wanted to get into these week 4 calls I was on a Friday, so we're buying into those next Friday expiration options, right? And we're buying those 437.5 calls when the stock's about 423. So it's about 14 points out of the money, about what, 4% out of the money. We're buying those calls for $720 to control each 100 shares. So if you put in $1,000, there'll be a number of times where you might only get one contract. You might only put in one contract if it's above $5 per options contract, right? Because I mean, if it's $5.50, $6, any of those, you only get one contract on 1,000 shares. Two contracts should push you over your maximum capital. Never exceed your maximum capital risk you're willing to take. So we'll be a little bit below our optimal $1,000 invested, only getting $720 in, and yet still, as it pops up the next day, it not only gaps up, but it trades up to about 445. Remember, we got a 437.5 call. That's on a Monday. We're cashing out, so it's still got four more days and change of time, and so we're able to ring the register at 1440 intraday. And you see by the end of the day, it flips back down, right? So this is why we like to take the bird in the hand of the double and not hold for more, because sometimes you see those doubles evaporate same later that day or the next day or two, right? So take the bird in the hand of the double and move on. $720 booked in profit, bought one afternoon, sold the next trading day. Now I mentioned about taking advantage of these early mid-September moves up. What's happening here was that we actually had bought that day before too. I want to talk about that one too, but basically we bought in on this Friday into the end of the day, and a lot of people would say, are you crazy buying right into a weekend, right into theoretical, are you gonna have time erosion buying the next Friday's options? We bought the 377.5 calls and the stock was about 367.5, so 10 points out of the money. And you see we paid $584. Again, only gets one contract on $1,000 maximum cap, $584 invested. It was this was actually on the 11th, and this was heading into the 12th, so that it rallied big. That was a Thursday into a Friday. Actually, I'll show you the Friday one too. Because the Friday one, it came out later that Elon Musk was buying almost $1 billion worth of Tesla stock as part of what was driving that move. And that news came out and caused another spike up over the weekend that we caught into the Monday morning gap up on news that Elon was insider buying. Insiders will sell for a lot of reasons. I'm not a big fan of following insider selling activity as a bearish indicator, but insiders usually buy for one reason and one reason only. They expect the stock to go up, right? That's why they're willing to raise their commitment of insider ownership, right? So we bought there on Thursday, sold it out on Friday at the double target, took down a $586 profit before the $2 commission, so on a one contract in and out, right? So, but the pattern was, of course, it was only bullish, as we stayed above that moving average, but then you see the power surge where really it closed almost right at the high on a super high range candle here. Big, wider volatility showing a lot of power in it. They caught the power move the next day as well. Now, this one you can see here is interesting because you see we're dancing around our moving average, right? If we're below it, there's no way we could take a trade here or here. We don't have our super bearish pattern. We're just below. So you just say, okay, those are just basically turned off. And that the only time where we got the signals, it then came back, had the little fake out, and then closed back above it right into the end of the day right there. So now stock's about 338. We're buying a 342.5 strike call. We paid $595. Again, $595 invested on one contract with $1,000 cap. As you see, after it got that nice little fake out intraday and closed back up above the moving average, then it got the gap up the next day back towards those short-term highs. And of course, that short-term high was up, around 355. We're ringing the register, 356. We're ringing the register there when it doubles up from 590 to 1190, $595 made per contract. As I showed you one put example, let's look at another put example. And you can see this one goes back a little further, but the principles are still the same, right? You see, as you remember, one close doesn't usually make a trend. So I'm not going to be that interested in taking a trade back here when it's been dancing around the moving average, right? I'm looking for some confirmation that we've been either above or below the moving average for more than one close. But that second really strong close down, a lot of people would say, man, you missed it. That was a big down move. You could have had that profit. I'm saying, look, I'm just trying to trade for the higher consistency move. This was back when the stock was lower at 162. We bought the near the money 162.5 puts for 380. And then we rang the register on those two contracts in, two contracts back out at the double target and then took down 101%. The next time it gapped down, we get in late that day on the gap down. Now the stock's near 150 or 151 even, and we're buying further out of the money 143 puts. So now the volatility started to increase as people are getting more aware of Tesla's recent decline. We paid $395 a contract. So that gets you 2 contracts in for $790. We don't get our double. We don't get our stop. So we just take it out the next afternoon at 3:30, up $100 a contract, a couple of $100 made on that trade, 25% gainer. No big one for about a 4-point move down in our favor. So that happens where it's just a little too slow and you get just a small gain, small loss, you know. So not all trades are going to hit 100%. Here's another time stop example where this one we actually said, okay, while it does look like it's reversing back up, it is actually a gap down and a close lower. So it actually checks the boxes for still net negative momentum on these Tesla puts. When the stock's about 376, we're buying the 367.5 puts. You see, it's a common pattern to go a couple percent out of the money. We paid a little more, $965 a contract. That was back in February. The stock was rolling over, and you can see it did get popped down the next day, but didn't get popped down enough, right? It popped down almost 10 points, and yet we still only made like $410 for that one contract, 42% gained as our time stop kicked in that next afternoon at 3:30. Notice intraday, it was slightly against us at one point by some 3 or 4 points, right? So the point is that not having a little bit more expensive option in this case gave us some extra cushion to say, okay, we're expecting that we can take that 965 and turn it into a $965 profit if it doubles. It doesn't, but our stop therefore is a little wider when we've got a higher dollar option here. So at least dollars wise, stop, 50% stop is the same 50%, but the idea being that, okay, if it goes down in this case about $480, we're going to get stopped out. It doesn't. It goes down maybe a few $100 at worst, and we are able to hang around for the $410 profit. So again, some examples are going to be, not hitting the double or not hitting the price stop. That's normal. We've been averaging about 7 new trades with this strategy per month. And so over the course of a year, we expect to generate about 80 to 85 trades. And so what's nice is now this one looks back a little over a year ago now. This is the pre and post election reaction. Now it's rare that we get this kind of back to back opportunity here, but we did get a bunch of them here. We got one right in front of the election. We told subscribers this was a higher risk trade right in front of the election. When it was announced that Trump had won that night, into the next morning, stock gaps way up and keeps going higher. We soon off of the gap up on the election, we made 397%. That's another outlier. Again, those are nice when you get them. We tell subscribers, don't expect that. Just expect doubles. When you get the outliers, just consider that's a windfall. But then we get the positive close with the gap up. That's setting up for another buy. The afternoon after the election, we get in the next day, get back out at the double. So you can see how this just keeps evolving. And guess what? It keeps closing stronger. Keep showing gap ups and close ups, and that's just a power trend up and away. And you can see another double, and then this final one actually gapped up even more than expected for a 248% gain on the 4th trade in that week, right? So, and what's great about this is you say, well, gee, look at those downside. We had like 6 days in a row down. Put a big X through it, 'cause you're above the moving average. What I remind people too is that if you were making little dribs and drabs on puts, but say you were doing that effectively while it's going through some consolidation and an uptrend, what that'll also kind of do is it'll kind of steer your mindset wrong about the bigger trend, the bigger opportunity is to the upside. So if you've been making money on puts and then it starts to snap up and you go, oh, well, that's probably just a one-day wonder. It's been down for 6 days. I'm not buying that. And then you miss a 397% win the next morning, right? And then you're still kind of recovering from, should I be buying into this, or is this just an overdone thing? And then your mindset's all messed up, right? Keeping your mindset right, keeping your mindset focused on what is your edge, and then not getting hung up on the little trends, the small fish, waiting for the big fish, is going to be the key. Now, here's one that didn't work, and this will happen. This is one that we thought had a nice little reversal pattern above the moving average, thought it could reverse. So we're buying in here late that day. Stock's about 248. We're buying the at the money 247.5 calls, 570. That gets one contract for $570. Next day it gaps down, keeps going down, hits us out at about 51% loss. We lose $290 on that contract. right? It can happen, it will happen, right? So the idea of this is that just know that you're going to get stops, but the key is that you can win bigger and lose smaller. That's really a big secret of our success in this game is to say, yeah, we want to just keep on rinsing and repeating smaller losses and bigger gains as the objective. Another trade that gap past our target for a winner that was larger than normal. I mentioned how it came out that Elon had bought almost $1 billion worth of his Tesla company here. You can see that was on a Friday. We just cashed in on that other double I showed you earlier. And then we went back in on that Friday afternoon, right before the weekend is about to hit. A lot of people think, why do I want to buy right in front of a weekend? Well, this is two powerful candles up, folks. You can see another gap up, another strong finish higher. We're saying, yeah, we like it. It's about 395. We buy about 10 points on the money by the 405 calls into the next Friday's expiration, right? This is the monthly options, the September 19th expiration. We bought it a week before on the 12th. Again, we paid $725, so it gets us one contract for $725. We're targeting $1450, of course, but then the news comes out that Elon's bought this all the stock and into the weekend, and so guess what? That leads to a rush of other investors and traders to buy the stock off the Monday open. So it closed today, Friday near 395, opens around 423, up some 25 plus points. We get out not at 1450, but at 2450, an extra $1,000 a contract better than what we expected to get, and thus more than a triple, 237% gain as we ring the register right off of the open. You see that day ends up being kind of choppy and even a bit lower intraday. So we're glad to have booked it, take the money and run. $1,725 gain on just one contract. That's an outlier, but remember, they can happen. So what have I got for you? I've got a super special. Traders Corner's been so good to me, and I want to share in the Thanksgiving love and get you a special Black Friday offer here as well. We can get these real-time Tesla options trader alerts. You get them through real-time email, and then we'll also, when you get signed up, we'll give you information on how you can get set up to get them to text on your smartphone. I'm going to give you a chance to just try it for the next 3 months, because it says we're in a really good spot here as we push into the end of the year and into the optimism that often accompanies a new year. You've usually got a really good trading window here for the markets, and not just Tesla, but we think Tesla is really a great one to trade in great markets. And so we're giving you a 3-month special trial offer. I'm not a big believer in short-term trials or free trials. You're going to want to have a little skin in the game to say that you're committed to following this through and starting to turn your trading into a higher growth engine for your portfolio here. And this can be an important component of that. Now, what we're going to give you is not just trades. We're going to teach you the system when you get signed up. So you get our settings and rule sheet, just like a longer term subscriber would. You get weekly video training over the next 3 months. You get access to me and my analyst team if you've got any questions as you're learning the system. You don't have to become in and out, know every nuance of it, but a lot of traders do want to know that, know what they're trading. But even if you don't, we're going to call out the trades for you so you don't have to lift a finger. We'll save you a ton of time and give you really highly focused entries and exits. And we never leave subscribers hanging. We always tell you when to get out, win, lose, or draw. So if you're buying this off of my website, it'd be $297 a month times 3 months on this offer here would be an $891 investment you made to have 3 months of access to the Tesla options trader. We're slashing it today though for you with those bonus educational resources, with learning the system from $891, take more than $700 off, take it down to only $177. Why did I do this? Well, because I thought, well, you know what, you're getting 90 days of access. That gets your average cost per day down to less than $2 a day, less than half a cup of coffee if you're a Starbucks or other coffee drinker like I am. Bottom line is that you look at this and say, hey, you know, you can make a lot more than this on just one trade. I've showed you examples where you can make thousands on a single trade on Tesla, right? There's going to be winners, there's going to be losers, right? You've got to know that going in, you're going to be able to say, okay, if I start small, even if you're just trading one contract at a time, that you could at least know that you're managing your risk and getting the potential for much bigger upside compared to your risk, right? So the goal is to, I would say, even as a new subscriber, start small and then let the system prove it to you. Don't just take my word for it. And so what we did is we set up this special page for you, bigtrends.com/summit. We took it down from $891 to only $177 for this very limited Black Friday time here. So let me just show you something on the page, show you how you can get signed up there. Go to bigtrends.com/summit. And you look at this and say, okay, check this out. pull that page up. Here it is. We've already taken all discounts. Okay, so no other discounts can be applied. We took it from 891 bucks down to 177. You don't have to do anything else except get your credit card information in on that order page. Or if you're like me and you don't like to do a lot of typing, you know, whether you're putting your credit card information page in or going through PayPal and the orange button below, just review the terms and conditions. They're hyperlinked there, how we've done business now 26 years and counting. Check off on that as you get signed up, and then you can click through the PayPal and it'll just get you signed into your PayPal, choose your money source. A few clicks later, you just locked in the next 90 days of access. Basically over 20 trades that we expect to get out to you in the next 90 days for just 177 bucks, right? And like I showed you, one trade can potentially make you, a double can make you anywhere from 600 bucks to potentially 1,000 bucks plus off of one trade that doubles or more, right? On just one contract. And we know that one contract could lose 50%, right? So that's also something you got to factor in. But the goal is you rinse and repeat this over the next 3 months. I think you're going to want to come back in and be willing to pay a lot more for our test options trader for a longer term subscription, but I'll still give you a great special as an existing subscriber 90 days from now. Know that we are regularly taking advantage of these opportunities and want to make sure that our existing subscribers see massive value, right? So remember, this is such a low price that I can't keep it out there for very long. So I'm just going to make it available for the first 25 folks who take advantage of this special Thanksgiving opportunity here. And remember, past performance never guarantees future results. We're looking at past performance on this slide. 25,000 grew more than 100K in the past just under 3 years, assuming you put in 5,000 bucks a trade. If you divide it down in half, you get about cut those in half. It's not exact, but because sometimes you get a little bit more or less of your contracts in with a lower dollar amount, usually a little bit less. So I might even scale it back a little bit, but hey, it's still dramatic potential with this. Frequently asked questions we get real quick, some in my last few minutes. Do we teach this to you, Maurice? Yeah, you learn this. So you don't have to learn it. I know there's a lot of traders who don't want to do the work, who just want to collect the trades and collect the opportunities as we go. But yeah, we do teach it to you so you can learn it yourself and learn how to do it yourself over time as you wish. So we just buy calls or just buy puts. We don't do any option selling, no spread trading. We send out the real-time trades through both email, and the WhatsApp technology gets it to your smartphone as a text message. We send them out to you right around 3:30 p.m. Eastern. So you got about a half hour to go before the 4 o'clock close. That gets you in one day, earliest you get out to the next. So that way you never have a day trade with this strategy. We'll always have you out by the next trading day at 3:30, no matter what, even if we haven't gotten a profit target or a stop loss. We call that a time stop. We'll average about 7 trades a month, and there will be no day trades. You don't have to sweat day trades here. So you can be a small account and take advantage of the system without ever worrying about a single day trade. Recommended average entry price of a Tesla options trader trade over the past almost 3 years is just under 600 bucks per contract, 573 bucks a contract averaged. So even if you're just getting one contract at a time, you get the benefits over a longer series of Tesla options trades. And we're going to help teach you the system through weekly video training, our settings and rule sheet. Plus I give you a bonus high definition video strategy session where I walk you through how to interpret each and every Tesla option signal that we get, the 3 different patterns in depth. And then you get a dedicated email to reach me and my research team anytime you've got a question. So remember just what one trade could accomplish. Obviously, we had this exceptional one here going back a couple of weeks ago where we caught the downside with a very short-term option. Usually I'd say probably cut this gain in half if we trade the next Friday's option, which might be more typical. But we got the outsized return of catching that big, quick, dramatic move down into the next morning, and then we had the profit target. If you put a profit target in at 100% gain and it gaps open at more than 300% gain, you're not going to get 100% gain. You're going to get the 300% gain on the gap down, right? So you don't have to sweat that. You're working your double target. Sometimes you get the windfall gap past that. Whatever that is, anything past a double, you say, thank you very much, Mr. Market. I will take the windfall. Appreciate that extra generosity, and I'm back to the sidelines with that profit in hand, back in the safety of cash. I'm out of time, so yeah, you can do as many trades as you want, Maurice. You don't have to do just 3 trades a week. We would have no more than 5 trades a week. Okay, 1 trade every trading day, but you'll never hold more than 1 trade open at a time because we're getting out of one. We're getting you into the other. I'm going to hand it back over to Anthony. I'm out of time. He can go in and introduce our next great presenter and fellow trader. Do take advantage of it there at bigtrends.com/summit. It's only available for a limited time for the first 25 traders. Thanks for having me, Anthony, and wish you and yours a very happy Thanksgiving.
Thank you, Price. As always, outstanding insights. Thank you for sharing a powerful, structured approach to trading Tesla options. Not just that, all the extra added stuff that you added today because of all your years of experience. We really, really appreciate that. Price's Black Friday special is now in the chat. And Price, wishing you and your family a happy holiday season as well. Thank you so much for being here. We really appreciate you.
Happy Thanksgiving to all. Take care.
Thank you. Our next presenter is high energy, mission focused, and known for his bold, conviction driven trading strategies. We're talking about Matthew Whiz Buckley. Today, he'll show you why Amazon is the only stock you need to own and the discipline framework behind his approach. So let's welcome Whiz.
Awesome. Thanks, Anthony. I appreciate it. You got me loud and clear?
Yeah, we hear you. Thank you.
All right, folks. Good afternoon, good morning, good evening. Depends on where you are on this big blue marble. Happy Thanksgiving Eve here in the United States. Let's go ahead and throttle up and get airborne. Obviously, investing involves risk. I'm not a registered investment advisor, broker dealer. Don't play one on TV. Make sure you talk to somebody smart before you end up putting any real capital at risk. Okay, here we go. No distractions. Make sure you silence that electronic nicotine because I guarantee you, you've never heard what I'm about to tell you. Now, I call the stock we're going to talk about today the Death Star, right? If I was raised in the 80s, everybody's familiar with Star Wars, right? Giant space station that literally was taking over the universe, right? It got blown up a couple times or attacked by a bunch of teenagers in a space Winnebago, but it rebuilt stronger and bigger. And that's the stuff that we're going to talk about today. It takes over everything or it destroys it. Now, real quick, which fighter aircraft would you fly? Random question, right? Well, you're going to find out why in a little bit, why I'm asking you this, but let me give you two choices, right? Would you rather fly this fighter jet into combat? And folks, remember, trading is a form of combat, right? Somebody's going to win. Somebody's going to get their rear end handed to them. Which one do you want to be? Look at that cockpit. That's an F4 Phantom. There's over 300 switches and dials in that cockpit. Aircraft. The pilot would spend a lot of what we call heads down time looking at all this stuff instead of eyeballs out of the cockpit looking for SAM, surface to air missiles, or AAA, anti-aircraft artillery, or MiGs, right? Enemy aircraft. So that's your first choice, right? And a matter of fact, it was so complicated in the aircraft, they actually put another dude in the back seat to work the radar. Or would you rather fly that? Right? Take a look at that cockpit. That's the cockpit of the F-35 Lightning. Two iPads, folks, two flat panel displays. Anybody see any steam gauges in here? Of course you don't. It is the Wonder Woman jet. You can't see this thing on radar. It is absolutely insane. And speaking of Star Wars or Darth Vader, look at that helmet, man. Everything that the pilot looks at is projected on the visor. Hell, if the pilot looks down, they don't see the aircraft, they see through it. They see the ground, they see threats. So obviously, folks, if you were going into combat, you'd love to fly that. Simple, right? Well, I promise by the end of this brief, I'm going to give you an up-to-date intel brief with what's going on currently in the market and this name. The only stock you need to own, and you heard me, only stock, and a good substitute to trade. How's the smart money doing? Why should you even listen to me? Check out the average hedge fund, man, over the past 4 or 5 years. Look at that, 10%, -8, 9%. I'll round up and be generous and give him 10%. 5%? Here's how I did last year, 151%. Hell, the NASDAQ last year was up 38%. S&P 20, the Dow about 10. We absolutely destroyed it. So that's why you should listen to me, right? Who am I? Matthew Buckley, call sign Whiz, former Navy fighter pilot, Top Gun graduate, Operation Southern Watch, Noble Eagle, Enduring Freedom. Taught myself how to trade on active duty. You don't get rich flying fighters for the Navy. And applied everything I was learning as a fighter pilot to my trading, having a strategy, implementing tactics, contingency planning, knowing when to get out of a good or bad situation before it got worse, managing risk. Now you're probably sitting there going, this is a picture of him inverted over Top Gun, and this guy's going to brief me on risk? Yeah, I am. Fighter pilots, options traders want to minimize all known risk. Things are dangerous enough, right? Life's tough. It's even tougher if you're stupid. So, taught myself how to trade, applied everything I was learning as a fighter to my Wall Street, trading. And guess what happened? I was doing so good. I popped up on the radar of one of the largest volatility options trading firms in the country, headquartered right there in the Chicago Board of Trade. That's the CBOT, Chicago Board of Trade. There's those big, beautiful windows. That was our trading firm. Man, I had a blast. I helped build a hedge fund when I was there. I helped build the retail brokerage many of you might have traded with called Options House. And I was the managing director of strategy for a multi-billion-dollar volatility arb firm and the founder of Peak 6 Media, which was the Options News Network. We were the CNBC for options. I jokingly tell people I felt like Valentine in Trading Places, little old lowly retail trader, going to Wall Street and destroying the people. I actually wrote a book about it, COVID Crash, From Panic to Profit. We made $2.5 million in the COVID crash in about 2 weeks as the quote smart money panicked. We pounded it into the dirt. Also wrote another book called From Sea Level to Sea Level, going from the cockpit essentially to the trading pit up there in Chicago. My other passion besides teaching people how to trade options, which I'm going to show you here in a second, is the No Fallen Heroes Foundation. We are a nonprofit dedicated to saving and changing the lives of our nation's veterans and first responders through, you ready? Psychedelic assisted therapy. Did you just see Conor McGregor's post the other day? He just got back from Mexico and sat with the sacraments that I did, and he's a different human being. Psychedelic assisted therapy is taking the veteran community by storm. 5 months ago, I started my own entheogenic church down here in the great state of Florida, where we use these compounds as sacraments. So those are my day jobs. All right, here we go. Let's go ahead and throttle up and get airborne. This might shock you. It might not shock you. You might just go, duh, but let me lay this on you. Wall Street is lying to you. Now, I guarantee you half of you just went, duh, and the other half said, well, what are they lying about? Day one of investing, folks, what was beat into your head? Do not put all your eggs in one basket. You cannot put all your eggs in one basket. You would be a fool. You have to diversify. Diversification is important. The 5 tips, they froth at the mouth that you have to diversify. Who? That guy. Ladies and gentlemen, it is the biggest lie they ever told you. Whenever you see the word or hear the word broker, I want you to delete that word and put in the word commission. I don't care if it's stock, yacht, whatever, real estate. They make money off you being in and out of as many names as humanly possible. It's an industry practice, which is technically illegal, called churn. You ever see the movie The Wolf of Wall Street, or even the movie Wall Street, folks? All right, fellas, I know we got the little old ladies in tennis shoes into this name yesterday. Get them out of it today and get them in this one, folks. It's called churn. Cha-ching, cha-ching, cha-ching. They print money, ladies and gentlemen, with you in diversified names, right? Now, I'm a fighter pilot. I don't have time for niceties, so I'm going to be blunt. Diversification is for stupid people. Now, if that offends you, let me grab an old guy, a nice old guy to clean that up. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. That's a lot of words for what I just said. Diversification is for stupid people, right? Ladies and gentlemen, real wealth is not generated by diversification. It is built through concentration, right? The only stock you need to own for the rest of your existence is Amazon, period. Let's dig into it. Now, I'm a political science major from South Jersey, South Philadelphia. So delete the word Amazon. And if you asked me to look at this chart and said, you know, what do you think of this stock? I'd be like, oh my God, look at the sales. This company prints money. Then I'd look at the next line that says, whoa, free cash flow. All right, well, that's interesting. Let me look at the oh my God, look at the profit. I would short this stock and I'd be broke. Ladies and gentlemen, I'll get political for 1 minute. Democrats hate this chart. Why? Because love or hate Jeff Bezos, folks, you know what he does? He doesn't even know what the word dividend means. Folks, he's like, wait a minute. If I make $1 at Amazon, I'm going to take that $1 of profit and put it back in the company. I'm going to buy a competitor. I'm going to put somebody out of business. I'm going to buy a new airplane. Ladies and gentlemen, Amazon barely makes any money. Isn't that funny? So I think it's absolutely fantastic. They take all their money they make, quote unquote, and put it back into the Death Star. It gets bigger and bigger. Look at the annual net revenue, folks. Look at this. It is a hockey stick. Look at that. That is a company you want to own for the rest of your life. It prints money, ladies and gentlemen, right? That's 25 years on your screen. Do you see a trend? How about the annual revenue by segment? I'm old enough to remember, folks, this red right here is called AWS. Maybe you've heard of it. Amazon Web Services, ladies and gentlemen, is technically Microsoft right now. It's its own tech company. It didn't exist until Andy Jassy, the current CEO, and Jeff Bezos came up with it in a condo, right? So look at the annual revenue by segment. AWS is exploding, let alone everything else they do, folks, but AWS is exploding. If you saw their last earnings, folks, and the AWS numbers, it's disgusting. Annual revenue by billions. Hockey stick going to the moon. Now, let me go back real quick before I show you that slide. When you think of the cloud market, what do you think of? Well, Apple's got like iCloud, right? They probably own a lot. Microsoft, obviously, big cloud. No, Google. Google probably owns the cloud. You'd be completely wrong if those were your answers. The largest market share owner of the quote cloud is Amazon, folks, and it's not even close. Microsoft is the silver medalist, Google's the bronze. Hell, Oracle sales, those are not even worth mentioning. Ladies and gentlemen, cloud provider market share is Amazon. It is the Death Star. And you know what's funny, folks, is we're talking about Amazon and cloud. The guy started as a bookseller. If you see the picture of him like sitting in his office, I think he had an old door on like he was using as a table. Look at this. Amazon, this was a year and a half ago. Amazon announces supercomputer, new server powered by homegrown AI chips. Read this. The company's mega cluster of chips for AI startup Anthropic will be among the world's largest, and its new giant server will lower the cost of AI as it seeks to build an alternative to NVIDIA. Ladies and gentlemen, I guarantee you Jeff Bezos was looking at his monthly P&L statement, looking at AI expenditures and chips and stuff, and he went, why don't we do this on our own? We have a ton of cash. Let's make our own chips that are cheaper, smarter, and faster. That's exactly what he's doing. NVIDIA, you want to talk about putting all your eggs in one basket? Be bullish on NVIDIA, folks. That's stupid. Amazon is diversified in and of itself. Talking about our solo Amazon service, JG. Hey, with a small account, trading Whiz's Amazon trades, netted $8,900 in a week. Kristen, you guys are amazing. I trade a smaller account and have done 22 Amazon trades this year for $31,000. Pristine month-to-date profits on Amazon, 107 grand with more to go. Thanks, Whiz, for all your expertise and guidance. Doing day trades with short calls to protect my Amazon profits. Learning from the best. Recently, and Monday through Wednesday, in 3 days, I made 90 grand on short calls against my 30 contracts utilizing Whiz guidance. Now, before I just sit here and say, hey, it's sunshine, lollipops, and unicorns, everything's great, just trading a single stock. I'm a fighter pilot. I'm an options trader. What are the threats? What are the risks to trading just a single stock? Anybody ever hear of a small mom and pop company called Lehman Brothers? 150-year-old company, gone in about 48 hours. How about Bear Stearns? Well, Jim Cramer remembers Bear Stearns, that famous clip, oh, you're an idiot if you don't put your money in Bear Stearns, during the financial crisis, right? It's a steal here. Your money's safe at Bear Stearns. 2 days later, it was at zero. Good call, Jim. How about Pets.com? How about Enron? We could spend the next half an hour together and I'll walk you through the graveyard of stocks that have gone to zero, right? But let me save you a waste of a half an hour. What's the common thread in these 4 examples in completely different spaces? They didn't own a thing. Pets.com owned a stinky sock and a URL. Enron didn't even own the building they were in, folks. They were a middleman of electricity. They still don't even know what they did. How about Lehman Brothers or Bear Stearns? They didn't own anything either, folks. They were counterparty. They owned paper. Ladies and gentlemen, can Amazon go to zero? Technically, yes, the stock can, but physically it can't. Why? It owns things. I did consulting years ago south of Miami International at an Amazon fulfillment center. I've been on several aircraft carriers in my life, folks. This fulfillment center was bigger than an aircraft carrier and more chaotic than the flight deck. It was massive. Amazon owns things. It can't go to zero. They own real estate and they have a FedEx and UPS. Now, full disclosure, I flew for FedEx for 8 months, 10 months. I hated it and left. Why? Showing up to Memphis at midnight and trying to fly to 8 in the morning? No, thank you. I left. But I stayed friendly with a bunch of the guys that I flew with. About 10 years ago, a buddy of mine called me. He's a captain. He's in corporate now. He became a trader, right? A traitor. He said, hey, man, you know, who's Jeff Bezos? I'm like, he runs Amazon. Why? He's like, that's weird. I just talked to a buddy of mine at GE Aircraft Leasing, and he's leasing 5 airplanes. And I said, oh, he's going to do it. And my buddy said, what? I said, he's going to put you out of business. Of course, my buddy laughed and hung up on me. Guess who called him about 3 or 4 years ago and laughed and hung back up on him? I did. Why? Look at the dates. Tuesday, September 27th, 2021. Amazon is now shipping cargo for outside customers to compete with FedEx and UPS. Look at the date. 2 months later, 2021. Amazon poised to pass UPS and FedEx to become the largest delivery service. And recently, about a year ago, the biggest delivery business in the US is no longer UPS or FedEx. Amazon is eclipsing both carriers and the gap is growing. Now, Fred Smith, great American, Marine officer. He started FedEx. He got a C+ on his paper at Harvard Business School. And the instructor's like, yeah, nice idea. It'll never work. You know, getting a package around the world in 24 hours, that's dumb. Guess what happened? He did it. Well, guess what Amazon's doing? Amazon says more packages are arriving in a day or less. Who the hell wants to go to Walgreens and to buy a toothbrush when you can order it on Amazon and it'll be here in an hour? Ladies and gentlemen, now they're doing grocery. 2,300 stores to compete with Walmart. Ladies and gentlemen, this name is diversified in and of itself. Look at this. Amazon, rapid rise, folks, in the delivery game. Absolutely crushing it. Amazon Logistics, ladies and gentlemen, is set to blow past who? The United States government. You want to talk about putting all your eggs in one basket? Why would you invest? Why would you buy FedEx or UPS stock? You have it in Amazon. It just makes no sense to me. Speaking of Walgreens, 4 years ago, I said, you want a great bearish trade? Pound Walgreens, CVS, and Rite Aid into the ground. New Amazon clinics are in 50 states. CVS lays off 5,000 employees. Walgreens, major store closures. Walgreens stock Tesla. Folks, I predicted it. I said pharmacies are gone. Matter of fact, about 6 months ago, my family and I moved over to what? Amazon Pharma. Walgreens breakup nears. CVS board conducts strategic review of companies. CVS breakup is, ladies and gentlemen, my members pounded Walgreens and CVS into the dirt. Rite Aid, what happened to Rite Aid last year, folks? Went bankrupt. You're welcome. Amazon is the Death Star, ladies and gentlemen. It destroys everything it touches or takes it over. Look at this, man. Same day delivery. Why would you leave your house? Unbelievable. Instacart doomed? Goldman sees millions of Prime members flocking to Amazon same day. Folks, I don't need to beat a dead horse. I've told you Amazon takes over everything it touches or it destroys it, right? Absolutely fantastic. Now it's doing what? Amazon grocery brand. How many Costco members in here? You know Kirkland? Amazon's going to have its own grocery brand. Folks, we've gone from talking about AI and chips and airplanes and delivery to pharma to groceries, all in a single stock. That's your diversification. Whoa, okay, why is Donald Trump on the screen? Guess what? I'm still briefing the risks. His first term, the guy woke up one morning or didn't go to bed, depends on who you listen to. He grabbed his phone and said what? Amazon's a monopoly, should be broken up. I can't stand Jeff Bezos, destroy Amazon. Holy crap. Never in the history, I've been trading for 34, 35 years, folks. Never in my life have I seen a president say something like that. What happened to the stock? It took a hit that day. Then what happened? It went straight up for the next 3 years. The last year of his presidency, which he didn't know was going to be his last year of that first term, he grabbed his phone again. Why? Because Jeff Bezos bought the Washington Post. Amazon, Jeff Bezos, monopoly, Washington Post, awful, trash, fish wrap. Somebody should do something about Amazon. What happened to the stock that day? It went up. So, ladies and gentlemen, I'm briefing you on threats. There obviously is potential threats politically. Or how about the trade war? Amazon is crushing it in this trade war. But there are political risks. I'm briefing you on the risks, DOJ and antitrust this and, all sorts of stuff like that. Ladies and gentlemen, let me be honest with you here. I call Amazon Mercury. What do you mean by that, Whiz? It's too late. If you tried to smash Amazon right now, you create 12 little, you create more monopolies. Do you get that? Their Amazon Air is bigger than FedEx and UPS. Their Amazon Prime is bigger than Netflix. Amazon Pharma put Walgreens and CVS essentially on the, I'm not going to ripple through all this. It's too late. And if they did break up Amazon, I would buy stock in every one of the companies that they broke it up to. But it's not going to happen, folks. Because all these CEOs are political animals. What, a week after the election, Jeff Bezos was up the street from me in Mar-a-Lago kissing Donald Trump's ring. So there are political risks, but I think they're manageable. Here's what's funny. Do you remember like 2 years, when was this? Yeah, 2023. Look at the date down here. I remember the news talking about Lululemon employees who like followed shoplifters into the parking lot and like filmed them. And what did Lululemon do? They fired the employees. Let me read this. Just so everybody understands the game here, Lululemon and these other national brand stores don't care about theft because A, this crap is in fact virtually worthless, and B, they would rather sell it online. No fuss, no muss, no employees. When you see the stores locking everything up behind glass and forcing customers to select from a kiosk, it's a way to avoid excessive minimum wages to human workers and the lawsuits from all the sales staff loonies, whatever. Next paragraph. Invest in Amazon, folks. Pretty soon, it'll be the only marketplace left. Period. That was years ago, and it's been the truth. So, ladies and gentlemen, I'm going to be honest with you. I'll talk to you as a fighter pilot, as an American. I can't stand Jeff Bezos. He's a limousine liberal. He doesn't pay his people enough. He's getting rid of 500,000 of them and replacing them with robots. He just laid off 14,000 white collar folks. He's awful. And then I'm going to put on my $10,000 Armani suit and be Gordon Gekko and go, good. Just like Gordon Gekko said in the movie Wall Street, you want a friend, get a dog. I'm here to teach you how to make money, and Amazon prints money and will print even more money. And folks, I got to be honest with you. When, not if, the AI bubble pops, Amazon clearly will survive because it does everything else. All of the other names in the AI bubble will get destroyed. Amazon will be the Death Star. Now, what are the goods of just trading a single stock? Well, you're just trading one name, and you could potentially profit if you trade options, no matter what direction Amazon goes, up, down, or sideways. You stay focused on the news and events that impact Amazon, and instead of a bunch of different stocks and ETFs, you become an expert in Amazon, reducing time spent on other positions. Let me share with you a funny story that happened to me. Moved from Chicago and running that firm down to Boca Raton, God's waiting room. Became friends with a doctor. He's like, oh man, I didn't know you trade. Yeah, I hear you're good, and I need help. I'm like, okay, man. I met him at Starbucks at Meisner Park. And he opened up his laptop and showed me his brokerage account. I'm glad he's a doctor because I think I passed out and hit my head on the ground. Why? He had 33 positions in his portfolio, hand to God. And he tried. I stopped him, but he tried to explain it. I'm like, what is this? He's like, well, I think that's a pot stock. I'm like, did you just say you think? Well, and then this one's a surgical stock. A buddy got me into it. It's down 50% right now, but when it gets back up to where I bought it, I'll sell it. I'm like, Doc, you're a doc, right? He's like, yeah. I'm like, that means you're supposed to be somewhat intelligent? Yeah. Well, do the math, man. What's the stock have to do from here to get? I'm like, stop talking. I want today to sell all of this crap and buy Amazon. And that's exactly what he did. He went from flying that F4 Phantom to the F-35. Ladies and gentlemen, I saw this last year. This made me literally laugh out loud. I immediately added it to my solo Amazon brief you're getting. This is Jim Cramer's Stock Club. Here's a rapid fire update on all 33 portfolio stocks, including 2 more. Ladies and gentlemen, if you're paying for that type of crap, you're a fool. What's the Wall Street, a room full of monkeys with the Wall Street Journal and a bunch of darts can outperform most hedge fund managers? You're going to join an investment club that throws 35 names at you? I thought my doc was a crazy example. What a joke, Jim Cramer's Stock Club. So it is time for you to jump in your F-35 and trade Amazon. Now, as some of you are sitting here like, Whiz, the diversification vampire bit me in the neck. I can't. I have to diversify. Well, I got something for you too. We will trade XLY. It's the consumer discretionary ETF. Why will we trade XLY? Well, take a look at the #1 holding in XLY. A buddy of mine likes to jokingly say that Shrimp are a vehicle for eating cocktail sauce. The XLY is an ETF where you can eat Amazon. It's got, if you must diversify, but I want some of that Amazon whiz, look at that. But you also get Tesla, Home Depot, McDonald's, Lowe's, TJX, Booking, Starbucks, like Chipotle. You are getting a bunch of other names and a majority of Amazon. So in the solo Amazon portfolio service that you can get access to today, you can trade the XLY as well. Okay, so let's go ahead and get airborne here. How do we target for max profit? I'm going to show you right now a Marine Corps position, right? A beachhead. We're going to go establish a base position. We're going to hop in our time machine and we're going to go as far as we can into the future, right? Synthetic stock. Then what are we going to do? We're going to trade the front months after we get long-term bullish. What's the front month? What do you mean? You're sitting in the front month, December, January, February, and we'll trade tactically. Hey man, Amazon is going up, right? We'll do some bullish spreads or buy some calls. Uh-oh, Amazon's going down. No, uh-oh, I'm going to make money if Amazon goes down with bear spreads or buy some puts. Well, Wiz, what if it's boring and it's just moving sideways for a little bit? I make money with boring and sideways. It's called a range bound trade, which is an iron condor. Does that make sense? If it doesn't, I'm going to teach you. So let's go ahead and go over to my brokerage platform and let's start doing some stuff. Folks, if you know nothing about options, sit up straight. Here we go. If you wanted to buy right now 100 shares of Amazon, you need 23 grand. Everybody's got that laying around, right? Well, if you do, don't do it. Why? Because I'm cheap. I'm going to hop in my time machine and I'm going to go as far out in time as I can. January of 2028, which is 786 days in the future. Now, if you know nothing about options, check this out. We're at 230 right now, right? I could buy one Jan 28 230 call. What does buying one call do? It lets me control 100 shares of Amazon for the next 2 years. Whoa. And you know what the average holding time of most stock people now? It's like 18 months. Nobody buys it. This isn't your father and mother stock market where they buy and hold GM shares in their closet for their life. Ladies and gentlemen, if you bought a single contract, you control 100 shares all the way out to January 2028. Guess how much that costs you? $5,800. I just saved you $18,000. I'm not done. So you should know when you buy a call, you're bullish. So somebody's on the other side of this trade. When you sell a call, you're bearish. Buying a call bullish, selling a call bearish. Now let's look at the other side of the screen. They're called puts. Now, most of you, even if you don't know a lot about options, you've heard, uh-oh, I think something's going down. I'm going to buy a put. So buying a put, bearish. Selling, somebody's got to sell you that, right? Selling a put is actually bullish. So watch what I'm going to do. I'm going to sell an at the money put right at 230 where the call is. Ladies and gentlemen, that's $1,800. I have saved you $21,000 to get long-term bullish with Amazon. What is this trade called? You see that P&L diagram? It's called synthetic stock. I am long-term bullish on Amazon right now. What's the word synthetic mean? It means two things you shouldn't care about with Amazon. The first thing it means is since you don't actually own 100 shares, you don't get a dividend. How did I start this brief? Jeff Bezos doesn't even know what the word dividend means. They will never have a dividend. They reinvest their money, so don't worry about that. The second thing you don't get with synthetic stock, because you don't physically own the shares, is what? To vote. You're not a shareholder, so you don't get a shareholder vote. I'm fairly certain, folks, that Jeff Bezos and his ex-wife might own 1 or 2 more shares than you and don't really care about your vote. So the two things, so who in this room would rather spend $23,000 or would you rather spend $1,800? Now, if you're smart, you looked over here. What's the max potential loss in this trade? Holy shit, man. Well, ladies and gentlemen, what's the max potential loss if you buy 100 shares? Well, it goes to 0, Whiz. Exactly. What are the odds of Amazon stock going to, look at here, probability for maximum loss, 0.00. Now, I guarantee you there's about 10 decimal points in a 1. The odds of getting eaten by a golden retriever are never 0. The odds of Amazon going to 0 by Jan of 2028 are never 0. But it's going to show that. Now, I'm going to do something called buy a disaster put. What's a disaster? Or it's something bad? Well, when the market goes down 20%, we say what? It's in a bear market. If a stock goes down 20%, we say, oh, it's a bear market. Why don't we buy what I call a disaster put underneath this stock? Let me buy what, I'm just doing rough math. What's 20% under 23? I don't know, 180 or something like that. I'm just doing rough math, 185. I don't know what it is, but I'm just gonna do some rough math. So ladies and gentlemen, now the cost went up a little bit for the trade, right? Because I'm buying insurance, but I'm also doing what? Instead of risking 24 grand in this trade, the max potential loss, if Amazon, God forbid, went to 0 in the next 2.5 years, is that. If you bought the shares, you lose it all. If you did the synthetic stock trade using options, if it went to 0, that's all you'd lose. Now, some people have, large enough accounts where they don't need, I call this a disaster put. They don't need the disaster put. They can do it for $1,800 bucks. If for margin requirements you need a disaster put, you throw it on there. Maybe it's down to 170. I think I did my math wrong. I don't know. So ladies and gentlemen, but I'm not done yet. I got one more thing to do. Why don't I sell a call against this trade out to Friday? The November 28th, what are we at right now? 230? Let's sell like the 232.5 out to Friday. Folks, I just brought in a little bit of cash. Every week I have this trade on, I can sell what we call a front month call against this long-term bullish position and lower my cost basis. I will eventually pay this off. The trade will be free. I can do that just by selling these calls against it, let alone the underlying Amazon going up to the moon. Now, ladies and gentlemen, if you're sitting here and your mind's spinning, guess what? We have something called Options Weapons School, but the synthetic stock, the lecture is about an hour. So what I just did in 10, 15 minutes, you're going to get an hour of, and it's a hell of a lot slower than this, but I only have 45 minutes to talk. But ladies and gentlemen, if you've ever dreamed of buying 100 shares of Amazon, but you don't have 23 grand, do you have this? 3,600 bucks? Or I'm sorry, 3,300 bucks. Or get rid of the disaster put. Do you have 1,800? If you have 1,800 bucks, folks, you can be long-term bullish on Amazon for the next couple years. You could do this right now, put this in your filing cabinet and look at it in a year or two, ladies and gentlemen. Right? So you got it, Peggy. I'll teach you how to manage that front month short call. I treat it like a bear call spread. So yep, I love the way you said that. You are smart. But I want to keep everybody on time here. So Solo Amazon, folks, it's one of our newest live trading services. It's only $970 for a year, or I'll give you a little bit of a Thanksgiving break. $97 a month. Now, I don't drink anymore because of psychedelic assisted therapy destroyed alcohol in my life, but I used to say 97 bucks was a crappy bottle of wine. So if you're going to somewhere for Thanksgiving tomorrow and you're, you don't like the people, maybe you spend 97 bucks. So let me give you Solo Amazon, $97 a month. That's going to be our Thanksgiving deal for you right now. So let me give that to you. I'll paste that in the chat box so you can get that. You will get 2 months free if you decide to do the annual instead. Like, man, I love what you're doing. I'm going to do the annual and save some money. However, I'm begging you, or you should beg you, it's only $295 to get 8 options weapon school training sessions. Okay, let me go show you that. 8 sessions. If you don't know what a put is, a call is, any of that stuff, welcome to Top Gun Options. This is why we have what we call Options Weapons School. You're going to get your manuals, and then right here, session 1, hey, this is the investing basics, Wyse's trade plan. We don't even get into options until session 2. Options basics, calls and puts, and we take a building block approach. What I just did, ladies and gentlemen, synthetic stock, is session 6. We take a building block approach. I didn't show up to Pensacola Naval Air Station in Florida knowing everything. I had to learn what a wing was, what aerodynamics were, what the weather was, an engine did. Building block approach. We do the same thing here at Top Gun Options. So click that link. We're up over $136,000 just trading Amazon, and a little bit of XLY down there as well, as we talked about. Parmar, 200 grand in Amazon, 20 call contracts. Kevin, Amazon synthetic stock, late to enter, up 200%. He paid 8 grand, now 24 grand. Scott, Whiz, 20 grand in September and October calls. I have never been there. Patience, persistence, thanks TGO. Dennis, Whiz, update on my Amazon synthetic call for June expiration from solo Amazon. It's no longer up 100 grand on one contract. It's now up 127 on one contract. Diane, up 70 with a single contract. If you can't attend, folks, every Monday at 10 a.m., don't worry about it. 80% of our members work. You're going to have access to our app on your phone. You get instantaneous alerts, not text alerts. These are apps. Text alerts are so 2015, folks. So we have our own app called Go Collab. That's what the Amazon trade alerts thread looks like. And then we have an intel and commentary thread, right? This one is trades only. And this one is, I put some intel that I'm finding throughout the day or that I'm hearing, okay? And then obviously, if you can't make it to the Monday morning live trade brief, it's posted. The replay takes about 20 to 30 minutes to render that recording. I'm so geeked. Been a subscriber, I think that's good. Been a subscriber for 3 years, and this is the first time I've been able to attend live. I only know you via the replays. Today, I'm throwing these in, folks. Happy Thanksgiving. These manuals, if you bought them on my homepage, are $197. Do the political science South Jersey guy math. Wait a minute. It's 97 for a month, Whiz. Yeah. So I made $100 the first month. You did. So I'm throwing in the manuals that are $197. So you get access to our live trade brief. You get access to our app and email alerts, the 3 skill-based manuals, and that members only ready room. Okay. So I'm not going to rip through any more case studies, folks. These people are printing money. This ain't hard. But like I said, if you want to come test fly solo Amazon for a month or two, it's $97, folks. It's better for me if you stay in monthly for the rest of your life. I'm not that guy, though. We give you a discount if you want to do that annual membership. Make sure you do the Options Weapons School training. It's only $295 or whatever it is. As an upgrade, you get access to all those briefs, okay? Folks, normally, everything I do at Top Gun Options is $167 a month. Since we're only trading one name and some XLY, we do that. If you didn't learn anything today, I failed miserably, but do me a favor, I guarantee you did. Go do a little debrief of your own trading portfolio. Do you have 33 names, folks? I do this for a living. I got Amazon and psychedelic stocks and a JP Morgan and SIBO. That's it. If you're not doing this full time, folks, you need to focus on 1 or 2 names. And in our solo Amazon service, it's Amazon and XLY. Have a great rest of your day, folks. Happy Thanksgiving. Fights on. And Anthony, I'll throw it back to you. Thanks for having me, my friend. I appreciate it.
Oh, thank you, Wiz. Always dynamic and always packed with value. His Black Friday special is now available in the chat. Wiz, wishing you a blessed holiday season. All right, up next is the co-founder and president of Altavest, bringing decades of experience in building automated option strategies is Erik Gebhard. Erik will walk you through a one-touch responsive trade alerts, pre-built option spreads, automated risk and profit management, and the professional tools traders can apply across bull, bear, and non-directional markets. So everyone, please welcome Erik Gebhard.
Yeah, hello. Thanks, Anthony. Thanks for the introduction.
Thanks for being here.
All right, great. Let me see if I can get my screen up. I think I've succeeded.
Yes, you did. Thank you.
Okay, good. Thanks for the feedback there. All right, so are we ready to get going?
Yeah, Erik, it's all yours. Sorry, I was on mute.
Yeah, okay, great. We're gonna look at automated options trading. We have a one-touch responsive trade alert technology. You're gonna wanna see that. We'll do a demo. We look at these pre-built professional option strategies. We're looking at spread strategies, the way professionals trade. And we're gonna look at automation on how to manage your risk and your profits. And then among, I guess I should say, on top of all that, we're gonna talk about one-on-one coaching, and that's all part of what we do. But remember, we are speculating and we always accept risk when we're trying to make a profit. So with that said, do take a moment and take a look at our risk disclosure. We're going to spend the next 45 minutes reading every word of this. But no, do take a picture of that or a screenshot if you want to read every word, that's fine. But keep in mind, the main thing would be there is always risk of loss when trading and speculating. Always use risk capital, and past performance is never a guarantee of future results. A little bit about Altavest. We've been doing this since 1997 as a introducing brokerage firm. We've developed our proprietary options technology for our clients. We've traded millions of futures and options contracts along the way, tens of millions, if not perhaps hundreds of millions over that time period. And we're registered with the CFTC. We're members of the NFA. We're located in California. It's actually a picture I took visiting New York. And I think this other picture here was also New York and the coffee, sugar, cocoa exchange. That was right near the closing bell. A little bit blurry, but I don't know. I think it's still kind of cool. And I am Erik Gebhard. I've been doing this as a co-founder of Altavest. I graduated from USC with my business degree. I've had several securities licenses, my Series 6 mutual funds, and 63 in insurance and so forth. I currently have my Series 3, my commodity futures license, and also my Series 65, which is for investment advisors. And maybe you've seen us before. We have some bit of a footprint and some periodicals, and we get quoted oftentimes, and we do various presentations, even live events. We were in let's see, where were we this summer? In Miami, actually. There we are in Miami. But yeah, maybe you've seen us, or maybe we get quoted oftentimes in places like Market Watch. They're asking us here about our thoughts on, I think this was mostly about precious metals, but also essentially about monetary policy and interest rates and exchange rates and currencies and so forth. So anyway, that's a little bit about us. So we're going to jump into the program here, and then we're going to look at a demo of what we're talking about with these option strategies and option spreads. But there are probably 3 barriers that we can all relate to when it comes to our success in trading. And we can all relate to this one. How about information overload? Just what I would call noise, really. Conflicting targets and opinions and narratives and just clickbait, you know how that goes. You have this information overload. And I found this this little article here, and so I'm going to kind of use it. So about information overload, causes of overload. How about the number of sources? There's really too many sources to gather information from, and the information can obviously be complex at times. And then how do you know what's really important and what's not? How do you filter out the wheat from the chaff? So what's going to happen with our decision making when you have all that overload? Well, you have that overwhelming amount of data and competing opinions. causes you to lose focus on what's really important and what those key factors are, I think you end up with a lot of mental fatigue, or, you know, analysis paralysis, whatever you want to call it. But I think we've all looked like this at some point in the past when it comes to investing and trading. But we think there are ways to combat this information overload, and a couple of those we just highlighted here in yellow. We can use automation and data analysis and algorithms, basically use technology to help us. And along the way, we can use real people, involve experts and specialists to do this every day. So that's part of what we're going to jump into. So we want to avoid being this guy here. This is the guy you want to not end up looking like or acting like. So number 2 as the next hurdle would be, how about time and or discipline? So we all have lives to lead. We all kind of have typically families and interests and hobbies and, you know, full-time jobs, a lot of us. So it takes a lot of time and discipline to screen watch. We don't have time for this. This really looks pretty cool, but quite frankly, the reality is we don't typically have time for that. A lot of traders here are spending 10 hours a day. I just pulled this off a website, and you know, I think we can kind of relate to this. Like, we think, wow, I'd like to get more involved, but I don't have the time. This person's spending up to 10 hours a day, 4 to 5 hours actively trading when the market's open. So that's really just not practical for most of us. And here's the third hurdle, and it really, I guess it amounts to us. We become our own worst enemy. As humans, we've got the emotions of fear and greed, and those can be something that just gets in our way, really, of our own success. We end up riding this emotional roller coaster, especially when it comes to money and trading. You know, you have this this starting point here where now, you know, everything looks great. The world is your oyster. Everything's, you know, I guess you could say, as you look forward, you only see the best. And then by and large, you know, there's going to be some successes. You're going to get euphoric. You're going to get thrilled. And then you're going to have a pullback. And then you're going to maybe panic, raise that white flag of surrender as you capitulate. Hopefully you don't get too despondent or desperate, and then you kind of start that cycle again as things start to look up again. But we want to avoid that roller coaster ride, that emotional ride. We need to control our emotions when it comes to our money and when it comes to trading, and that's for sure. So we're going to look at automated professional option strategies, and I think that's going to help us really jump over those barriers and put those in the back seat or the rear view mirror. So that's something we can do with the technology we're going to show you. But before we jump into that, we're going to learn a couple Greek letters from the Greek alphabet. So the first would be delta. Okay, so delta helps us determine probabilities when it comes to trading options. And here's the formal definition: is it how much does the option value change with the change in the underlying asset price? But it is also the approximate probability of that option expiring in the money. So we're going to look at delta as options traders, and that's how we're going to use delta to our advantage. And I'll show you that here. Here's an example. If an option has a 0.25 delta, that means there's a 25% chance that option expires in the money. And it also means there's a 75% chance it would expire worthless. So that's how we're going to look at these options. What is the probability that an option is going to expire out of the money or worthless? So remember, delta is not a static number. It doesn't just stay the same. It's always moving up and down with price and time movements. And it is not the probability of a winning trade. So don't make the mistake of thinking, if you were to go back here, for example, and say, if I sell an option that has a 75% chance of expiring worthless, that's not synonymous with saying I have a 75% chance of a winning trade. So just want to make that point. And then theta, it represents time or sensitivity to time. Remember, time decay is always something associated with every option. Every option has a limited lifespan, and it's called a wasting asset or a decaying asset. And theta is referred to as a negative number equaling 1 day of time decay. just so you kind of have a definition of it. But we don't really have to know anything about the actual number itself or compute it or anything, but it's kind of good to know exactly what that refers to. But this is what it looks like on a graph. So you can see here, you start here with 120 days in this hypothetical option, and as you approach time 0, you can see the value drops and drops and drops. So that's just theta decay. So time value, the clock is ticking, so to speak. You're getting closer and closer to the expiration date. And especially in the last 30 days, you notice how the slope of the option value starts to really fall off. So that's kind of what theta decay looks like on a graph. And here's a good little piece I ran across, and I thought I'd throw it in here. But so we're talking about options here, and we're going to look at an example or a few examples of what we're referring to in our demo. But here are top 10 reasons why selling options is better than buying options. And let's look at some of these reasons. Talking about professionalism, it says managing risk like a professional, avoiding common pitfalls. This professional approach distinguishes option sellers from novice speculators. So that's talking about selling options. And they're talking about long-term growth here. They say it's often preferred by long-term investors who value consistency over high-risk speculation. So again, talking about option sellers. And now this was interesting. I just did this a couple of weeks ago. I thought, I wonder what AI has to say about option selling. So I asked, why do professionals sell options instead of buying them? Well, they talk about time decay advantage. Remember, we just talked about time decay and theta decay. They talk about higher probability of profit because the seller receives the premium up front. There's also income generation strategies, of course, when you're selling options. We're going to talk about that. Market neutrality. So you're not always going to have to be bullish or always be bearish on something. You know, oftentimes an index in particular can trade in a wide range. So sideways markets, there are strategies for that. And we're going to really jump into that in just a second. And then it says here, to summarize, these advantages make option selling a preferred strategy for many professionals. So the Wall Street pros are trading option spreads to collect premium. So what does that really look like? So visually speaking, here's what it looks like. As an example, here's a credit spread to collect premium. This is on the S&P 500 mini, the E-mini S&P 500. So we're all familiar with the S&P 500. So you would sell an out of the money call spread, and the red line represents the call that you sell, and you collect premium for that. You put that money in your pocket, but you use some of that money to buy an out of the money call spread above the one that you sell, and that's the blue line there. So that acts as a bit of protection or a bit of a hedge and covers the position from being naked. You don't want to sell naked options. So you can see here the market moved around, even ran higher a bit, and chopped around, and then here's the expiration date on that particular spread here, this vertical line. So that's kind of what it looks like visually speaking. And then you'll notice the blue arrow pointing to this point right here on the graph, and this blue arrow here pointing to this blue box. Well, this is the signal to close out the position. Remember, you initiate the position by selling it and collecting premium, and you close it out before expiration by buying it back. And the idea is you sell it high and you buy it back for a hopefully lower price than what you originally sold it for. So you can automate this here, and I'm going to show you how to do that so that when you get a blue profit taking signal, then the order is automatically placed for you to close out that position. But this is kind of typical example of just selling an out of the money spread. This happens to be an out of the money call spread. It could have been an out of the money put spread, but you would typically do something like this if you're kind of have a neutral direction in mind, or even bearish outlook in mind, or even slightly bullish. So there's a lot of margin of error or room for error where the market could kind of jump around, and this strategy like this will still do well. Now here's a non-directional strategy called an iron condor, and you'll see you sell an out of the money call spread just like we did back here, but you also sell an out of the money put spread at the same time, and you look for the market to stay within that range. And you can see here's an example, market traded higher clearly, but stayed within this margin of error. So that's how an iron condor might work, where you collect money for selling the put spread and the call spread simultaneously, and then you look for the market to stay within this range. Now here's a strategy we created a few years back called the Dragonfly. It's 6 legs, so you use 6 different strike prices. And it's another non-directional strategy, kind of a variation on the iron condor that we just saw. So here's what it looks like on a graph. The red line are the calls that you sell. The blue line above it would be the call that you, well, let me get you the quantities. First of all, you sell 4, the red line, and then you buy 3 further out of the money calls. Those are the 71.25 calls here. And then you buy 1 closer to the money call. So for every option you've sold, you also buy an option. This is a completely covered spread here with the calls, and the same structure with the puts. So again, you place this, you collect premium. The net result is you collect premium on the calls and the puts, and you hope that you can buy it back for less than what you originally received for it. So that's the whole idea. And then you can see in this example, you have this blue arrow right here, and you have a signal right down here that says take profits and close out the position and buy it back and move on to your next trade. And you can see the expiration date here. So you're always closing these positions before expiration date. You do not carry these till expiration. So these are really what the professional option strategists are doing a lot of times with trading options. They're not going to rely on just buying options. And in fact, that's kind of a rookie thing that a novice will typically do. This is a great little piece from a couple years ago. I found it on YouTube a couple years ago. And here she is talking about, let's read this quote. She says, majority of small-time traders are buying the most basic call and put options, which have a much lower probability of profit versus advanced strategies like option spreads. And look at this here. John Foley, CEO of Options AI, says, everybody in the business knows that if you're only buying out of the money calls, then you're likely going to lose money over time. So we need to keep this in mind. We need to avoid the rookie strategies, and we need to pay attention to what some of these experts are talking about in terms of just relying on one strategy where you just buy calls or you just buy puts. So remember, professional option spreads, that refers to selling options to collect premium, and we can do this with technology. We can help manage this with algorithms, and that's our Theta Trader technology with these pre-built option strategies. There's a couple of our floor brokers from years ago on the S&P 500 options pit. Of course, the options pit does not really exist at all anymore because of technology and sign of the times, right? Moving into the 21st century and beyond. But our proprietary algorithm will create theta trades. These are one-touch responsive trade alerts as well. We've got some technology there. You're going to love that. Any market condition, bull, bear, or flat, non-directional, whatever you'd like to call it. And we'll use automation with our risk and profit tracking called the risk thermal indicator. That's color-coded, RTI. So I'm going to switch screens, and we're going to look at a demo real quick. Okay, so now I have switched screens. You're looking at the dashboard to Theta Trader. Let me see if I can expand that. There you go. Now this is a demo account I use for these types of presentations. You'll see any active alerts up here, and I'm going to come back to that in a second. You'll see today's Theta trades here. You'll notice there are bullish strategies and bearish, and then neutral or non-directional, and those are all pre-populated. And we're looking at 3 markets. We're trading the E-mini S&P 500, the NASDAQ 100, and the Russell 2000. So those are the 3 markets we're focused on, not thousands of different tickers to filter through. So, and you'll notice here, these are open short positions on this demo account. So these are all of the positions that are anywhere from 8 to 52 days till expiration remaining on these positions. And open bot positions, just 1 long position. And again, remember, we're going to focus on selling options here because that's what professionals do. So that's why we don't see many long or bot positions or what might be called a debit spread. And then over here, you look at settlement values, and then this data here is integrated with your Altavest trading account. So that's all part of ThetaTrader. So what I'm going to do here, we're going to look at a couple examples of dragonflies and condors. So I've loaded one up here. Here is a condor on the NASDAQ, has 36 days till expiration, and the algorithm has already pre-selected the strike prices to trade. You can see your maximum profit potential at expiration. This is called your targeted annualized return, just to compare one trade to another. But this is what the graph looks like. You can see the market's trading right here. And this is the out of the money call spread you're selling and put spread you're selling, and you're collecting premium. And you can see the expiration date here. So this is a more detailed table here of this particular trade. This is kind of a visualization, and then this is more of the details. I won't go into everything, but you see the cash required here, about $1,800, your profit potential here, targeted return on cash, targeted annualized return. I should also note that all of the numbers here are net of commission, and we can talk about that in just a second. But look here, the algorithm has chosen this 22,600 put to sell with a delta of 9.6%. So that means there's over a 90% probability that this option that you're selling to someone else is going to expire out of the money. And then you see this call, the 27,400 strike, the delta is 6.74. So, you know, over a 93% probability that this call you're selling to someone else will expire out of the money. So the algorithm is liking this setup. It likes the amount of premium being collected. It likes the risk reward balance. It likes the proximity of the strikes, on and on and on. And it's telling you that this is sort of a higher probability outcome, and that's why it likes this trade, and it's suggesting it here as one of the theta trades, and the algorithm is just choosing that. It defaults to a quantity of 1 because you want to sell 1 spread. If you want to do more, you can just raise the quantity here, and it changes all the numbers. Maybe we'll just do, I don't know, 7 of these, and here's the amount we're trying to collect in points, and we'll go ahead and just place that order. And it's just that easy. As a demo account, it just assumes that you're filled on that order. All right, so that is a typical condor. Now let's look at a dragonfly. So we looked at the condor, and now here's a dragonfly. And you'll notice you're selling these 4 calls, but you buy 3 further out of the money calls as protection, and you buy 1 closer to the money call as additional protection. And you notice the same structure here with the puts. So for every option you sell, you've bought an option as protection. So these are not naked or uncovered strategies. Then you notice the one that you buy here and the one that you buy here is closer to the money. So the delta is higher, and that will act as a hedge, an additional hedge, or it's more sensitive to market movement, and also theta decay won't impact it as much. So it can really save a trade compared to a condor, and I'll show you in just a minute. But here is an example. You've got, again, you're selling these 4 puts, you're selling these 4 calls. You see the deltas, 9.6, 7.7. So again, over 90%, 93% probability that these particular options you're selling to someone else would expire out of the money. And for the sake of this here, we'll just go ahead and do 3 of these. And there you go, just that simple. Okay, so let me show you, we've got a great feature here under the trade simulator, and this will really, I think, be a lot of fun to take a look. So I've loaded a couple of trade simulators where you can go back in time. You can pick any date. So this is August 29. Here's a end of month iron condor in the NASDAQ. We'll use this button to go forward. And you can see the RTI down here is giving green. That's a green, all is good, all systems go, do nothing. And we'll just go ahead and keep playing. Turning yellow, slightly elevated risk, but you can see why. It's getting a little close to the upper boundary of our position, but still okay, do nothing. And then it finally turns profitable, and it turns blue. That's your profit-taking signal. So this can be automated, and I'll show you how to do that. So you don't have to watch it. So when you get a blue signal, ThetaTrader is monitoring and scanning your account, and it will place the order for you. So remember this though, this with 5 days till expiration, you get a profit-taking signal. And this is the September end of month E-mini NASDAQ condor. So here's the September end of month dragonfly. So we'll compare the condor to the dragonfly. So you see the market doing the same thing, but you have a different trade on. And look at this, with 7 days till expiration, you get a blue profit taking signal. So you compare that to the condor, you had to wait a couple more days till there were 5 days till expiration, but you had a profit taking signal. So the structure of the dragonfly can oftentimes mature more quickly. The trade will mature and you can close that position out earlier. Let's look at another one. I'm actually not sure what happens here. I think I forgot. But all is well. This is another iron condor. Oh, you get a blue signal right here. Keep right here with 3 days remaining. You get a blue profit taking signal, which is fine. There's the expiration date. This trade works great. So the end of month July expiration. Let's look at the dragonfly. Look at this. With 15 days till expiration, you have a blue profit taking signal. So much, much earlier opportunity to close out the position, use your money, and move on to something else. So the dragonfly matured much more quickly in this case compared to the condor. So just wanted to make that point. Now let's look at another trade, a May end of month. And look at this, you end up taking a loss. It turns red and you end up with a losing trade on this condor. And this is the May end of month expiration. But how about a May end of month dragonfly versus the condor? It turns orange, so elevated risk, but still Theta Trader says don't do anything. The algorithm is doing the computations, telling you to stay in the trade. And look at that, it then turns blue and you have a profit taking signal. So remember this option here, this blue line is a call that you actually own. So owning that really paid off. It allowed you to withstand that extra pressure as the trade was starting to move against you. And that's the benefit of the dragonfly versus the condor. It can be much more robust and you can get out earlier sometimes, and even a trade that would have been a loser with a condor is a winner with a dragonfly. But you do have to give up some profit potential, and that's the trade-off, because you pay money to buy this particular call and this particular put. So it's like paying money for a little extra insurance. All right, let me show you here. I wanted to show you how to do, where is it? Here we go, here, under account settings. So this is how you activate the risk manager right here. And you can change it from red to orange or customize it anywhere from a 50 down to a 25. But keep in mind, if you use a lower risk manager threshold, then you'll just have more frequent losing positions, but the losses will be smaller in magnitude. It's not good or bad, it's just different. And then what you do is you check that box and then save your settings. And then same with the profit directive, check that box and then save your settings. So that's how easy it is to automate everything. And then there's a great help file here too, with a description of all the color coding here. But of course, we don't have time for all that. And all the details are in all the spreads. So I just want to point that out. And we also have daily research available to our Theta Trader users, and we do some brief little overview on the indexes and then what to look for in the coming day and weeks ahead. That's called Trade Scope. And then let me go back. Oh, one other thing. It was right. Where was it? There was one other thing I wanted to point out. I guess I can go back to the dashboard. Just want to point out that we're not just doing non-directional or neutral strategies. It's not just condors or dragonflies. That can be our bread and butter in many market conditions and many circumstances. But if you're bullish, you can certainly, put on some strategies here, or bearish on the NASDAQ or S&P or Russell, what have you. So it's very flexible in that regard. So I just wanted to point that out. But there's one other thing here. There is a great video tutorial here on how to use Theta Trader, how to place trades. And also we have an education package here. So these are all recorded videos, futures trading, index futures, options trading, futures options, advantages of stock index option spreads, and then advanced stock index option spreads. So a lot of what we talked about just in the last 15-20 minutes is more deeply explained here. And this is all part of the Theta Trader package as well. But now you'll notice here, there's something called under active trade alerts, it says view. So let's go ahead and take a look at that. So this is what it looks like. So you can see we sent out a dragonfly spread today as an alert, and this will come to you in your dashboard, but it'll also come in other ways, and I'll show you. You can change the quantity if you'd like. You can go down, but you can't go up and increase the risk. And this happens to be another dragonfly spread. You can see the structure should look familiar to you now. Has 66 days till expiration, and it's trying to collect 8 3/4 points, $2,828 cash required, and that's your 66 days till expiration. And this, again, it's all just as simple as having this mapped out for you, having the algorithm do it for you, and then if you want to accept that alert or reject it, we'll go ahead and accept it, and it's just that simple, and there it is. So people love those alerts, and I'm going to show you one other thing real quickly here. You see positions, open positions, closed positions. You've got your dashboard here summarizing your open, closed, open positions that are short and bought. So here's what it looks like. If you want to see all of them in more detail on one page.
Hey, Erik, we're having a hard time hearing you. I think we missed maybe the last 40 seconds.
Oh, I don't know what happened.
You're
You
good
know
now.
what? I do know what happened. I accidentally hit my mute on my headset. Sorry, guys.
That's okay.
Thanks for letting me know.
Yeah, you're welcome.
Okay, but here is your your closed position summary. This is how you kind of go back in time. This is just for the demo account. Just want to point out, again, you're looking at 20 trades here, 17 winners and 3 losers total, but 15 winning trades that were short premium, collecting credit spreads out of 2 losers. So that kind of makes sense. The higher probability outcome, you can see most of the winning trades are going to be short option strategies. And you can go back in time as well if you want to go back, to wherever you want to go and go backwards in time and look at your closed positions. You can certainly do that. So it just gives you an idea, I think, overall where the higher probability outcome on collecting premium and using credit spreads, that's really going to be your bread and butter in a lot of market circumstances. And then we looked at the closed positions, and then we also looked at the open positions here. And now here's the best feature of all. Let me switch screens on you. We're gonna look at trade alerts, and these are integrated with your account. We saw how you do them with the dashboard there. You just, on your screen, touch accept or reject. This is what it looks like on your phone. You get a text message, and it's a link. Oh, I'm sorry. You'll get a text here and you'll touch that link. And it'll take you right to the alert page, and you get the same information that we just saw on the alert in the dashboard. This trade's got 66 days on it. It's another dragonfly. Here's your calls, there's your puts. Here's the expiration date, that purple line. See the current market trading here. Quantity of 7, and these are pre-sized for your account. Each trade is customized to you and your account, so keep that in mind, and you won't receive the same trades over and over, and the quantities are appropriate for the balance in your account. And you can change it. You can lower the quantity if you'd like, and you simply just touch accept if you want to place the trade, and our technology processes everything for you. So it's just that simple. And here's an example of a demo account just doing dragonflies. This account started, was it June or July, just doing dragonfly demos. And you can see kind of that higher probability outcome in this case, just accepting the dragonflies. You're making lots of base hits here, kind of a slow and steady approach with the dragonflies. So they've had 10 they've accepted here so far. So just an example of a demo account user accepting dragonflies. So with that said, here's how to get started with ThetaTrader. It includes the ThetaTrader software, which is everything you've seen, the risk thermal indicator, all the theta trades, the trade simulator. That software is valued at over $3,500. And then the trade alerts, that's all part of it too. So that technology that you saw with the dashboard and on your phone, and it does come to you via email as well, but your trade alert technology here, everything is live and integrated with your account. So those alerts, you don't have to do anything else. You just touch accept or reject, and that's all you have to do. And then once your order is filled, then the RTI can automatically manage that position for you. So valued at over $4,400. So everything we just talked about also includes private coaching. We're all licensed, we're experienced. We'll do screen sharing with you. I've looked online for private coaching cost anywhere from $5,000 to $15,000 for half a year to 12 months. So let's just say that private coaching easily valued at $10,000 to have someone who's licensed and doing this for decades. So that's all part of your ThetaTrader technology package and coaching package, over $18,000 value. And then of course, there's always more, right? There's always that bonus, but keep in mind, we do have our daily research, which is really just a 1 minute quick look. You don't have to spend hours getting paralyzed with analysis. We do have that futures and options masterclass video series there in ThetaTrader. I reviewed that just briefly a few minutes ago. So that's a great value as well. So you get all of that additional research and education, plus those online tutorials. That's all part of the ThetaTrader package. So you get everything, the software, the trade alerts, the coaching, the education and research, valued at over $21,000. So you get everything we just talked about. Of course, it's not going to be offered at that amount. We did used to do this ThetaTrader with live in-person seminars at events for $4,000, but of course, and then our retail price is $997 from the website, but we're going to do much, much better than that for you. This pre-Thanksgiving event, it's been a really big event, actually. It's a lot of fun listening to other people too. One payment of only $597, and that's a lifetime membership. So your link here, cf.altavest.com/TT, use the QR code. That's my direct phone number, my direct email if you have any questions. You can get it for free because if you have an account with us of $100,000 or more, we'll rebate that for you. And $50,000 or more, you get a 50% rebate on that membership fee. There's always a 30-day money-back guarantee on that membership, so you have no risk. If you like what you see, you're just not 100% sure, sign up anyway, get the discount before it expires, and I think you'll like it. But if something happens and you don't like it, just let us know. We'll refund that to you. And just to kind of end here with a few advantages to doing the E-minis. Well, it requires less capital, so they're affordable, they're flexible, they're highly liquid, and you can expand your trading strategies. So a lot of these strategies like the 6-leg dragonfly you can't do with securities, but in the E-minis you can. You don't have to choose from 6,000 different securities. We're following just 3 of the major stock indexes. I talked about liquidity. The E-mini S&P 500 contract, for example, the average daily dollar volume is 2.5 times greater than all ETFs in the world. So that means the options are also very liquid, 1.5 million, and that's of last year. I couldn't get the latest figure yet. I'm sure it's much higher. So it's a liquid market, and the CME group says that offers superior execution of a cost savings of $4 to $15 per contract versus SPX options. So you get those tight bid offer spreads is really what I'm referring to. And these are all covered spreads, no margin calls, no naked options. Also, there's no pattern day trading restrictions with futures options. So if you're day trading in securities, you have various restrictions and regulatory scrutiny. Your account falls below 25 grand, you're prohibited from making further day trades and so forth. There's tax efficiency in our space as well. So basically you get the treatment of the 60-40 treatment on your gains. 60% are taxed at the lower capital gains rate versus 40% at your personal rate. So that ends up being a huge tax savings. In this example, I don't want to go through all the details. We're kind of getting close to the end here, and I want to answer a few questions if you have any. But essentially you get tax efficiency, and there's no more itemizing. So for the sake of convenience, you get your 1099, it has your profit listed on there, and you just use that for your taxes. But of course, always consult your tax attorney or advisor. And here's one thing too, we can do IRAs, transfer an IRA to us. We work with Equity Trust. They've got 71 billion under management. We just did a presentation with them a couple months ago, so that was a lot of fun. But they'll also waive your setup fee. So that's a great benefit as well. And just as a reminder, we are a full service futures and options brokerage. So we can trade any market, not just what we talked about in Theta Trader. So we certainly have clients doing, gold and soybeans and whatever else, and currencies too. But to summarize Theta Trader, flexible strategies for any market condition, collection strategies for premium. It's convenient with the automation, and tax efficiency, those one-touch responsive trade alerts, and so on and so forth. So that's a lot of information, and I don't know if I have a chance, if there's any questions. I have maybe 1 or 2 minutes here. Let's take a look here. People ask about what size account. 10,000 is the minimum, but each Dragonfly on the E-mini S&P is about a $5,000 margin, so keep that in mind. And let's see what other else. If you're in Europe, let us know where you are exactly, if we can work with you or not. We always get that question. And what else is there? Let's see here. I'm going to take a look at the questions. Okay, I guess I don't see any other questions, but unless anyone has anything else, that will wrap it up for my presentation.
Well, thank you, Erik. That was really great. I appreciate it. Thank you for that detailed and insightful breakdown of automated options positioning. Erik's Black Friday special is posted in the chat now. I think that's a heck of a deal, a lifetime membership there for less than $1,000, like way less. Erik, wishing you a happy holiday season. Thank you so much.
Thank you, everyone. Thanks for having me. It's always fun. I think I'll stick around and listen to a few others too. Happy Thanksgiving.
Thanks. All right. Happy Thanksgiving. All right. Our next presenter is known for making trading simple, intuitive, and approachable. And today we have Marina, the trader chick Villatoro. Marina will show you how to understand market movement, optimize entries and targets with indicators, and identify breakout setups with clarity and confidence. So let's welcome Marina, the trader chick Villatoro.
Hello, hi, can you hear me?
Yes, we can hear you. Thank you.
Awesome, yeah, it was just transitioning and I lost you guys for half a second, but I am here. Thank you so much for having me again. I'm happy to be back here. I cannot believe it's the end of November. This is kind of mind-blowing. How's everybody doing on this? Well, I don't know if everybody here is from the States, because tomorrow is a pretty big, significant day, obviously Thanksgiving, but it's also when the markets are closed. So you get to rest no matter which part of the world you are in, even though the markets are open 24/7. A lot of times they are really slow on Thanksgiving Day, just overall. So where are you guys from? I would love to know. I see here there are some people from Asia. I've heard that some people from the States and Europe. So let me know where you guys are from. I would love to know. Canada, hi Barb. Thanksgiving in Canada passed, what, like 2 months ago, right? I think you guys are in September, October for Thanksgiving. All right, so let's dive in. October, yeah, I remember. All right, so today I want to talk about four steps to simplify your trading for the breakout trade. Breakout trades overall are probably some of the most powerful trades that you can take. And if you don't fully understand how to spot them, you'll be missing out on a lot of the breakouts, right? The cool thing about breakout trades is they're actually really simple to spot once you know what to spot. So today I'm going to show you those 4 easy steps that you'll be able to hop on and check them out. I am Marina, the Trader Chick. Hello, everybody. And today what I want to really focus on is understanding market movement. Because if you don't really understand how the market moves, it could be complicated to understand when there's a breakout and when there's a shift in direction, when there's a transition. Using indicators for best entries and profit targets, we will be talking about that as well. How to identify and profit from the breakout, and also how scalping can certainly help you become more of a confident trader and spot quick trades. So before we move on, quick official intro time. This is me. I am Marina, the Trader Chick, and I am an expat mama. I'm living in Barcelona, Spain. I've been an expat for almost 23 years at this point. Me and my family lived in Central America, Costa Rica, and Guatemala for 20 years. And 3 years ago, we moved to Barcelona. So it has been an incredible transition, one of the best decisiveness ever that we've done, any decisions that we have done. Before I was a trader, I was a fitness instructor. So why do I bring this up? Mainly because a lot of times people believe that they have to come from an engineering background, a math background, a software background, and usually that is definitely not the case. Usually you could come from any background. And the fact that I was a fitness instructor and also I'm a travel writer just goes to show that anyone can truly become a day trader. And I am still into travel writing because me and my family, we travel about 3 or 4 months out of the year. So trading is just a perfect way for people that want to live a nomadic digital lifestyle because you can do it from anywhere and any time. That is the beauty of day trading. I am trilingual. So the only reason why I am bringing up this, that I am trilingual, is because one thing that I've recognized when I started trading, it's been now almost 14 years that I am trading, I really struggled the first 2 years. And so I was born in the Soviet Union. We moved to the United States when I was really little. So I didn't actually learn a new language versus I just continued learning how to speak. So Russian was my first language, but English just kind of came into my life and I was fluent within probably like a few months. However, I did learn how to speak Spanish, and that was in my late 20s. And if anybody here is learning or has learned a second or even a third language, you know that there is a certain process, right? You have to commit to learning a new word or a new pattern, then you have to practice all the time. And one thing that I realized after about 2 years of trading unsuccessfully, I decided to look at it as if though I was learning a new language. And that's when it hit me that it really is another language. The market speaks to us. It is a language. And once we start to understand how to speak the market's language, we are going to be able to trade and work with the market as well. That is the absolute beauty of learning how to trade. Okay, hang on just 1 second here. I see that there is some questions. Okay, you guys could put your questions and anything else into the question bar, and I will definitely make sure to get to them. All right, so as I mentioned earlier with trading, you can do it from anywhere in the world. Today, there is no question about internet because there really isn't any issues with internet, right? We lived in Guatemala for years, never had any issues with internet. That's the gorgeous part about it all. So we can start by learning 4 basic strategies. Just like, imagine you getting into a car, right? When you get into a car, there are automatic things that you are doing now that you don't even think about. But at one point, it was a strategy. It was something that you learned, right? You have to turn on the car, you have to press on the brake, you have to press on the clutch before you do so. The gear shift has to be in neutral. If you want to take off, you need to release the brake and the clutch slowly so that you then put it into first gear, right? It sounds really complicated, but I'm sure that whomever is jumping into a car today doesn't even think about it, right? It's just so automatic. And this is what I want to teach you guys today, or show you guys today about the markets, that it can be as automatic and as simple. So before we go any further, I have the entire presentation for you guys. So go here and you can download it so you can follow along. And also, because we only get 40 minutes with you guys, that you will be able to go over it on your own time with a replay. So go to makingofaDaytrader.com, makingofaDaytrader.com, and you could grab the presentation for free and follow along and then use it for the replay. MakingofaDaytrader.com, you could instantly download it and follow along. All right, so let's get back to the basics and build your trading foundation. What are they? First of all, you guys need a chart. You need a software for your chart platforms, okay? It doesn't matter what chart platform you are using today. There are so many good ones. When I first began, there was only maybe, like 4. Today, there's quite a lot. The only thing I do recommend is whatever market you are trading, that's the one that you should be really focusing on as far as the charting platform. If you want to trade crypto, you certainly don't want to be on an equities platform. If you want to trade options, you don't want to be on a futures platform. So find the right platform that works for you, okay? And the indicators, guys, really good softwares have indicators. They have universal indicators. You do not need to buy indicators. The only people truly making money from indicators are the ones that are selling the indicators. It does not make you a better trader. All right, so once again, get the presentation completely for free. Download it right now, makingofaDaytrader.com. So let's jump in. What is market movement? What is this breakdown of a trend? Because technically we know that there are 3 trends. We know that there is an upward trend. We know that there is a downward trend. And logistically, we know that there is a sideways trend, correct? The thing is, if you look at your journals or whatever you are using to track and keep record of your trades, one thing you're going to spot is that the majority of your money gets lost in the sideways trend. All right, that is a fact. If you go back, you will notice that. Why? Because this I personally call the trader's greatest enemy. This is the sideways trend, the transition area, the consolidation area, the chop, the indecision zone, the exhaustion pattern. I don't care what you guys call it, but what we have to understand is that it is not a place for us to be in. And I want to talk about that today, because this is where I will show you how to stay out of really bad trades, and best of all, how to spot good trades when you are about to either have a breakout or transition into a new trend. So this happens often, right? We can have really strong trends going, and then boom, we get into a sideways trend, and then it could transition, or it could just completely continue on for the breakout. So before I show you even more, just a really quick kind of review. So it's an uptrend. Basically, it's every pivot is higher than the other pivot, right? Super simple stuff. Each pivot is higher than the other. This is what we call the bull market, the market going up, market trending up. This is where you are going to go for a buy. This is where you are going long. This is where you are going long. What does that mean? Super simple. You're entering at a low price point, exiting at a higher price point, and you're taking the money in between. You're taking that profit in between. You are going long. You are buying. Downward trend, the exact opposite. Each pivot is lower than the other pivot. And yes, we can make a lot of money on the downward trend, because if you understand where to enter the market, you could short it and do really well. So what exactly is a short? What does it mean going short, shorting the market, or selling? It literally means you are entering at a high price point and you are exiting at a lower price point, and you're taking the money in between. Super simple. Okay, don't overthink it, guys. And yes, traders make probably more money on the downward than they do on the upward, because it just runs faster going down. So don't be scared of shorting the market. All right, this is just the bear market trending down. Now let's jump in and talk about the consolidation areas and the transition areas, what I call a trader's worst enemy. Let's understand why this is such an important area and why we need to stay out of it. So it's the consolidation area. This is an exhaustion pattern. This is a place where the market loses all direction. Okay, it bounces in between two areas and it just goes flat. So why is it that we lose the majority of our money in this area? Day trading, overall, financial markets, is a very emotionally fueled activity, correct? We are high on emotion when we are in the markets, and even more so, I think almost probably comparable to Formula One drivers with the adrenaline pumping when our money is in the live market. So when we're on the live market, our adrenaline is pumping, and then we start to see that the market is going flat, right? So there's two types of traders. There is the trend is your friend kind of a trader, and they're looking at this market and they're saying to themselves, you know what? The market's been going up all day. I am going to continue going long. Or you could be the contrarian trader. You could be looking at the market as it's going up, and then you're saying to yourself, you know what? The market's been going up all day. It's going to correct. It has to correct. I'm going to short the market. The reality is neither of those two people are correct. Why? Because the market is flat. We have absolutely no idea what the market is going to do, right? We have no idea. Is it going to go up? Is it going to go down? All we do know is that it's flat and it's dead. And we, as the individual retail trader, have to be professionals. And what do professionals do? They sit out. They don't even go into this, okay? And this is really important because the majority of beginner traders or novice traders, amateur, aspiring, whatever you want to call it, they feel like they have to be in the market all the time. And even worse, they have this misconception that they could beat the market or outsmart the market, or even worse, predict what the market is going to do. Absolutely impossible. But when you start to read the market and look at it as its own language, it will start to speak to you. And it will start to tell you, you know what, this is definitely not the place for you. This is definitely not the time to enter. Or boom, look at this breakout. Look at this time for you to enter. So this is why we have to understand and stay out of these areas. And yes, of course, sometimes we are in it before we understand that this is an area and we lose money, but you also have to keep your emotions in check and not start to revenge trade. And revenge trading is a thing, and I'm certain that most of you guys have experienced it. I certainly have many times. So when you are in the market, you have to understand, boom, stay out. When you start to recognize that this is going to be a consolidation, a channeling market, get out. Save your money. Why? Because do you really want to be in a market this choppy, this uncertain, this weird? Absolutely not, right? So how do we know about these areas? How can we understand them? So the market respects areas, okay? It respects areas, and we, as again, the retail individual trader, has to respect those areas with the market. And what are those areas? They are the support and resistance areas. I actually like to call support and resistance areas as our seatbelts. This is our safety nets. So as a Formula One driver, right, when they get into a car, on top of having helmets and fireproof uniforms, they jump in and they put in 2, sometimes 3 seatbelts, right? Because they know the the chances of getting into a serious accident, it's really high, right? Interestingly enough, Formula One racers, during the race season, 25% of them have accidents or fatalities. 25%. Trading, 98% of the traders lose. So we need to put on our seatbelts. And I personally believe support and resistance areas, which are free on any chart, as long as you're using your drawing tool, can be recognized. You do not need to buy indicators, and they can truly save you so much money and help you understand when to get into the good trades. Because here's the reality, guys. Everybody can be selling you these alerts and these amazing indicators and all this stuff and chat rooms and all this, but when you're sitting there and you don't understand what is happening in front of you, you cannot be following somebody else's filter, right? Or what they're seeing, because after a while you will start to lose, and you will start to lose a lot because you are not understanding what's in front of you. So once you understand how to read the markets, you'll be understanding why those people are saying this is a good area to enter, right? You can't drive blindly. You cannot, I don't know if you've ever taken a driving classes. I remember when I was taking driver's ed, the teacher next to me, they actually had a brake pedal and an accelerator pedal on their side, right? So even though I was learning how to drive, they still had a lot of control. It wasn't until I sat on my own and totally drove was when I truly understood how to drive. I didn't have them to fall back on. So you need to understand what's happening in front of you. And when you understand support and resistance areas, you will be able to understand so many things. So what is a resistance area? Resistance area is when the market is going up and boom, it starts to hit a ceiling. It starts to hit an area 3 or 4 or more times. It is the ceiling of an area. So if you're going, it doesn't matter how fast and strong the trend is, but if it starts to hit that ceiling, you have no idea what it's going to do. You have no idea. So you cannot predict it. But what you do need to do is you need to draw in that area, and then you need to sit and wait until it either breaks that area with strength or completely transitions off of that area so that it's a new trend. Okay, what's a support area? It is the floor of the market. It is the exact same thing, but going downward. You have a strong downward trend or just going down, and boom, 1, 2, 3, it starts to hit that floor. That is the floor. That is the support area. Draw these areas in. Draw these areas in. They will protect you. There's actually a saying in the trading world that everything is to the left. I don't know if you've ever heard that, but basically when we say that, that means your chart, what you draw on your chart, how you understand what is happening on the chart. So when you enter, which is usually to the right because you are in the most recent price range, in the most recent price action, you could safely look to the left and understand why you just entered that trade. And this is when you stop being, praying and hoping that it's going to work out, and basically just realize, wait, I just made a valid decision because I understood what was in front of me. And that is exactly what we want to accomplish. So when we have a channeling market, we have strong support and we have strong resistance area. And when we draw them in, and you need to draw them in, it is really important to see the bounce in between, right? Because look at this grindy, ugly, choppy behavior. Would you ever enter this type of behavior? Never. Never enter, never put your hard-earned money into a market that looks this crappy and choppy, okay? This is not what you want to be in. And again, the majority of your money does get lost here, but that could be 100% avoidable once you are recognizing these areas, once you're respecting these areas, once you understand what is happening. And you could have really wide channels, because even so, look at this channel. There is no direction here. There's no real momentum, right? You don't want to be just guessing what's happening, because that is just a surefire way to lose. You might get lucky 1 or 2 times, but then after all, you will end up losing, and you'll end up losing big because you don't have a strategy. You're just going in, Okay, so this is really important. So please understand these areas, and I can guarantee that you will be saving yourself so much money. And on top of that, recognizing when good trades do start to happen. So a lot of times I get people asking me, all right, Marina, well, how do I even spot these areas before they become areas? How do I know? Because I end up losing money during, before or when I'm already in. So there are definitely ways that you could recognize when an area is starting to form, and even better, when the market is starting to lose strength. And for me, this is my most favorite way of recognizing it. And I call this the trader's map to shift in direction and trend. And also, in parentheses, I call it the holy grail of trading. So what are these? Reversal areas and divergences. What are reversal patterns? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. These areas are my absolute favorite. And you could, again, any platform, any market, if you start to read it, you'll be able to recognize these really simply. So is this 100% indication that the market is going to reverse? No, but it is a very high indication. However, what it is 100% telling you is that the market is losing its strength. You need to sit out because it could become a really strong area. It could go into a channel. It could transition and into a totally different direction of the trend. So this is a place where you need to start to understand and just sit out. And my favorite is divergence. To me, divergence is where the market is already starting to throw really big hints, telling you, slow down. Don't put your money in right now. There's a lot of weakness, a lot of uncertainty. Just sit it out. So what is divergence? I personally use two indicators. I use an EMA line, which is the red line right there. That is the exponential moving average, and the MACDs. So for me, the MACDs are the least lagging indicator, and I love them. I think that they are just a really helpful, easy to follow indicator. So what does a divergence in this mean? So if you look at my price action, the price action is moving in one direction, and my MACDs are moving in a completely different direction, right? That is obvious, a divergent area. So what does that tell me? It means that there is serious slowdown in the market, a lot of indecision, a lot of weakness. And I never want to put my money in to a market that has this kind of a movement, right? And when I spot a double bottom with divergence, that also makes me really see that there's a very high probability that it will completely shift. But I don't even put my money in until I actually see the shift happening. And as you can see here, it totally shifts. And as you can notice, my MACDs, if you look down, the black line is the zero line. This is where there's really little movement, and then there's divergence, and then boom, look at this, it flies up. And this is when I start to recognize when to enter the trades. Okay, so having reversal patterns with divergence, that is just the best, because it's just screaming to you, stop, I am about to go in a separate direction. So before we put it all together, once again, please go to Making of a Day Trader, get the entire presentation so you could review it on your own. You could also go and check out the replay. You'll have the time. So now let's talk about breakout areas and how to spot these areas. So what is a breakout? If you guys, here, I'm going to just give it to you in super easy layman's terms. Imagine that you live really south and your best friend lives really north, right? And you've driven to your friend's house a million times, and they call you up and they're like, hey, come over, I'm bored. You hop in your car and you start to drive north on the highway going to their house. But all of a sudden, there's a massive construction area and a detour, right? I don't know if you've ever been there, but a lot of times these detours, these construction sites, Waze or Google Maps do not work well there, right? Because they're not on top of the fact that there is a detour. So my mind goes into crazy mode. I'm already freaking out. Oh my gosh, what if they stop with the detour signs? What if I get lost here? I don't know where I am. Google is still telling me to continue on the highway. The highway is closed. I mean, I am in stress mode, right? I'm concerned. I'm in doubt. This is not a place that I would bet and say that I'm going to get to my friend's house from here straight, right? This is where I'd be like, I don't know where I'm going. I don't know what I'm doing. And then all of a sudden you see a construction worker say, all right, guys, all right, the highway's back to open. You could get on and continue. Boom, I am back in my comfort zone, right? I'm back on the highway knowing that it is good. That is the breakout. It is in the same direction when there is massive strength in the market going into the same direction as it originally was. All right, so this is how I spot my breakouts. So obviously you can see massive, massive resistance area. If you look at my MACDs, the majority of them are kind of around the 0 mark, which to me is really, really low in strength. And then all of a sudden, boom, it breaks out. And look at this massive movement way ahead of the MACDs. It's all the way up. And this is where now I am entering a breakout. And it's really not difficult to spot if you understand what you're looking at, right? I just drew in the resistance area. I'm looking at my MACDs. Boom, when it goes over, that's when I know to put in my order waiting. All right, so also another really cool bonus setup that I use a lot, I call it the initial reaction trade setup. So what happens is you could hit serious resistance or support regardless of where, it depends on how you're going. In this case, it's a resistance area. And all of a sudden, it didn't break out, but what it did was transition. And when you are now in a new trend, you want to get in as early as possible. Okay, why? I want to just give you another good example. For instance, if you are jogging, if you want, for instance, you want to go jogging, right? You are all excited to go jogging. You get your jogging clothes on, you put on your jogging shoes, you are out the door. Chances are, if I was to bet on you, I would be betting on you practically leaving that door that you're going to go for a mile or two, right? I don't know if I'm going to go and start betting on you when you're in mile 2 or 3, because you probably already like really low energy. I don't know where you're going to go. The trend is like that. When it changes direction after being in an area for a while, it is going to have the most amount of strength in the very beginning. So this is when you want to hop in as early as possible. And again, you have to mark off those areas. You have to understand when it's going down, when it's shifting direction. Okay? And this could all be done if you are just reading and listening to what the market is telling you. And that is the beauty of understanding what the market tells you. And it's quite simple. We have not once used any complicated indicator. I personally use 2 indicators overall that I use together. You could use whatever indicators you're using, but also just to understand what the market is telling you. All right, so here we have absolutely everything that we need to take action, right? We have everything, guys. We have these amazing summits. We have YouTube gurus. We have podcasts, books, you name it. But at the end of the day, how do you know that you are doing it right? How do you know that you are doing it right? Because all of this is great, but the real question you're probably asking yourself is, how do I get started? I don't even know how to get started, right? And I normally don't get this question from beginners, interestingly enough. I usually get this from seasoned traders who have been trading for a while, are still inconsistent, and they're asking me, what can I do to turn this around to be profitable consistently? This is a really important question. And funny enough, I am not exaggerating, guys. It's usually lacking the understanding of the basics. I have done so many of my different trainings and everything else, and I have found that the majority of classes and chat rooms and alerts and these gurus, they don't teach the basics, right? It's kind of like the example that I tell my friends that want to learn how to trade is a lot of these academies, what they do is you want to pretend you want to learn how to play the flute, right? You've never played the flute, but you want to learn how to play the flute, and you arrive to the music conservatory to play the flute, but instead of being taught how to hold the flute in your hand, how to blow, to get the sounds, you are automatically thrown into the symphonic pit and expected to play along with professional flautists, right? You're not going to do that. You need to understand the basics, right? The same as what I mentioned with the car. Remember how I made that analogy? Today we hop in, boom, we know where the ignition is, we know where the horn is, we know where the clutch and the gear shifts and all of that, right? It's nothing. We don't even think about it anymore. But when we first got into that car, we didn't know where a lot of this was. And we had to understand it, right? And now the basics are just there. But if we don't know how to use the basics, imagine not even knowing where the seatbelt is or what a seatbelt is. I know this sounds really far-fetched, but just imagine. Imagine somebody who's never been in a car before gets into the car and you say to them, all right, buckle up, buckle that seatbelt. It's going to save your life. And you're looking around and you don't know what a seatbelt is, but it's going to save your life because we're not born with this information. And a lot of the training that I had, and this was my own sad truth, I had spent over $20,000 on different trainings and I was not taught the basics. So much so that I struggled for years. And every time I was in different chat rooms or talking with different gurus and asking questions, please explain, what is this reversal pattern? What do you mean by support area? I was either ignored or treated as if though I was supposed to be born with this information. And we're not. None of us are born with any information. We need to learn it, right? And this is why I ended up losing almost $4,000 in 5 minutes. And it wasn't my first time. And this was already 2 years in, and I just felt like such a loser. I felt totally defeated. And I quit. I ended up quitting because I was frustrated. I felt like I was going nowhere. I was losing my family's money. I was wasting so much of my time. It was terrible. And you know what's really sad to me? That this is the only industry in the world where people normalize losing. I hear people say, well, I was just a little bit. Why would you lose anything? We are in this to earn money, not to be donating our money to the market. And all it is about is understanding basic things and practicing. But even when I quit, and I quit for about 4 or 5 months, I remember constantly watching others still. I was, it was like in the peripheral of my vision, I guess you could say. And I kept on saying to myself, you know what? If they could do it, so can I. And even though every single person here is bit by the trading bug, we all have one thing that helps us this to never stop itching. And you know what that is? We all know deep down inside that we can do this. We can do this, right? And that's exactly what I did. So I came back after 5 months. What I ended up doing though, I had 3 monitors. I had 3 monitors and 10 indicators. I literally donated 2 of my monitors and I removed all my indicators, went back to just naked price action and slowly put in my 2 indicators. And it's funny because several years ago, one of my students goes to me, he's like, Marina, your teaching philosophy is very similar to Coach John Wooden. And I never heard of Coach John Wooden before. So of course I go and look him up. And I mean, this man was incredible. He was a legendary basketball coach who brought his team to 88 national championships, 10 NCAAs. His entire teaching philosophy, when in doubt, get back to the basics. It didn't matter that these A-star basketball players were winning all the time because egos are strong. And every season he began with the basics. Tie up your shoe. Roll down your sock or roll up your sock, dribble the ball. He went to the basics because it doesn't matter how many you've won. If your shoe falls off or if you sprain your ankle, boom, you are out for the season. So tonight I have a very special offer for only the participants that are here today. It is my introductory course, bootcamp for day trading. And you can do this on any apparatus. You can do this on laptops, tablets, phones, desktops, you name it. And all of this one-time fee, bootcamp for daytrading.com. So before we go any further, I would like for you to go here into your navigator, and I want you to put in bootcamp for day trading. So one thing that I do recommend is when you do boot camp for day trading, if it doesn't open, you need to go in here and you will see that there is the HTTPS. You want to remove the S. So it's going to be http:// for the bootcamp for trading.com. All right. I don't know why the S, something's wrong. Like Google just keeps on changing things. If you're in the Google Navigator, if you're not Google, you won't have any issues at all. So just go here, bootcamp for daytrading.com, and it will take you to this form right here, and you can follow along. So what are you guys going to be getting for $97? First of all, what can you get for $97 today? Do you guys like to play golf? Well, I'll tell you one thing, golf, if you even find any place for, I don't know, like $200, that's a pretty amazing thing. How about going out and taking your family out to eat? Me and my husband went out to eat the other day. Lunch with wine was more than 97 euros. So you don't get that much, but let me tell you what you are going to get with me right here, because it's going to be amazing. Let me break this down for you. First of all, you're going to get a simplified day trading package and a 30-minute pro platform setup tutorial. Why is that important? Because I know that a lot of people are really concerned about setting up the platform. We don't have to worry about that. You'll pass it through and boom, we will start to have fun how to trade. All right, then we go into the market anatomy process, dissecting the markets, uptrend, sideways trend, downwards trend, the magic telltale signs, the reversal patterns, and the divergences. We go into this, all of it deeply, so that you fully understand, because the reversal patterns, those telltale signs, they are incredible. And the seatbelts, right? The leverage that we really need, or how to hedge ourselves through support and resistance areas, and the market shifts, divergences. I love divergences, but if you don't know what you're looking for, you're going to miss the divergence, right? It's really, really important. Then we're going to we're going to break out mastery, right? We're going to master the breakout, the power of the breakout. All right. How to spot the breakouts, how to avoid the breakout, the fake out breakouts. Those are real. Those are real. All right. And we can totally avoid them. So this is all that we're going to be going over in this course, and you will have unlimited access to this curriculum. All of this valued at $1,600. All of this you guys will be getting. But before we continue, I just want to do a really quick show of all my students. Like I said, I have students from all over the world, which is amazing because you guys could trade from anywhere in the world. And here's what Michelle had to say. I just finished the boot camp. Best money ever spent. Derek, you're the only mentor I know that truly checks the work. And Adrian, I'm truly enjoying the boot camp, learning every day. So before we move on, I just want to remind you, do you remember what I asked before that I find so, so important? Remember I asked, how do you know if you're doing it right? How do you know if you are doing it right? So for me, without accountability, without somebody to really find out if I'm doing it right, was a real bottleneck. It was a real problem for me. And that's what I want to offer you guys, is mentorship. You guys will have me for one entire month, unlimited questions. You could send me all your charts, ask me questions. I will be here for you. And I am including this for 1 month in the one-time $97 price. One-time $97 price, because I know with a mentor, you will get to that next level. So I am offering all of that for you. And on top of that, we have a live trade room that you will work with me once we really understand what is happening in the market, to be able to implement it and see the real trades and take real trades. All of this valued at $2,600. You guys get it for $97. So let's remember, bootcampfordaytrading.com. Go here, bootcampfordaytrading.com. This is the order form right here. All right. So when you go here, when you get to this bootcamp for day trading order form, you'll see it's $97. If you want to do a payment plan, you can for $59, but you automatically will get access to everything. And we can start to work together. And I understand that it's holiday season, right? So if you want to put it off until next year, no problem to take advantage of this price. I usually charge $297 for this particular boot camp, but you do not get any work with me at all. So this, you are not only getting this for $97, 60% off, but you also get to work with me. So what are we going to get? Everything that I just said in the course, 30 days one-on-one mentorship with me, and a 30 days live chat room membership. All right. All of this cost will be 10x on your investment so that you guys could go out to 100 of these dinners. However, what's really important, I see that this is a full room, and I'm actually so grateful you guys came. The thing is, I do sell out really fast because, you know, for 97 bucks, you can't go wrong, especially the fact that we work together for 1 month. I sell out quickly. So 25 spots only because of my mentorship. So I'm just letting you know that, you know, if you want to get on it quickly right now, and then we could easily start next year for the mentorship, but you'll have access to everything for life. Okay, so let's go here right now. And let me just see, there might be something else here. So go to bootcamp. Hang on a second here. Bootcamp for daytrading.com. You guys could go to this order form right here. As you can see, everything that I just talked about, understanding the market movements, the anatomy of the market, understanding reversal patterns, and the breakout trades, really mastering the breakout trades. If you guys have any questions, please let me know. And thank you so much for being here and taking your time out. I really truly appreciate your time. And thank you.
Hey,
And thank you, Anthony,
Marina.
for having me and hosting.
Hey, thanks for being here today. We really appreciate it. We always appreciate your energy as well. So
Thank you.
thank you for being so tremendously clear and practical guidance on breakout trading. Her Black Friday special is now in the chat. Marina, wishing you and your family a very blessed holiday season. Thanks again.
You too. Thank you. And thanks, everybody. Have a great holiday season. See you in 2026.
Sounds great. Thank you, Marina. Our next presenter, oh, sorry. Our next presenter is a longtime market veteran known for his clean, chart-driven decision-making, and I'm talking about Oscar Carboni of Omni Trading Academy. Oscar will show you how to read the markets directly from the charts, cutting through noise, bias, and outside opinion. Please welcome the great Oscar Carboni from Omni Trading Academy. We can see you, but we can't hear you yet. Oh, Oscar, we still can't hear you. I'm sorry.
How about now?
Now we can. Now we can.
Right.
Yeah.
So thank you for the invitation. Love doing these. It's such a great thing that we get to help traders around the world. And for you traders out there that are sitting here the day before a holiday, giving us your time, thank you for that, because I know you could be doing something else. So that's tremendous. We really appreciate the fact that you're here. Good morning, good afternoon, good evening, traders. I'm Oscar Carboni, and I've been, messing with markets trading since I'm an 18-year-old down on the exchanges in Manhattan and in Chicago. And, here's what I can say. Well, two things I'll say to you right away. One, I promise I won't sell you anything today. I promise. You won't hear a word about buying anything from me. Two, I do not have a pretty PowerPoint for you guys, but here's what I have for you traders. I am an expert at calling markets. In fact, I have to say, when I first started Traders Corner, I said to them, listen, you don't know who I am. I am the best of the best of the best out there from Wall Street, from reading charts. I can read charts better than anyone. And I have to say, Traders Corner said, well, Oscar, that's a little bit of a, it's a little grandiose. I don't know about that. Let me ask you, since I've been doing these webinars for you, what do you think about that statement? I know you guys at Traders Corner must recognize it. So, I said to them, I promise I'll do a good job. And since then, they've been inviting me, and there's a reason for that. What I can do with the chart is something I've never seen anyone else do in my entire 43 years. I can take the news from the charts, and extrapolate that and turn it into where to get in, where to get out, and where to place your stop, which goes in first if you get something wrong. So I've been showing people since the 1980s that the news is in the charts first. You can get it all from the charts. You do not have to be following fundamentals and wait for a report to come out. It's all based on the geometry that's already on those charts. I'm going to show you just how accurate that geometry can be. I will say I have nothing to sell you, but I can offer you this. If you like what you see by the end of this presentation, you can go to livewithoscar.com and hang out with me. There are no credit cards required. There is no price for this. You would simply click register. You put in a little bit of information. It shoots off an email, which will go to your spam. Unspam it, come back. The next thing that happens is you're logged in. You go to Oscar's chat room, and you will be able to do something like people around the world do with me every day. And that is hang out in my live trading room. In fact, I am there right now waving to you while I'm doing this presentation. I am still live in my trading room. It's absolutely free. Dano at Live with Oscar is in there now. It will cost you nothing to hang out with me. If you like what you see during this presentation, make sure you come hang out with me. So after reviewing emails, comments, you name it, looking through my YouTube, gathering up the information I can get from the last few days, once again, like the last webinar I did, the most asked question of me was, Oscar, in your webinar, can you tell us, will we still make E-mini S&P 7,512 year-end call that the Omni posted in the beginning of this year? And will Jerome Powell lower rates in December? That is the news that's out right now. And we are going to prove that the news is in the charts and that Powell will be raising rates and that there's a very strong chance that 75.12 is on the docket. I hope many of you make some sound money-making positions, possibly, or at least decisions based on this presentation. Remember, you can find me in my free live trading room. It's open to the public for all. Let's go on a hunt and see for ourselves exactly what we've got going on. Will Jerome Powell lower rates? Being forced to, but he's doing it. Well, I shouldn't say forced to. We'll talk about that at another time. And will we make our call? So right off the bat, I want to show you some fantastic charts that should help us get there. This is the Russell 2000 daily bar chart. The Russell 2000 has been leading the indices for the last 3 weeks down since Powell came out and said, no need to repeat what he said because we don't want the markets to ever drop again. But Powell came out and he Powellized the markets by saying something that he shouldn't have said. And the markets immediately reacted and Russell was the leader. And what got scary was Russell got below my Omni Trading Academy's proprietary moving average, got below OTAPMA. And I went, whoa, what is going on? But it got below OTAPMA, grabbed its footing, got back above, is now above this channel, which I'll darken in for you, and you'll see where we're going with this. Check this out, and let's give it a color. It's above the channel. It broke out, it held, got above OTAPMA, broke out above the channel. New highs are coming our way. It's now leading the parade back up. But there are other charts that we're going to have to look at, of course, to see exactly where we should go and why. But so far, the Omni Trading Academy's proprietary moving average has been instrumental in showing us what's going to happen for the end of the year. So there's your Russell 2000. The next chart I'd like to share with you is your NASDAQ chart. Your NASDAQ daily bar did the same thing, right? Broke below OTAPMA for 2 days only, 1, 2. Got right back above and is now following Russell above this channel. And believe me, we wanted to see that. Russell leading the way, is above the channel. As of today, this is live data. Now, so is NASDAQ. Fantastic, right? Because we need to get to 75.12 in the next 5 weeks. So far, so good. And traders, I put out YouTube videos just about every night. I've got 2,999 videos out. My 3,000th will be published on Friday or Saturday morning. In those videos, I explain on a Monday, or let's go to a Sunday afternoon, I explain what's going to happen in the markets Sunday night through Monday and how you can profit and or hopefully not lose from it. Then I put out another video on Monday for Tuesday, and we do this every day since 2006. There are people all over the world that will not even get into a position unless they've seen my video. I kid you not, or at least have come to the site to speak to me, because after all these years of me showing this to people, there's a lot of them out there that recognize that charting is the best roadmap. There is nothing better than the roadmap you're looking at now to figuring out future pricing. I promise you the chart is better than anyone. It is better than calling the CEO of Goldman Sachs to ask him a question, because I'll show you when we get to a certain chart that even the CEOs of Goldman Sachs, Morgan Stanley, that lunatic Kramer, and everybody else from Wall Street that chatters were completely wrong on TV, chattering about wrong in April this year when the tariffs came out. And we'll get to that, and you'll understand why charts are so much smarter than humans, and certainly calling someone for information. The charts always tell you what's coming next. And of course, I've been appraising and advising my traders every day throughout this year and every year for the past 40 what to do next. So NASDAQ certainly showing us that Russell isn't kidding around. S&P E-mini, look at this guy. The S&P has now not only held Otama and broke out, but it is also, as of today, just starting to pierce above this channel. And this channel shows up on every indices chart. And I promise you this, I grew up on Wall Street since I'm 18. They're looking at that channel. I promise. It's called geometry. They see it. They know we're getting above it. The buys are going to come in like crazy. Wall Street watches this stuff. It's called simple geometry. So Otama to the rescue. Look what happens here. Forget the channel. We get under Otama, right back up. And now that we are above the channel, we are aiming for new highs for the year. But we haven't seen enough proof to know this for sure. So we'll continue looking at other charts. Let's see what else fits this really well. Look at the Dow, the YM. It has taken the lead from the Russ. Why? Well, if we go back to Russell, look. Russell was leading all the way up until 2 days ago. Now there's a new leader, and any of you managers that understand how to follow the smart money will understand why I follow the leaders. Russell was leading the parade as it jumped out above Otama day 1, day 2, day 3, and got above the channel. It was leading the parade, and it definitely led the parade down. But look at what's happening now. The stock market, the Dow itself, is taking charge. It's taking the lead. How do we know that? Because we are 1, 2, 3, 4 days above Otama right now. 4. It is the only indice that's out above the average for 4 days. And if you had to draw that wacky channel, look at when it got out of that channel. Channel's different, but still exists, and look where we are now. I promise you, Wall Street's got their eyes on this. They use simplistic analysis. They do not get complicated. There are complicated quants. There are complicated funds out there. There are all sorts of complicated things they put together, algorithms. But I promise you, when they're doing analysis, put those algorithms off to the side. They're using simple geometry to see what comes next, as you are learning from me. So we are above the channel. We're back in this major channel, which you didn't even notice on all the other charts I just showed you, but they're all there as well. We're now back inside this major channel. And if you want to know if it's major or not, just look at the highs and lows that has held. Major channel, we get back above Otama, back in that channel. My Omni, Oscar's market navigational indicator, is bright green. But here's what I'll tell you. A lot of traders out there, last Thursday, Friday, even over the weekend, we're talking about so much downside. On Saturday into Sunday, I put out all sorts of messages all over social networking and then did a video. You know what that video said? This week, get long everything. You can get long metals, you can get long indices, which S&P, NASDAQ, Rush, you name it. You can get long crypto. we put those messages out on Sunday because the Omni flip. Look at what has happened since Sunday. And it's everywhere I just mentioned to you. The Omni just rocks. Oscar's market navigational indicator, it just rocks. Ask any of the thousands of Omniacs that hang out with me. It's telling us way more upside coming. So the YM is now beginning to take the lead away from Russell, which is a very good thing because the YM is a representation of the Dow. And whether it's the leader or not at this moment in time, the Dow, you speak to anyone around the planet and they think our stock market is the Dow. So there's a lot of mentality built into watching that Dow, especially if you're not from this country. So the Dow is starting to take the lead, and that's a very interesting thing we're starting to see. What else? Here's something even more amazing. Look at this. Now, in this chart, there's a couple of Omni lessons that I rarely teach unless you're at Omni Camp, but we're here, and let's do them. Dow Transportation Average. Lesson 1, the transportation average has been the leader since the market was created. If you do not believe me, ask Charles Dow. The transportation average is the overall leader of all indexes. Charles Dow has that in his theory. I have researched it for 43 out of my 43 years, and I promise it's absolute. Lesson 1, when I talk about in OmniCamp, one of the lessons is you need to know that the transportation average is absolutely unequivocally the leader of our indices. If you're trading Dow, S&P, NASDAQ, Russell, any of that, the transportation average is the leader. However, not always. You need to be watching who's doing the rotation, where the smart money's going. It all comes off the chart, by the way. I don't use any fundamentals for that at all. I can see it in the chart. Now, the transportation average has always been the leader. If any of you are listening, think to yourselves, why? Could you answer the question why to yourselves? Because I'll answer it for you. Why is the transportation average of all things the leader of our markets? Well, if you own a factory, if you own a store, if you create a product, if you do anything at all with a physical product, you need to get raw materials shipped to your factory to build it. Then you need to take that product that you built, widget, you name it, you need to ship it to a warehouse or ship it to a distribution center, or Amazon's going to get a message that some customer wants it and it's going to get shipped to that customer. So when you're building inventory and you're not selling, the factory is building with inventory and not a lot of transportation. The transportation average starts to go down. It tells us we're not doing so much business. We're going to start to move down. When business activity picks up and you start getting orders for next week, next month, next year, we need 8,000 widgets, we need 7,000 widgets, things start moving rapidly. Supplies go to the factory builds, they move them out. The transportation average knows, it always knows. It is the leader, not every day, but is abstract overall the leader of US indices. And if you can follow that properly, you will do much better. Lesson 1 that you would learn if you were at OmniCamp. Lesson 2, you can pick up just about any book ever written from when I started. The stuff I wrote, the stuff I read was written long before I started. There was stuff written when I started. There was stuff written after I started. You can take any one of those books and you open it up to a section that says triple top, and what it'll tell you is the triple top means the top of the market is in, and now get ready for a bear market. That's everywhere. That's what they think. Authors of books, CEOs of trading companies, I promise you, they are absolutely incorrect. Another lesson I teach at OmniCamp, any of my Omni campers have seen this for themselves. The Oscarism version of a triple top is different. What happens to the Oscarism version of a triple top is you go top 1, top 2, top 3, a brief dip, and then new highs. Here's your brief dip, and here's your new high. It already happened. I had this set up before today's ball was there. There wasn't even a new high. I was going to get to show it to you before it got there, but it got there today. That is an Oscarism. That's the way this works. Why would I know better than so many of the books written? Because I'll have to tell you right now, many of the people who wrote books did not stand in the damn trading pit and trade 500 to 1,000 times a day, every day of their lives for 35 years. And here's what you can do when you do that. You can take this rule and go, hey, let me see if this rule works in trading. I can do that 500, 1,000, 1,500 times in week 1 of testing in real time with real money. And then I can take the rule and scratch it off or put it on my list of rules that work. That's the guy that you're learning from. I have used my own money to test this crap out since the 80s. This Omni system, the Oscars Market Navigational Indicator, has been working since 1986. It has made the most tremendous calls anyone has ever seen. If you're following me, if you follow my videos, I am not just shocked, I don't even know how to understand how accurate it's been for the course of 40 years. I've never seen anything last more than 5 years in my entire 43, 44 years of trading. I've never seen a program last more than 5 years. By the time you build it and test it and put money in it, you're 3 years deep, you run it for 2 years, it stops working because the market changes complexion and the system sort of blows up. I don't know anyone that's got a system longer than 5 years. This Omni has been working with us since the 80s. Why? We don't tweak parameters, we don't change anything, and we don't use anything fancy. We are simple. We bring simplistic analysis to a very complicated industry, and that helps us see clearly. When you take a complicated system into a complicated industry like trading, you are overcomplicating things, you are going to lose your money. When you get simple and understand geometry, you will do so much better. So the transportation average is leading, and if that's the case, we've already made new highs, which tells us that S&P is going to make a new high, that NASDAQ is going to make a new high, and the Russell is going to make a new high, and we are going to get to 75.12, but we'll see what happens. Let's keep moving along. We need more proof, though. So what else would show us? Does anybody know how to look at 30-year T-bonds? Anybody out there understand what happens with 30-year T-bonds? These are your 30-year T-bond daily bars. When bonds are going down, like in the past, when bonds were going down, interest rates go up automatically. Automatically, Jerome Powell doesn't have to say a word. He doesn't even have to convene a meeting. Here's how this works. Interest rates, let's call this a seesaw, a teeter-totter. It's out in the park. You've got bond futures on one side. You've got interest rates on the other. When bond futures go up, it automatically lowers interest rates, automatically, without the Fed saying a word. This is how our economy works. When bonds go higher, rates go lower, automatically, without the Fed saying a word. Of course, if bonds went lower, rates would go higher, automatically, without the Fed saying a word. Well, the case we're in right now is bonds are going higher, and we are 12, 13 days away from a Fed meeting. That tells me while bonds go higher, interest rates go lower. That tells us that Powell will lower rates. The market is telling us that. Why? Because the market is going higher. It's holding fantastic averages and moving higher. If it's going higher, it's indicating to us the fundamental, which always comes out in the charts first. The fundamental is Jerome Powell will lower rates at the next meeting. The bonds are telling you. The charts are telling you that. Absolute. That's what they're screaming right now. And I want to make sure that you see that for yourself. So let's go look at another chart. Let's see. I think I've got this guy waiting for us. Yes. All right. Will we reach 75.12? The answer is a resounding yes, we should get there. Why? Well, looking at this weekly chart, the weekly chart had one falter. When? During tariffs. That was about it. It's the only time we got below this average. It was the only time there was any downside. As soon as we got back in the saddle, the rally began. We did a test 1 week ago, held. We are off to the races. We are going for new highs. That is happening. If you're short, you're wrong. This is happening before your eyes. Be careful. So what else is out there. Oh yes, check this out, kids. Oh, I'm gonna love looking at this. Look at the Omni trading token. I love you guys, you Omniacs, you fans from Pump. Look what you've done. So we had a bull flag, which I clearly painted for everybody before the breakout, which ran into a breakout right there. Boom. Rallied up, created a channel, another breakout, and we are making fantastic highs right now. That is all of you out there, Omniacs. Yes, I'm there to support you. You know that. I'm always there to support you, but that is you. In fact, with that in mind, if you are not long the Omni token yet, you're not paying attention. There's a worldwide Omni community. I am at the top of that community. I will not sell anything. I just buy. I'm helping you guys. We're taking this higher slowly and organically. We've created a liquidity pool. We've got all sorts of websites that we're building out right now specifically for this coin. An ebook is about to be dropped for this coin. We are going to go on a huge campaign. And before we even get there, look at all the Omniacs that are filing in. Omniacs, continue to do what you're doing. Hop in. I did mention about 5 days ago that my Omni token is priced in Solana. Every time you buy an Omni token, you have bought Solana for it first. It is not a shit coin created by nothing. Every dime in that coin is real money, bought cash, Solana purchase with cash, then you can buy my Omni. Here's what I told people about 5 days ago. I said, listen, crypto has had a bit of a drop for the last week and my Omni token maintained. Solana dropped dramatically. Now, guess what? We've got a cushion between Solana and my token. As soon as Solana goes up, my token has to go up inherently, like the bonds and interest rates. Look what's happened in the last 5 days, right before your eyes. Are we not good at analysis? That's technical analysis that has nothing to do with anything more than straightforward technical analysis. It even works in crypto, which of course you will see more of. Let's go here now. Check this chart out. Now let's move to the metals fans, because the Omni did tell us crypto you could purchase, indices you could purchase, don't sell the metals anymore. That was 2 days ago. Now we've got another picture. So let me show you gold. Daily bar in gold. I'm in Australia a couple of weeks ago hosting an Omni camp, and I'm listening to stuff coming across the wire, and what I hear is some of the biggest guys on the internet and some of the biggest owners of companies out there that trade came out and said the top is in silver and gold when we were here. And I'm in Australia, and I do my analysis, and I immediately, after doing my analysis, I do a video and said, hold on, why would people come out right now and call the top in gold? I promise you, technically, it's not there. If you all do me a favor and don't listen to those guys, they have bigger crowds than me, they have bigger reputations than me, but I promise you, they're not as good as analysis as me. Don't listen to them right here. They're wrong. Uncle Oscar, I promise you, Uncle Oscar will tell you when the top comes in. Just wait for my top call. And this is what happens next. They're wrong, stupidly wrong. It explodes, and we come out with the Omni top call right here, right there. What more could anybody ask? Right there, video goes out, live as it happens. We're here now. Now you can call top. We've identified top. Those crazies that were calling top didn't understand how to look at a chart properly. So I call the top and it cracks. Boom. Then it rallies back up and I make a second short call and it cracks again. Can you ask for more? I'll show you why that second short call was made in a moment. Now Omni's gone bullish. Now we're looking for more upside again, especially if we get past that high. You get past that high, it will go gangbusters. What else is there for us to look at? Check this out. When we identified the top in gold, we also called for a left shoulder head, right shoulder formation. We only had the left shoulder and the head. We didn't have the right shoulder yet, but we said we have the left shoulder and the head, the top's in. Well, the market did drop into a right shoulder, went up and did something called the Oscarism, another Oscarism, by the way, the failed head test. You can pick up 100 books about head and shoulders. They're just written incorrectly. They tell you there's a neckline. It doesn't even exist. There's no such thing on a head and shoulders. It's not a head and shoulders. In any event, we won't go there. So the stuff that's written in books is wrong. I promise I'll show you how to handle a head and shoulders. When you come out of the bottom of the right shoulder, it will rally up and it will try to get somewhere between the middle to the top of the head. If it fails, it is an Oscarism called the failed head test, and down you will go. So I do this exact exercise live on camera, and what does it do? Boom, as we expected. That is using technical analysis, not listening to crazies who run out there and make a call because they want their reputation to be enhanced a little by making the call before it happens. I wait for the chart to tell me. I would never make a call based on what I think. I am a crazy human like the rest of us. How could I know? But the charts know much, much better. Look at silver. Look at the silver chart. Since the double top, we have broken down, reached the spot where Omni then went green, and it's been taking back off since Omni went green right here. And it's a green arrow since Omni has just been all over these metals. By the way, I grew up in the metals pits. When I started at 18 years old, I was in the silver and gold pits. I am so attached to silver and gold that from when I was a kid till this day, I keep a silver and gold, a Krugerrand, and a silver dollar in my pocket because I've had them since I was a gold and silver trader. And an interesting thing, when I put this in my pocket, it was worth $275. It's called Krugerrand. When I put this in my pocket, it was worth $17. 43 years later, this is worth $4,000. This barely got past the 20s. Silver's been such a dog. I get that it's up there 50 now, but it's such a dog compared to gold. It's been that way its entire life. But I've always kept those coins on me. Hey, wherever I go, it's got a few grand in my pocket, right? So that's silver. Now let's go look at something else interesting. Want to see what else the Omni was capable of doing? When Bitcoin came out, traders said, well, Oscar, you're good with market. And I said, what is the difference? Bitcoin is another sector. It means nothing more to me than another new market to trade, except for I get to watch the chart from the second it was born. There are no tick data before me watching, right? It came out while I was a full-fledged trader. And guess what I got to do? We were trading at $9,000 in Bitcoin, and I gave out a target for 21,000, put it on my whiteboard, which I do in every year. I put a target on my whiteboard. It stays on my whiteboard without getting erased for the entire year. I never take it off the whiteboard. If we don't hit the target, we'll discuss it. It'll be removed. That hasn't happened. We hit the target. So on my whiteboard, I put a $21,000 target on Bitcoin. We hit the target. Next target I put was a $35,000 target on Bitcoin. We hit the target. Next, I put an $85,000 target on Bitcoin. We hit the target. Not only do we hit the targets, but I give a time frame when we'll get there. Then I gave out 94.2, we hit. I gave out 102, we hit those both here and here. The beginning of last year, I gave out a 2-year target. No, it was this year. I gave out a target and I said Bitcoin will hit 126 this year. This is our target. Not only did it get above my 121, which was an interim target that we offered, it hit 126, and look what happened since. Now, is that not magical? Who can do that? I gave out that target 2 years ago, a year ago, this year, and it's still sitting on my whiteboard right now, just like my year-end target for 75.12. That was given out when the market was trading at 48.32 and crashing. And so far, it has been proven to be right. But that's not the only thing about Bitcoin. That's just to show you that Bitcoin works well with charts. Let me show you what's going on with Bitcoin closer, top day. Bitcoin had the same fate as gold, had big head and shoulders, then slid off into a channel, and we called for 80,200, and guess what we hit? 80,400 right there at the low, right here, boom. And now Omni's gone bullish. And it's a wonderful thing. Why? Because I was doing videos every night and telling traders, here's what you should be doing. You should be buying it here and buying it here. And if it breaks out, buy it again there. What did I do? I bought it here, I bought it here, and I bought it again there. Because why not? It's what the market's telling, it's what the charts are telling us to do. So that's what Bitcoin looks like. And then there's something else I'd like to show you, which is really interesting. A little gift almost. Check this out. Let's go here. Look at Tesla. Look at this. This is almost psychotic. Look at the way Tesla and my Omni, the Otapma. I mean, What were they meant for one another? Are they married? What goes on here? Look at this. This is almost a gift to you traders. If you're trading Tesla and you don't understand where you should get in, when it makes dips, just look at that picture. You could not have lost money for an entire year almost using this. It works really, really well. And I promise you, Wall Street's paying attention to stuff like that. So we're going to go back here for a moment. Let's just take a look at this. Remember that we should get to 75.12. We're starting to blast off now in the E-mini S&P, but there's an anatomy behind why we should get there. Let me see if I can show you a little bit of it. Traders, here's a chart, a very interesting chart, because none of this existed on the chart. From the day Powell stopped lowering rates, the last time he said he wasn't going to lower rates anymore, we were in February of this year. The market started to go down. This is a weekly chart. Went down 1 week, went down a second week, and I did something. I came out with a projection. And I said, we have a projected target now. Being that Powell stopped lowering rates, we're going to drop. We're going to get down somewhere between 49.75 and 47.75 where we should get in. The market drops. Why? Because Trump comes out with tariffs. That made things worse, right? The market goes right to my targeted area and then explodes and just takes off towards my 75.12 call. Now, the targets were there before the tariffs were announced. The tariffs came out, and I came out on a Sunday night because on Friday, CEOs were saying that Trump is going to lower tariff. Trump is going to raise tariffs. He's going to send the market into first a big crash, then we're going to be steeped in a recession. And Morgan Stanley CEO came out and said it. Goldman Sachs, Kramer, the same three guys I'm mentioning again, they all came out and said, because Trump raised tariffs, we're going to not only crash, we're going into a recession. This was on a Friday. I came out on a Sunday before the markets opened with this. Do not get out of stocks. Don't listen. Tariffs will be announced. Please stay calm. We've got a target. Get in when you get to that target. We hit that target, and look what we've done since. There is no way that was an accident. There is no way you could have found another human standing out in front of a camera after tariffs was announced calling for the upside, but the Omni. The Omni said we're going to 75.12. When that happened, we were at 48.32. Now where are we? We're at 69.5, and we got 735-ish more points to go in 5 weeks to reach my Omni level. Will we get there? Absolutely. So that's the question I wanted to answer for you Omniacs. I wanted to show you what's going on, where we should go, and do not listen to traders out there that just speak, that get on TV. You put on channels and they only talk about nonsense that doesn't come off the chart. If it comes off the chart, I understand it, I believe it, I am part of it, I'll go for it. If it doesn't come off the chart, you know, I'm a religious guy. My kids went to Catholic school. I was an altar boy when I was a child. My daughter sang in the church choir for 15 years. And there's one instance on this planet that I would deny the church. You know what it would be? If Jesus Christ sat down right on the stool right next to me right now, sat next to me, put his leg against mine and went, Oscar, you should go get long the S&P. You know what I would tell him? Jesus, there isn't another arena on this planet. I wouldn't just take your word. But in this arena, you either show it to me on a chart or move on over, buddy, because I don't want to hear your nonsense. I wouldn't listen to anyone's anything but that chart. I don't call Uncle Bill. I don't see what the news is saying. I don't call the CEO of a company. The chart tells me what to tell you, tells me what to trade, and that is what I live on and believe in, and I am a master at this, and I can help you in 1,000 ways, but you'd have to go to livewithoscar.com and register for free and hang out with me in my live trading room. Now, I also do sessions. They're called Omni Camps. Those Omni Camps, I invite 3, 4 traders, 2, 5 the most, to my home office where we spend 4 full days and nights, and I teach them the Omni method. Then we do this over the weekend. Then on Monday, I have them prove to me in real-time markets that not only did they learn the Omni, but that they can produce the Omni with winning trades on Monday. And I tell them, you are not going home Monday. If you fail to show me winning trades Monday, I will kidnap you and hold you in Vegas through Tuesday, because you don't leave until you show me that the Omni I taught you, you can now make money with. So that's about the only thing I will guarantee you is if you want to come out to one of my Omni camps, omnibootcamp.com. I'm not here to sell you anything, but if you want to come out to one of my Omni camps, you go to livewithoscar.com, go to my live trading room, get to know me. Maybe you will be invited to my home office where I can teach you how to come up with tomorrow's high, low, where to place the trades, how to get in and out. And if you do lose, how to lose correctly, how to behave like a professional, where to put the stop in, put that stop in first so that you're never exposed. We can teach you all kinds of great things, and it's not going to cost you anything. You just need to go to livewithoscar.com. Be brave enough to hang out with me in my live trading room. See what I'm doing with you right now? This is how I live my life, except for it's not being recorded and it's not Traders Corner. It's just me being me, and you are all invited to come hang out with me. I can't tell you we're looking at charts 24 hours a day. It should be called Live with Oscar, because we live the markets, we live together in this live trading room with camera and microphone on. Now the camera and microphone only gets broadcast from my end because I don't want to know what you're wearing at 3:30 in the morning. I don't want to see you. You'll know I'll be in my smock, I'll be ready to go. I don't know what you're going to be doing. So we only broadcast out, but you can write to me, I can speak to you. It's a two-way, and it really, really helps the traders around the world. We'd love to have you show up at livewithoscar.com and join that free room. And barring that, let me say this to you, traders, this is my motto, and please use it every day of your lives, because I promise it will help you. And this is what it is. And most of you out there know what I'm going to say right now. Why don't you say it with me? You with me, kids? Come on, Omniacs. You know what's coming out. 1, 2, 3. Stops are in. Emotions are out. And that is the truth, kids. If you put your stops in first, it's so much easier to sit through these trades knowing you've got your insurance premium in place. With that, I'm going to yield my time back to you. I thank you for inviting me, and I hope I've been able to help some of you view the charts and view the markets moving forward.
Oscar, that was excellent, man. That was really great. Your charts are just so spot on. I mean, you've been calling it all year. So thank you.
When I met you, Anthony, I wasn't kidding around, man. Nobody can do this.
No, you're one of one. You are one of one, and that's why you're.
It's happened upon me. I don't give myself credit, but I am who I am. You know what I mean? It is what it is.
Yeah, you're the real deal. Thank you so much.
Well, thank you.
Yeah, and if you haven't, check out Oscar's YouTube as well and catch up on some of his videos. And if you want to get updated on some of his stuff as well throughout the week, check his videos out as well.
You know, let me see. I'll just show you. I have a YouTube channel, and we have thousands and thousands and thousands of videos out to help you traders around the world. So please go there. These are all educational. They're absolutely free. And all I do is try to share the best of analysis with my Omniacs around the world in these videos. They're not asking for contributions. They don't ask for anything. They just teach. So go check them out.
Definitely. You're like a breath of fresh air with everything you said, the noise around us right now. So thank you, Oscar.
There's so much of it, but the charts see so clearly. And if you read them properly and you keep, it's really hard to keep this out of the equation. But if we could all learn to keep this out of the equation and use that, we do much, much better.
Yeah, and you prove it. You prove it with your math. There should be a case study on your geometry. I'm serious. It's just that good.
It's insane, isn't it? It
is insane.
I guess one of the things is you get lucky if you grew up on a trading exchange. You know what I mean? There's very few of us that actually grew up on an exchange. You learn things that you'll never see anywhere else. I think it makes us an elite group, the people that actually spent their lives down there, because every single concocted program that anyone ever came up with. They had to call it into us and give us the orders, which teaches us what works and what doesn't, you know?
Yeah. And now you're in the gaming central of the world too, Las Vegas.
Oh yeah, and now we've
Which
got
is,
yeah. Let's go.
yeah,
You
it
guys
all
should buy
fits.
Omni token. It's doing great, and I promise you, the amount of advertising I'm going to do, you guys should be long that Omni token.
Yeah, I believe it. As always, another excellent session by Oscar. Thank you for sharing your chart-driven approach. Oscar, we do appreciate it, most definitely.
Thank
Oscar's
you.
Your Black Friday special is in the chat right now. So Oscar, all of Traders Corner wishes you and your family a very happy holiday season. Thank you so much for sharing as much as you did today.
Thank you so much. Happy holidays to you, your families, and everybody else out there. Thank you so much for what you do.
Thank you. All right, our final presenter of the day is known for his structured, systematic approach to price and trend analysis, and we're talking about David Wyse of Right Line Trading. David will show you how to trade the SPY with laser precision using Heikin-Ashi structure, momentum confirmation, and clean trend recognition. So everyone, please welcome David Wyse of Right Line Trading.
Good afternoon, everybody. We're depending on what time zone you're in. Good afternoon. Welcome to everybody coming in here day before Thanksgiving. Obviously, these are serious folks that are spending the day before Thanksgiving looking at charts and learning how to trade or become a better trader than getting ready for Thanksgiving. But I appreciate the opportunity. Thanks very much. And again, my name is Dave Wyse, and I have a trading room and an alert service. I have a trading room called the SPY Super System Options Live Trading Room, where I use a piece of software, and it's called the SPY Super System. We're going to talk about that. We're going to talk about how that identifies when institutions are in the trades and when they're not, and how we lean on that as the major criteria that we use for finding the highest probability trade setups. And I'm going to talk about some Heikin-Ashi candle setups today too. If you haven't used Heikin-Ashi candles, they're a very useful method of tracking trends and getting into reversals off of tops and off of bottoms when the stock is reversing. So it gives you a lot of confirmation on that. So we'll cover that. So again, let's get started. And thanks so much for being here today. I appreciate it. Again, the first thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, and if you have any questions, I'm going to leave the question box open. If you have any questions during the presentation, you can pop them in there and I'll try to answer them. If not, you can put your name and phone number in there, or your Teams username. There's no Skype anymore. Your Teams username, and Rory from Right Line will call you back and answer any questions you might have relative to subscription costs or anything, any variation of the ones that you might want to take, or any questions that I can't answer. So I'll leave that up there. If again, this I'll leave up. So I'm going to put this up at the end. I'll leave the chat box open. So if you have questions on the presentation as we go through it, please just pop them in there and we'll get started. Okay, this, by the way, is just what's called the SPY Super System. Is a piece of software I'm going to show you, which identifies when institutions are in the trades and when they're not. It used to be called the Compass System. It's been improved since then, changed the name to SPY Super System, but I still call the alert service the Compass SMS Text Alert Service. This is where we send the highest probability trade setups out to your phone, where you can trade with me. We just sent one out on Apple today, as a matter of fact. We are long Apple right now, and so that's this is what it looks like. It just comes through on your phone. I'm a member of the alert service as well. I have alerts come to me so I can determine how fast they're coming through. I get them in about 5 to 8 seconds or so from one time I send them out. Okay. Now, the first thing I'm going to talk about here briefly is I want to talk about what moves the market, what creates a trend in the market, uptrend, downtrend, what does that? And the market is made up of two groups. We have these little small marbles here, retail traders such as myself and most likely most everybody here. We're retail traders. We can't move the market. It's important to understand that when retail traders are trading and there isn't any concerted effort on the institutions, there's no basically no institutions all trading in the same direction. We're just trading in there against other retail traders. All you're getting in the market is a lot of chop and a lot of chaos. It's very difficult to make any money without having institutions pushing a trade one way or the other. And I'm sure you've seen it a lot where you just get chopped up. So these are myself and most likely everybody here. We're retail traders and we're looking to make money, and we take our money from other retail traders. Institutions, this is who moves the market. And this is made up of 4 groups. It's made up of investment banks, Goldman Sachs, Morgan Stanley, JP Morgan, HSBC, all the big investment banks that most everybody knows about. They're also made up of hedge funds. There's hundreds of hedge funds. Hedge funds have, again, they have billions of dollars to trade and invest. So they're part of the institutional group. Pension funds are also part of the institutional group. Large pension funds, police pension funds, firemen, state workers, lots and lots of pension funds, thousands of them around the country that invest in traded stocks. And the last one would be mutual funds, such as Vanguard, T. Rowe Price, all the big mutual funds. They also have billions of dollars. So this is when the institutions are in a trade, and there's a bunch of them pushing a stock or an ETF in the same direction. That is where your trend is coming from. Now, if you've got institutions that are just fighting each other, you got some buying, some selling, you're not going to get the direction that you want. It's just going to be chopped. But once the institutions are taking a position on a stock or an ETF, et cetera, and moving it in one direction, that is what's creating the trend. And that's what we need to find. We need to identify those trends and trade them. I mean, that's what's gonna make us profit. Okay. One thing I want to talk about here before I get into the SPY super system is seems a little bit off topic. This is a blackjack table here. Oscar was just talking from Las Vegas, but this is a blackjack table. So this is a blackjack. You have an ace of spades, jack of spades, and we've got a couple of $100 chips right here. Right, so this is a blackjack table. So what in the world has this got to do with trading options or trading stocks? Well, the reason I say this is because if you've talked to anybody about telling them that you're interested in trading stocks, or you're interested in trading options, what you're going to hear from most people is you're just gambling. Trading stock is gambling. It's fixed. You can't beat them. You shouldn't do it. I mean, that's the kind of feedback you get from most people, friends, relatives, etc., who don't know better. And the reason I put this up here is when I was much younger, very much younger, I made my living playing blackjack in casinos in Las Vegas, and as a card counter. A card counter, we don't count every card. What we do is track the composition of the remaining cards in the deck to determine whether it's in the house's favor or the player's favor. If there's a lot more big cards in the deck than there normally would be, then the player has an advantage. If there's more little cards in the deck, deuces through sevens, than there normally would be, then the house has a bigger advantage, so you just play very little of it. In other words, when the deck was in my favor, I would make larger bets, more hands, and when it went against me and the house had the advantage, I would just play one hand and just play the minimum bet. But that's how you do it. That's how a card counter makes money. And I did this for a good long time in Las Vegas. The reason this is important is because it gave me a mathematical edge over the casinos. They didn't actually have an edge over me. I had an edge over them by knowing when the deck was in my favor. And they've done a lot since then to try to counteract that. They shuffle after every hand, et cetera. So you can't really do that much anymore. Although it is possible to do it if they're dealing down into the deck a little bit, even if it's a 6 or 8 decks. But anyway, I knew when the cards were in my favor. And trading stocks and options is very similar to that. Because without knowing what the institutions are doing, didn't know if the institutions are in the trade or not, the trader has no edge. So in essence, they're gambling. So if you don't have an edge, if you don't know if the institutions are in the stock or not, then you don't have an edge. But if you know they are, now you do have an edge, and you can become a consistently profitable trader by basing it on that. Now, a little caveat here: both card counting to play blackjack and trading both require discipline and emotional control. This is the hardest thing for most retail traders to manage. Right? You have the best system in the world, but if you don't have discipline and stick with the strategy, and you don't have emotional control, and you get flustered when you take a loss and you start doing revenge trading, etc., it's going to kill you. I mean, this requires discipline, emotional control. So it's not just knowing if the institutions are in there and what the good setup is and what trade you should take. It's creating discipline in yourself and emotional control in yourself, so you don't blow up your account. That's basically what happens. So the SPY super system, which I'm going to tell you, is our card. That's my card counting system. This is what gives me an edge over the other traders, other retail traders, because I have the ability to become consistently profitable because I now have an edge over them. I know things that they don't know, and that's what that SPY super system does for me. And the SPY super system, it's a piece of software, in conjunction with identifying the best high probability trades, can lead to consistent profits. I mean, there can be several stocks that you may be interested in trading for an intraday trade or for a swing trade that the institutions are in. But then you've got to look beyond that to find the ones that have the very highest probability, which we have some additional criteria that we use to pick the best of those. And so this is why I brought this thing up. This is why I brought this up about gambling. I understand it seems a little out of place, but that's why. All right. So in the room and in the on the alert service, we have two rules to trade by. We trade the best and skip the rest. Sounds really simple, but this is really important because we're only taking the various high probability trade setups, and we're skipping the rest. This is really important. Sorry about my news feeds going off in the background. I trade all day long and I have a news feed. Skipping the rest means not taking trades that may look good but don't have the high criteria that you need for those to be high probability trades. And this saves you a lot of money. And if you can skip a trade that would have been a loser, then that's just like putting money in your pocket. So it's just as important as trading the best. And this is what the SPY super system allows us to do. And this I repeat in the room every single day. Our objective is not to make trades. Our objective is to make money. That's what people are trading for. Our objective is to make money, not to make trades, which means we don't want to be taking trades just to take trades. So that's counterproductive. And this is again, this comes down to patience for traders. A lot of traders can't sit there for an hour, 2 hours, 3 hours without taking a trade. They feel as though they're a trader. I need to be making a trade. So they're just taking a trade to take a trade, and they start justifying why they took a trade. But they didn't really have a good reason. So again, our objective is not to make trades. Our objective is to make money. That's what we're trying to do. Okay. Now, maintain discipline. This is important. I'm going to go over the SPY super system, and then I'm going to go over the criteria that we use for finding the highest probability trade setups. That's the process that we have to follow. That's what's going to make you money. Following a process of high probabilities criteria to find those stocks. Right? Maintaining discipline means stick to that. Don't be switching off to a trade you saw on X or you heard about on CNBC or your brother-in-law's son's cousin told you about this thing. Maintain discipline. You believe me, you know as much about what the market's going to do right now as all of the analysts out there that keep telling you all the gurus that tell you what the market's going to do. They don't know anymore what the market's going to do this week or next week than you do. Right? So you got to learn and follow the process. Next thing is remaining patient, and this is the most important thing. Most retail traders have a horrible time trying to remain patient. If you're you like a stock and it's moving up quickly in the morning, you have this terrible urge to get in there and buy it. It's called FOMO, fear of missing out. It's caused by greed. Right? You chase a trade. You don't wait for it to turn around and come back and find support and then bounce, which is the way you should be trading it. And this is why patience is so important. Wait for the trades to come to you, because if you get into a trade when it's ripping up and it's gone a long way away from support, believe me, it's gonna turn around on you most of the time, and you're gonna be trapped in that thing. And if you wait for it to go back to resistance, you're gonna have a pretty red P&L. Okay, so as a profitable trader, retail trader, we need edge. We need an edge over the other retail traders. We have 4. All right, we have 4. First one is our edges is a SPY super system software. The software we have that tells us, no video. Can you see the screen? Can everybody see my screen? I hope so. It's back. Okay, thanks, Fernando. I don't know why that would have done that. Might have been go to webinar. Okay, so we have, as a profitable trader, we need an edge over other retail traders. That's who we're going to be taking our money from. We're not going to be taking our money from institutions. Don't think that's going to happen. It's not. But our edge is the SPY Super System software that lets us know whether institutions are in the trade or not. This is our number one. And this is the thing that most retail traders have no idea if the institutions are in there. There's ways to determine if the institutions are in there up to a degree, but nowhere near as what you can find out with the SPY Super System. You know, if you look at volume and price action, you can get some idea, but you don't know enough if those are institutions driving that. The next thing is we trade relative strength and relative weakness. Now, this is something that a lot of retail traders overlook. And this is not RSI. I'm not talking about relative strength indicators. Relative strength means if you've got a stock that's moving up, you're getting green candles, and the SPY is going sideways or going down, then that stock has relative strength toward the market, toward the SPY, and vice versa. If the market's going sideways and up, and you've got a stock that's stacking red candles, it's got relative weakness. Relative strength and relative weakness is really important because if you take a stock long with relative strength of the market, it's outperforming the market. If the market reverses on you, that stock is going to hold up much better than the market is. So it puts you in a trade that you minimize your risk profile on that because you've got relative strength or relative weakness in it. Very few retail traders seem to understand this. They look at MACDs, they look at the RSIs, indicators, etc. This is really important, and all you have to do is compare the stock you're interested in to what the SPY is doing right then. And most platforms will let you put both, you know, the SPY and your stock on a chart, and you can see which is how it's operating. All right, then trading with the market trend, if there is one, if there's a market trend. Today was a bullish day, right? So all the trades I took today were bullish. There were some decent short setups, but everything I took bullish, and the reason was because you've got the market tailwind behind you. You've got a better likelihood of making money if you're trading with the market, because obviously it's going to give you a tailwind. If you're trading short today, it's got to overcome, that stock is going to be very, very weak because it's got to overcome the market bullishness, right? And then buy near support and sell near resistance. This is super important, right? This means if you're in an intraday trade, and we'll go over a bunch of these, if the stock breaks through a support level or a resistance level, such as the volume weighted average price or the 8 exponential moving average or the 15 exponential moving average, and breaks through there, you want to be in there as close to that support level as you can, by that resistance level. As it breaks up through the resistance level, you want to get in as close to that as you can, because your downside is very minimized by the fact that you're in so close to support or resistance. If it breaks below, it goes against you, your loss is going to be very small. This is critical. Buying near support and selling near resistance, extremely important. These 4 edges right here will put you an edge over about 95% of the retail traders in the world. All right, I have to shut off the news feed. How do I know the market direction for the day? It can change. Yes, that's exactly right, CryptoCat. And you have to be watching your charts. But if you looked at the SPY today, you can see the direction on it. Now, one of the things I'm going to talk to you about is an indicator that we have, which is called the market internals, which tells me what all of the S&P, all of the whole New York Stock Exchange, what those stocks are doing, how many stocks are going up on up volume and how many are going down on down volume, and I can have a good indication of whether we got a bullish or bearish trend in the overall market. But if you're looking at a particular stock, you're going to look at the 5-minute chart. But if I looked at the SPY today, you can see it opened strong. It had a few times when it was chopping around, but the direction stayed bullish most all day long. So I mean, obviously, it's not going to go green candles every single candle. It's going to chop around, but you can certainly see the trend. Now, if you can't see the trend, if it's bouncing back and forth, for example, above the VWAP and below the VWAP, that's choppiness, and choppiness changes the way you have to trade, right? So now you don't have market trend to follow. You have to then take all the other criteria into consideration and ignore market trend because you're just looking for the very best stocks at that point. But that is after the fact. It's not really after the fact, because first of all, when I trade, I wait till 10 o'clock before I take a trade, right? I wait to see what the market's doing, right? The market trend, I mean, obviously it can reverse on you, but if you've got the market moving up and you know where your support resistance levels, for example, the VWAP, if the stock market's been going up all day, pulls back to the VWAP, bounces off to the VWAP and heads back up again, the likelihood is it's going to continue up because you've been in an uptrend. Just because you pull back with it doesn't mean the trend is going to change. But what you're trying to do is catch it at the right time, right? And then it can be tricky, but you have to make those kind of decisions by looking at price action. A lot of days are very choppy and there is no direction. So then you just have to lean on the stock. But if you're leaning on a high probability stock that's bullish for the day, and the market pulls back a little bit, that stock probably is going to still remain relatively bullish as long as the market doesn't collapse on you, and you'll be in good shape on that. Okay, so those are our edges. The compass system, which is now called the SPY super system, again, this identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed. Again, that's the trade the best, skip the rest. It identifies when institutions are driving the move and when they're not, and I'm going to show you how that does that. And it analyzes complex trading data. Now it's looking at some fairly complex data, and it's displaying these results in an easily identifiable visual format. It's basically with colors, and I'll show you how that works. And this visual element is really important because it makes it possible for new traders who don't really understand technical analysis that much. It makes new traders be able to see high probability trade setups. They can tell when an institution is in the trade and when they're not. Okay. All right, and this is how do we get an edge over retail traders? Well, we've talked about this. Only take trades that are being driven by the institutions. Those are the ones we want to be in. We want to be following the institutions. Trade stocks that have relative strength or relative weakness versus the SPY or the Qs, and trade in the direction of the overall market trend, if there is one. Three things. These are very important. So again, our trades will be supported by institutional buying and selling. They'll be outperforming the index if we're going long, or underperforming if we're going short. And they'll be moving in the direction of your overall market if there is a market trend. Okay? All right. Now, before I get into the software, the SPY Super System software, and show you what it looks like and how it works, there's something I want to explain. I'm going to show you some of the results that we've had in the room over the last few years. We have an 85 to 90% win rate on our trades that we take in the room and on the alert service. And so, you know, it's easy to see those and think, well, this thing's pretty good. But I want you to understand why we have those results. And the SPY Super System software is the main reason for this, right? The SPY Super System software, it's the critical element in finding and trading the highest probability trades. The SPY Super System software is the engine that drives our exceptional results. When you see the results, 85, 86% win rates, it's the SPY Super System that's getting us into those trades that give us that opportunity. And the ability to identify when institutional players are driving a bullish or bearish move and when they're absent, this is the key factor in pinpointing the high probability trade setups. So that's the function of the SPY Super Systems software, and it's the critical component. This is the critical component. I'm not taking any trades if the institutions aren't in that trade. I'm not going to trade against the institutions. I'm not going to trade even if the institutions are neutral. They're not even in it. I only want to trade with the institutions. Okay, just a note that we do have Brightline has a YouTube channel. I'm on there every day at 11:30 to 12:30. For anybody who wants to see the room, I'll answer your questions. You can hear us discussion in the room. By the way, I'm in the room from market open to market close every day, except I take lunch. But other than that, I'm in there every day from market open to market close, and I'm answering questions. I'm showing charts of stocks that we're likely to take, showing strong ones, showing weak ones, answering questions. All our members in the room can ask me about a trade that they're looking at, and we'll analyze it. We'll analyze it through the SPY Super System. We'll also analyze it by technical analysis. Okay, all right. So this I'm going to just run through quickly. If you're a trader, if you're a retail trader, I'm going to run through what I consider the most common retail mistakes that retail traders make, because I've made all of these. And I put a video out in this, which I thought was pretty entertaining, but pretty good. The main things here, this is what caused most retail traders to lose money. Not considering the current market conditions. If you get a bullish market, whether it's daily or on a 5-minute chart, and you're trading a lot of bearish stuff, then you're trading against the market conditions. You know, there was most of the gurus, a lot of people after this past April, when the tariffs went on and then the tariffs came off, they were freaking out, and there was so much bearish sentiment that everybody, not everybody, but a lot of people were trading the market short. They were shorting it because they thought the tariffs were gonna create a huge amount of inflation. The market should go down. In other words, they were trading what they thought the market should do, not what the market was doing. So they weren't actually considering the current market conditions. We stayed long during that whole time because the charts told us to stay long. You know, we weren't listening to what everybody thought the market should do. Another thing, over trading. This is lack of patience here. You always feel like you have to be in a trade. You take way too many trades. You don't need to take a lot of trades to be consistently profitable. You just have to take a few good ones. That's all you need. Trading your P&L instead of the technicals. Technicals is basically reading charts. So if you get into a trade because the technical setup looks good, but then you bail on it because your P&L went against you, now you're exiting based on your profit and loss, not based on the technicals. The stock still should be a good technical setup. So this is a big mistake. Trading your P&L is a huge mistake. You should not even be looking at your P&L during the day for the most part. Trading what you think instead of what the price is. And this, I'm going to show you a little slide on this, but this is where you think that the market should be going down. You think the market should be going up. It's maybe opposite of what the market's doing, but you feel like you have this bias that that's what the market's going to do. So you take trades in that direction, even though the market's not going in that direction, and you stay in those trades because you feel like you're going to be right. This is a huge, huge mistake, and it's pervasive. There's just so many people, because everybody's predicting markets. If you look at the folks who talk about stocks and the gurus, etc., they're all telling you what to think the market's going to do this week, this month, this year. Everybody's predicting, predict. But keep in mind, they don't know any more about this than what you do. Watch the stock market, watch the charts on the SPY and the Qs and the IWM, and trade what the market is telling you it's doing and what it's likely to continue to do, not what you think it should be doing. This is a killer. Over leveraged, obviously too much risk. Take too much risk. You're nervous when you put a trade on. You've got too much risk on. You can't stay in the trade as long as you should because you're panicking about losing money. Again, this is fear. Over leverage creates fear in you, which is an emotion. You're not using the daily chart for swing trades. Taking a trade that looks good on the 5-minute chart and ignoring the fact that it's bearish on the daily chart. You should never, in my way of thinking, you should never be entering a long unless the daily chart's bullish. And you shouldn't be entering a short unless the daily chart is bearish. Lack of patience, obviously we've talked about that. Forcing trades, this is related to lack of patience. This is where you feel like I gotta have a trade on so I can justify one. I hear this all the time, you know. They'll say, it's just a small position, it's a spec trade. What they're saying is they're gambling. So, you know, call it what it is. You're taking a gamble. You don't have any valid methodology for taking that trade. Attempting to pick tops and bottoms. This is a horrible thing. When you're looking for a bottom, you want the stock to bounce and you want to have it confirmed that the bottom's in and it's going to keep going up. So it needs to have a confirmation. Buying a stock because you think it can't go much lower is a very bad strategy. So I hear this all the time. You know, Microsoft can't go any lower than this. I'm going to buy some stock, but it hasn't bounced off the bottom yet. So again, attempting to pick tops and bottoms, very negative. Not waiting for confirmation to enter a trade. Again, this is kind of goes hand in hand with that. If a stock comes down to a support level and puts in a double bottom or something and starts bouncing and it's bouncing off the 100-day moving average, once you've got confirmation that it bounced off of there, now you have a new direction in the trade. Now you can take that trade long because you have a confirmation that that stock has moved back into the uptrend. And FOMO, fear of missing out. Another, I mean, most of these are based on emotions, greed or fear. Market trades on greed and fear. Fear of missing out is if the stock's ripping up in the morning, so you grab it because you feel like you're losing money. Everybody's making money in the stock. I got to get in. I can't take it anymore. I got to buy it. And you buy it, and it turns around, heads right back down again, and now you're trapped in that trade. That's fear of missing out. So then you get greed, and then when it turns against you, all of a sudden that greed quickly turns to fear. All right, I want to show this. This is about trading what you think instead of what the price says. And I really like this quote from Stephen Hawking, Because remember, if you're trading what you think, you're taking what you heard somebody say, or what you read somewhere, you're trading a bias. You're not trading this, what the market's doing, you're trading a bias. And what he said is the greatest enemy of knowledge is not ignorance, not knowing what this market's going to do. It is the illusion of knowledge. And when you trade a market based on what you think it should be doing, based on what you read, saw, or heard, without actually taking the market direction into consideration, you are trading with the illusion of knowledge. You're trading knowledge that you think you have that you don't have, right? And that's trading with the illusion of knowledge, and it's a killer. It's an absolute killer. People got crushed this past spring by being short the market for 3 months, thinking the market should be going down, even though the market was going up for 3 months. And it's an illusion of knowledge. Just let the market tell you what you should be trading. Okay, now in the SPY super system, we've got, it's color coded. So this is how it tells us whether we've got, you know, how bullish or bearish it is. You've got green, this green is going to be bullish strong. You've got blue, this is a bullish trend. Red is bearish strong, and yellow is bearish trend. This is how we're going to identify what's happening with the institutions. Okay, and this is I've got a couple of charts here. This is the SPY super system on Thinkorswim. It runs on Thinkorswim and it runs on Ninja. I run it on Thinkorswim every day. This is the Thinkorswim platform right here. Now, this is an older one. I'm going to show you a new one I've updated since then. But this is what it looks like on Thinkorswim. You see, it's all colors here. And I'll show you the new one here in just a second. But these are the indicators that we have on here, right? So this is what it looked like up to about 3 weeks ago. And I'll show you what we've changed it to now. All right, I've optimized it for clarity and precision. And I've added the 8 exponential moving average here that wasn't there before, and provides improved signal confirmation and trade timing for both entries and exits. Okay, so this is what it looks like now. This is what there'll be the scanners and everything off to the side, but this is what the actual chart looks like on Thinkorswim. And this happens to be a 5-minute chart. And these are all the things that you need to determine if an institution's in the trade and take a trade, right? Right down here, this is what's called the modified Laguerre oscillator. Now, most oscillators measure momentum and divergence. This modified Laguerre oscillator has the divergence is stripped out of it. This is pure momentum, right? This is telling us what the stock's doing based just on the momentum. This is the current time frame momentum. This shows me what the stock is doing on the current time frame that we're in. Now, if it's on a 5-minute chart, this would be a 5-minute momentum. If it was a daily chart, that would be a daily momentum. If it was a 2-minute chart, it would be a 2-minute momentum. But right here, it's a 5-minute momentum. So this is the current time frame. This tells me what the momentum is right now on whatever I'm looking at, which happens to be the SPY here on a 5-minute basis. This is the multi-time frame momentum. This is very critical when you come into a swing trade. When you're looking at a swing trade, you want the current time frame momentum and the multi-time frame momentum to be aligned. You want them to be both bullish or both bearish, right? So they need to, if they need to be either both green or blue, or red or yellow. It doesn't both have to be green. One could be blue, one could be green, but as long as they're both bullish. If you've got a daily chart that has green on one and red on the other, you don't want to trade it. You don't have the institutions confirming in that. And what the multi-time frame momentum is made up of on a 5-minute chart, it's made up of 5-minute, the 15-minute, and the 45-minute. So for this to be green over these, it needs to be those 3 time frames all need to be going in the same direction momentum-wise. All right, and this is the long-term trend. This is also effective more so for swing trades than intraday 5-minute trades. Right now, up here in the pricing area, we got the candlesticks. Key thing here is the VWAP. That's the volume weighted average price. This is on the 5-minute chart. It doesn't apply to the daily chart. This is what every institution uses, the volume weighted average price. This is a massive support and resistance level. This is something that we use all the time when we're taking intraday trades on the SPYs, the Qs, gold, Tesla, Microsoft, anything we use. If it's breaking above the VWAP and it's green down here, it's got a bullish trend. That would be an entry right here, volume weighted average price. The other 2 support resistance levels that are on here is the 15 EMA, which is right there, I got it indicated, and the 8 exponential moving average. All 3 of these lines can be used for entries for trades, both long and short, right? The 8 and 15 I like a lot because I usually take the 8 and 15 together in combination, because when a stock breaks down below the 8, many times the 15 will hold, right? So that's why when I take a breakout through the 8, I wait for it to break below the 15 before I take it off. I give myself a little extra room. And the 8 and 15, when the 8 is moving up and the white line here, the 8 exponential is above the green line, that's a bullish trend, right? When the 8 sinks below the 15, you see how it broke through it right here? That is turning into a bearish trend. When the 8 exponential is trading below the 15, that's a bearish trend. Now, in this case, you wouldn't take it here yet because it's sitting right on the exponential, the VWAP. But if it breaks through here, breaks below here, you definitely would have a short entry. Breaking below the VWAP with the 8 below the 15 and both moving down. Right, so those are the levels that we use for support and resistance levels for our intraday trades, especially on the 5-minute chart. Daily charts, we're looking at the same kind of thing. We're looking at the moving averages, but there's other moving averages on the daily chart that come into play for swing trades. Okay, so those are the 3. Now we also have these pop signals right here. They're called pop signals. You get blue. These are compression breaks to the downside when they're blue, and compression breaks to the upside when they're pink. That gives you, it helps you with your entry, because if a stock is breaking out and it's also got popping out of compression and you're breaking above your support resistance levels, that's a tremendous entry. It may only be good for a couple of candles, but it's a tremendous entry right there. Okay, so that's a nice one. We're going to look at a bunch of these charts. And the other thing we have on here is what's called this trend up. This is called the VOLD, the VOLD. This is the market internals indicator that tells us what's happening with all the stocks in the whole New York Stock Exchange right now on a 5-minute chart. And it tells you that it's trending up. It's blue, it's not green, but it's trending up. That means there's a lot more volume on stocks going up than there are on stocks going down. So it tells you the momentum is very strong on the whole market. So it helps you to decide if you want to stay in a trade or take a trade long. I mean, if the trend has been up all morning, obviously you'd like to take the trade long. If it's been chopping around, if it goes, blue and then red and then blue and then red, it's just chopping around. You know that you got to get in out of these trades pretty quickly. Okay, I just want to show you a couple of trades we've taken recently using this and how we find these trades. All right, so this is NVIDIA. This was in 1024. Now you see how it's kind of moving here. Now you see how the colors down here. This is the 5-minute chart. This is the current time frame momentum. You see how it's red right here? And it switches to blue. Okay, so this is the institutions going from selling to buying, right there on that candlestick, right there. Now you see where we've got a pop out of the box. That tells us that the compression's breaking. This stock is breaking to the upside. It's breaking above the VWAP. It's also breaking above the 8 and the 15, and it's got a pink candle here. And this is the perfect entry for NVIDIA. This is where we took it. We took it right here on this break above the VWAP and the 8 and the 15, and we rode this thing up until it started to flatten out right up here. We just get out here. But this little move right here is on a calls from NVIDIA is worth a lot of money. Probably over $2 for $2 to $2.50 or $250 per contract on a move like that. But you can see that it went from selling to buying, popped over the VWAP, pop out of the box. Everything is exactly where you want it to be right now, right? So that's where we took that trade. Now, and this was a short we took in the SPY right here. Okay, so this is where we took it. You see how the VWAP's right here? See the SPY breaking down below it? See the pop out of the box symbol? See what's happening right down here? We went from buying, which was green, to selling, which was yellow. This is where you take the trade right here as it breaks down. Could have taken it here, could have taken it here. And this is where you would take this trade. Now, as long as this stays yellow and red, it's continuing to be short. The institutions are selling. So you stay in this. And you can obviously use your own judgment when you want to take the trade off. In this case, I took it off as it flattened out right here, in case it was trying to bounce back up again, because I had plenty of profit in it. But that's showing you the institutions went from buying to selling. It broke below the VWAP. You get in at a beautiful support resistance level. That's a nice trade right there. Okay, this was one on the SPY to the upside. All right, so here we have the SPY trading below the VWAP. It's going back and forth, blue, yellow, and it goes to blue right here and breaks above the VWAP. Here we go again, breaking right above the 15 in the VWAP with a pop out of the box symbol right there, that arrow. This is where you take it long. and you ride this thing up. These are 5-minute candles. So you get 1, 2, 3, 4, 5, 6, 7, 8 candles. That's about 40 minutes of trading. And as soon as you start to get flattened out here and you start getting little candles, you take profits. You didn't have to because you noticed it stayed green down here. You could have waited till it got yellow. But when you're in a trade this long and you've made that much money on it, I would suggest taking profits, at least certainly taking part of the profits. All right. And again, this is a Tesla trade here that we took early in the day. I usually don't get in that early, but this was a trade we took early on because it popped up. See the buying popped up in the morning. We took it here, stayed above the VWAP, and he wrote it up. And as soon as we got a red candle, we get out. Okay, and notice it stayed green here. It's still being bought. All right, and this was a swing trade. This was an NVIDIA swing trade. As you can see, the institutions are buying this, right? It's not hard to see the institutions are buying it. Current time frame momentum, which is daily. This is a multi-time frame momentum. This is 1 day, 3 days, and 9 days. This is the 3 different time frames that are showing momentum by institutions on that particular stock. And then the trend was also long. So what we did here was we didn't chase it here. We waited for it to come back to the 15 right here, the 15 EMA. And we don't use the VWAP on the daily chart. This needs to be removed. Right here, we took the trade right there as it pulled back and bounced. It's called a PBO, a pullback opportunity. As the stock pulls back to the 15 and bounces, you take it right there. So we took it and we got out right here. In at 8.4, 8.07, out 8.7, 32%. And you see how it stayed green the whole way. Institutions buying all the way across. This was an SMR trade we took long. This was earnings. See how it was yellow? Bearish, went to bullish right there the next day. We grabbed it right there. And again, we get in on 513 right here. And we get in out at 515, 56% profit for 2,000 invested. I use the 2,000 invested just as a baseline. I've got to have something I can use to basically quantify how we're doing profit-wise. So I use $2,000 for each trade, right? But that was $1,170 profit on SMR. It's one of those little small nuclear companies that was so profitable early on. They kind of pulled back recently. This was Wendy's. We took this one right here. Here's earnings. We took it right here as it broke. We just took this as an intraday trade. We could try to do a swing trade, but we made so much money on this candle. We took profits in it. Right. So, but you can see here that it's red, red, red. Institutions selling, selling, selling. All right. So those are just kind of what some of the charts look like. I'm going to go through some more of these, but I kind of wanted you to get familiar with the color schemes and the what we're using for indicators. This is just a little levity here. This is a trader who's trading emotionally. Maybe he hit into a trade with FOMO in the morning and it's just turned around against him. Maybe he took a trade long that he should have been short and it went against him. He doesn't know what to do. You didn't have a methodology or a strategy, and you're basically frozen. You know, it's very difficult trading with emotions. We want to trade with as little emotion as possible. And this is what happens if you've actually got some sort of methodology and strategy you can follow. Because listen, not every trade is going to be a winner. Let's be honest, some of the trades are going to be losers. But if you've got a strategy that you know is going to win 80, 85, 86% of the time, you can be confident that if you have a losing trade, you're going to have a lot more winning trades. And and again, you're exiting when you should be exiting. Okay, CryptoCat. What criteria did I use to find those SMRs and Wendy's names? There's scans. I have scans on the SPY Super System. I also use TC2000, which is a charting scanning program. And I don't remember where I got them from, but most likely I got them from either one of my SPY Super System trades or scans or one of my TC2000 scans. I've got a lot of different scans. I look for different criteria. Heikin-Acher reversal candles, breaks out of compression, a lot of different ones. And then I compare them to make sure the SPY Super System is telling me that the institutions are in there. Okay. And this is something I put in here again. The process precedes results. What this means is learning the strategies, learning the criteria and following the criteria is going to come before your profits, right? If you're trading and you're judging whether you're a consistently profitable trader based on whether your P&L is good or not, you're looking at the wrong thing, because there can be a lot of bad trades that you can make profits on sometimes. But if you do them over and over again, you're going to lose money on them. and there's a lot of good trades that will go against you. So learning the high probability criteria and strategies has got to come before focusing on your P&L. The P&Ls will follow once you have the strategy down and you can follow it. All right, that's the most important thing. So focusing on P&L results without having a solid process to follow is going to end in failure. All right, so this is a high probability trade setup funnel that I go through. This is a virtual funnel. These are the things that I look at when I'm looking at a trade. Look at a stock. I'm looking, if I'm going to take a swing trade, I look at the daily chart first to make sure the daily chart is bullish if I'm going to go long. If the daily chart is not bullish, I'm not going to take a swing trade on it. Now I could take an intraday trade on it, but I can't take a swing trade on it. So if the daily chart is bullish, and then I look for the 5-minute alignment on the daily chart, to find the best entry. In other words, I'm finding a 5-minute chart that the stock is bottoming out and heading back up again, and the daily chart's long. That's fine. That's what I'm looking for. Okay. I just don't want to trade against the daily chart for a swing trade. Intraday trade is okay. I trade with the trend, both stock and market. Obviously, I'm looking for a stock. If I'm going long, I like a stock with a bullish trend. And if the market has a bullish trend as well, that gives me an extra edge, right? Then I look at the SPY super system. This has got to align. If I'm going to take a trade and I'm going to be long, then that SPY super system has got to tell me that the institutions are buying it right now. If I'm going to be short, they've got to tell me that the institutions are selling right now. And this is true whether I'm doing an intraday trade or a swing trade. If I'm doing an intraday trade, I'm only going to be interested in the current time frame momentum. That's it. Just the current 5-minute momentum. That tells me how I'm going to trade the SPY super system for intraday trades. For swing trades, I look at the daily chart, and the SPY super system has got to show me a bullish current time frame momentum and a bullish multi-time frame momentum for a long, and vice versa for a short. If this doesn't match, this doesn't tell me that the institutions are in there, I'm not taking the trade. I'm not taking it at all. Then I look for relative strength and relative weakness that we talked about. If you've got 3 or 4 stocks that look good, I would suggest taking the one for a long that's got the best relative strength, and vice versa on the shorts. And then enter near support and sell near resistance. Again, wait for the stock to come to you. You can set alerts on your charts if you want to enter at a particular level, so that when it gets there, you'll know about it. Okay, these are the strategies that we use in the room and in the alert service. We use straight calls and puts. We do straddles and strangles. This is a non-directional trade. We're just looking for a big move up or down. We don't care which way. It's a fairly effective strategy, especially when the market's volatile. I do debit spreads using weekly options expirations. Time spreads over earnings. This is a non-directional trade where we capture what's called volatility crush. When earnings are coming out, the market makers jack up the premiums on the puts and the calls because they don't know which way the stock's going to go and how far it's going to go. So they cover themselves by increasing the volatility, and that increases the premium on puts and calls. We have a method that we use to do what's called a calendar spread or a time spread, where we sell current week's calls at the money, buy next week's calls at the money, and that way we capture the volatility crush as soon as earnings come out. Very, very, very profitable, works well. Again, about an 85% win rate on this one right here. Weekly ATM strategy. This is a strategy where we sell puts every week on a neutral to bullish stock while holding a much further out in time put, all right, to protect ourselves. So our downside is protected, our margins are reduced, and if you can get the correct stock. It's all depends on stock setup, and these are very important. The particular stock setup that you have, the criteria for the stock you pick, is critical for which strategy to use. And we do credit spreads to capture premium over a few weeks. And we also do what's called the SPY super system methodology on the 5-minute chart. This is where we're trading intraday trades on the SPY, the Qs, the IWM, the futures, even stocks, gold, whatever you want to trade, oil, Tesla, doesn't matter. This just works off of high probability trades using the 5-minute chart. Now, I can't post any of these in the room, and I can't alert on these because they're very quick. Most of these will last maybe 1, 2, 3 candles, maybe 4 candles. But this is a high probability trade, and I'll show you how we use that as well. Okay. All right, and the alert service, by the way, is designed for day trades and short-term swing trades. This is not for investments. This is day trades for short-term, from day trades and short-term swing trades. It's designed for traders who can't watch the market all day or don't want to. it's going to give you real-time alerts on the highest probability trade setups that we can find. And the highest probability trade setups are done by identifying institutional involvement. Institutions got to be in the trade. And then we look at the market internals, the one that I showed you, what's the market doing for all the New York Stock Exchange, and then we do technical analysis. This is how we find the very best trades. And it's not a lot of them. I mean, it's not a lot each day. This is my equity curve for this year. This is based on $2,000 per trade for all the trades that we took in the room right here. All right, so I'm going to talk now about Heikin-Achi candles. I assume some folks here were interested in seeing some Heikin-Achi candles. So I'm going to talk about Heikin-Achi candles, how they're constructed and how you can use them. And I'll show you some live trades using Heikin-Achi candles from today's trading, where we can find some potential swing trade setups for looking for high probability Heikin-Achi reversal candles today. All right, so here we go. This is a chart. It doesn't matter what it is. This is British pound, Japanese yen. It's FX. It doesn't matter. It's what we're interested in here is the candles, right? What the candles look like, right? So these candles right here that have flat tops, these are Heikin-Achi bearish candles. Heikin-Achi bearish candle has flat tops. They can have tails, but there's no wicks on them. You notice flat top, flat top, flat top, flat top. These are Heikin-Achi bearish candles right here, right? Now you notice on a Heikin-Achi candle that it starts in the middle of the previous candle, right? This is a little bit odd from what you're looking at regular candles, but it always starts in the middle of the previous candle, all the way down. This is a bearish Heikin-Achi trend right here. You can see the flat top candles, and the candles are pretty big. So what we're looking for, let's assume we're looking to go long the stock when it hits support and bounces, right? So we watch it coming down. So now we're going to look for a reversal on these Heikin-Achi candles to the upside to get back into the trade. So we start getting wicks and tails here. We start getting green candles, and then we get a Heikin-Achi reversal right here. See the flat bottom? A flat bottom candle is a bullish Heikin-Achi candle, right? Bullish is because flat bottoms, bearish have flat tops, right? So this is a bullish Heikin-Achi reversal candle here. Now, theoretically, you could take a trade right here, but I'll add a caveat to this. When you have a downtrend that's this strong, these big candles, you don't really want to take the first reversal if the candle is small. And that's a fairly small Heikin-Achi reversal candle right there. So you would have made money on it because it went up for 3 or 4 candles. But I would be looking for a return to the downside and then getting a big Heikin-Achi reversal candle right here. This is the one you want to trade. See how big it is? Compared to these are too small. This is a beautiful Heikin-Achi reversal candle. Now, here's a little point of information. When a Heikin-Achi candle starts to develop, let's say you're on a 5-minute chart, after about 2 minutes of 2.5 minutes of trading on that 5-minute candle, if you've got a Heikin-Achi candle with a flat bottom, it's likely, very likely, to stay with a flat bottom before when that candlestick ends, after that 5 minutes. So you don't necessarily have to wait for the Heikin-Achi candle to fully develop before you can take it, right? As long as you got it 2 minutes into a 5-minute trend or something, it's about 95% chance that it's going to stay with a flat bottom, right? So here's your trend. Here's your Heikin-Achi reversal right here. You take it here, it moves up, right? Flat bottom, see in the middle of the previous one, flat bottom, flat bottom, flat bottom. This is a nice Heikin-Achi reversal. If you were in this trend, that's a beautiful trade right there. This is where you get out. We're getting wicks and tails, and then you get a red candle with wicks and tails, you're out of the trade. Okay, so that's what a Heikin-Achi bullish candle looks like. That's what a Heikin-Achi bearish candle looks like. Right, so these are the distinctions from regular candles. And Heikin-Achi candles, it takes 2 candles to make a Heikin-Achi candle. It's looking at two different, like if you're looking at a 5-minute, it's got two different 5-minute candles to create that candle. So bullish Heikin-Achi candles have flat bottoms. Bearish Heikin-Achi candles have flat tops. Critical to this is what you want to know. You want to remember this. Bullish Heikin-Achi reversals are identified by flat top Heikin-Achi candles, followed by flat bottom Heikin-Achi candles. Now there can be dojis and everything in between, but that's what your reversal looks like. And the bearish Heikin-Achi reversals are identified by flat bottom Heikin-Achi candles, followed by flat top Heikin-Achi candles. Those are your reversals, and this is mostly what I use them for, is finding a reversal or a confirmation of a reversal by using Heikin-Achi candles. All right. So again, this is kind of what we looked at just a bit ago. Now, if this is a chart here with Heikin-Achi, let's say this blue line right here, let's say that's the VWAP. That's one of the levels you want to get in as it breaks above that because you're looking to go long here. So you see it coming down bearish, and then it pops up and it comes up to, for example, the VWAP right here. And then you get a Heikin-Achi reversal candle right there as it breaks through it. That is your entry into this trade right here. As it switches to a Heikin-Achi bullish reversal with a flat bottom after having flat tops. And then you take it and you get flat bottom after flat bottom after flat bottom. You get a red candle, you got to keep your eye on it, but you're still above your entry level here in the VWAP. And then you just ride this thing up. That is a nice bullish trend. Now, once you start getting wicks and tails up here and then a red candle, you're out of the trade. That's your trade right there. That's a Heikin-Achi reversal candle with a Heikin-Achi bullish trend. And that's how you take advantage of these things. All right, so the recap of Heikin-Achi candles, I'm going to show you a few on the daily chart. It smooths out price action, reducing noise. If you're looking at regular 5-minute candles, you get a lot of movement. When you're looking at Heikin-Achi candles, that movement's been put into 2 candles, so it tamps it down. You don't see, as again, if you look at it here, you can see how smooth this is. Looking at regular candles, it's not going to look like that. And I'll show you some charts that will show you that. It makes identifying trends much easier. It improves identifying confirmation of trends or trend reversals. This is a big deal, confirming a trend reversal. And then it helps identify potential exits when the candle bodies shrink or the reversal occurs. I will tell you, when I'm trading Heikin-Achi candles, when I'm thinking of getting out of a trade, let's say I'm reaching about where I want my profit target to be, I'll switch to regular candles and get out as soon as I get a pull down on a regular candle, so I don't have to wait for the Heikin-Achi reversal to form, because I'd have to be waiting for 2 candles for that to happen. So I'm getting out of my trades a little quicker than if I use the Heikin-Achi candle to exit the trade. Okay. All right. So this is a chart of Uber. All right. This is Uber. Now this is a regular chart. These are normal candlesticks. I want you to. This is an old chart, but I want you to see. This is May 1st right here. Okay. You see here the stock's coming down. This is the 200-day moving average. This is my TC 2000 chart right here that I use for my scanning and also for my charting. But see how it gapped up right here on May 1st. All right, so this is a regular candlesticks. Gap up. Very difficult to try to take it on a big gap like that. Typically, you want to wait for a pull down. But if I switch to a Heikin-Achi, look at May 1st. Here's May 1st right there. This, you see this Heikin-Achi, these Heikin-Achi flat tops right here? That's a bearish Heikin-Achi trend. See the Heikin-Achi reversal candle right there with a flat bottom? See how big it is compared to these? That is your entry right there. That's your entry. On May 1st, you would be taking this trade, and then boom, boom, boom. Just keeps moving up with flat bottoms, flat bottoms, flat bottoms. Then it starts to peter out. This is where you get out of the trade. But if you would have got in on March 1st, this is where you would have caught it, right here. Because this is the day that Heikin-Achi candle got created. You take it right there in the 1st, you would have caught that gap and all of this move. Okay? That's and again, notice that Heikin-Achi candles, there's no gaps in them, right? There's no gaps in them. Paulie, there will be a replay of this webinar. Everybody who signed up for the webinar will get a copy of it. All right, so again, no gaps. All right, so I'm going to take a look at some live Heikin-Achi candles in reversals here. Now I've been trading all day, so I haven't actually had a chance to identify some. So I'm going to use one of my TC 2000 scans to find some Heikin-Achi reversals on a daily chart and show them to you. All right, so just give me a second here and I'll do that. All right. Okay, so, and I'm going to move my TC 2000 chart over here because that's where I'm doing the scan on this, and then we'll take a look at them on these by super system. All right, so these are some of the ones that have popped up on my chart right now. All right, so this is Excel. This is a biotech here. It came up on my Heikin-Achi reversal. So if I go down here and I switch to my Heikin-Achi, this is where I'm seeing what I'm getting here. See the little candles and then a big flat bottom candle. This is basically a Heikin-Achi continuation on Excel. Okay, yeah, Excel looks pretty nice right there. So if I was thinking of trading Excel, what would I do? Well, how would I know if I want to go long on this one? So what I'm going to do is I'm going to switch over to my SPY super system, and I'm going to switch to a daily chart, and I'm going to put Excel in there. I want to see what it looks like. All right, so I'll put an Excel right here. Oops. Again, I'm kind of doing this on the fly, so. Okay, so here's EXEL. So what do I look like? What do I look for here on the SPY super system? Well, remember, I want to take it only if the current time frame momentum and the multi-time frame momentum are both bullish. They are. I've got a bullish current time frame momentum on the daily, and I got a bullish multi-time frame momentum on the bullish. This is a nice little breakout. That becomes a candidate to trade long. All right, it becomes a candidate to trade long. Let me see if I can find a couple more. Okay, TSM, Taiwan Semiconductor, all right, is also a Heikin-Achi reversal candle. All right, so I'll look at TSM, and let's see what it looks like. Do I want to trade this long? I do not. You see the current time frame momentum is blue, right? But the multi-time frame is bearish here. All right, so and I do have a Heikin-Achi reversal candle on it. If I show it to you here on TC2000, there it is right there. But if I saw that it came up on my list, I'm not going to trade it long because it does not have institutional buying in there yet. Okay, that's what I'm looking for. All right, I'm looking for something like that. I'm looking for Dollar Tree. Dollar Tree is another one. Dollar Tree look good? Yes, it does. We're getting a nice break in Dollar Tree right here. And if I switch my super system to Heikin-Achi candles, which I can do very easily, I just switch over to Heikin-Achi on TC2 on TOS. There it is right there. There's a Heikin-Achi reversal candle after this down move. Beautiful, beautiful setup. Dollar Tree becomes a potential long. Right, so that's what I'm looking for with Heikin-Achi candles. Right, there's quite a few of them. Some of them are going to be good. Some of them are going to be poor. I mean, I get Alta, but what I'm emphasizing is once you find a Heikin-Achi candle, make sure that the SPY super system is telling you that the institutions are in it, because the Heikin-Achi reversal is giving you the candlestick reversal technically, but you've got to know that the institutions are in there. Otherwise, it's not going to have as high a probability of success. So this one I wouldn't take. Even though it has a Heikin-Achi reversal candle, I'm not going to take Alta because I've still got the multi-time frame momentum telling me bearish. Okay, so that's how I find those. And I have scans that do those. And if I look for some shorts, I can find some shorts as well. All right, so I looked at let's see, that's a pretty big one. PD, some of these were earnings today. Right, TMUS is another one. All right, so here's TMUS. So what's TMUS look like? Look like this has been a downtrend here. It popped up, this Heikin-Achi reversal. Now we're getting a Heikin-Achi reversal to the downside right here. Flat bottom, can I take it? I can. I can take TMUS short right here. It looks pretty good. And if I look at it on my charting program on TC2000, it looks good to me. All right, I've got some room to the downside. That's what the regular chart looks like right there. Right, so that's what I'm looking for on Heikin-Achi candles. You're looking for the reversals on the daily chart for swing type trades. And you can look for the same thing on 5-minute candles, obviously. During the day, you can look for Heikin-Achi reversal candles on a 5-minute candlesticks to take a quick intraday long or a quick intraday short if it's breaking through resistance or support levels. All right, so that's what they look like. And again, there's tons of them. ZS is another one. See that? This is continued. This is considered a continuation. See, this is a Heikin-Achi reversal down here. Then you get a couple of small candles. This is a reversal. That's a good short. Z-scaler is a good short for Friday. I mean, it's a very good short. This is what it looks like on my TC2000 chart, where I have my 200-day moving average. It's fall below it. Look at the volume coming off of earnings. It's a decent short setup. So you wait to see what it looks like on Friday. If it opens red, you can take it short. Okay, so that's what I look for on Heikin-Achi candles. I'm looking for 5 minutes and I'm looking for daily, but I've got to have the SPY super system tell me that particular stock meets the criteria I need to go short or go long. All right, so that's how we use Heikin-Achi candles. All right, so we looked at some of those. All right, so that covers the format of the SPY Super System. I'm going to show you some quick trade results. I'm not going to spend a lot of time on these trade results. There's just a couple of things I want to point out on the SPY Super System trade results. These are just recaps of 2023. 2,000 invested in each trade in the room. If you took every trade, produced about 60 grand, 5,000 a month. 2024, 55, about 45 a month. And remember one thing about the profits that you make. A lot of it is dependent upon what the market's doing. If the market is trending on a daily basis or even on a 5-minute basis, you're going to make more profits than you do on a choppy market. All right, so that has an impact on that. This is 2025 through September. This has been our best year so far. We're actually up over 50,000 now, and 5,307 per month, which is the best month we've had, as you can see, 5,045 and 5,307. Okay, so that just kind of gives you a recap. This I just threw in here because I wanted to highlight when the market was bearish in April, when they were talking about putting the tariffs on. We only had 4 trades on these. We had these in the room, and we had these on the alert service. Broadcom, Nike, Sarepta, and NNE, right? And we were short all of these. We entered on Broadcom at $75 a contract, we got 104, 39% profit. Nike, they put the tariffs on Nike. We had Nike short when they put the tariffs on, and they were supposed to have a 39% tariff in Vietnam, which is where they make all of their product. So we get in for this for 285, and we were short, and we held it for a few days, and we get it at $9. That's 216% profit. Now this is very large, and don't think that this is normal, because it's not. 216% is very unusual. But anyway, this was a big move, and these are the only 4 trades we had on. We were short in the room, we were short on the alert service, and the SPY was down 10% in 2 days during that particular period of time. So I was kind of proud of that trade. So I just wanted to point that out. All right, so this is I'm going to kind of recap trades quickly. The thing that I want you to kind of look at here is this was June of this year. I didn't have many trades. I was on vacation for a couple of weeks. 11 trades, 10 wins, 1 loss, 91% win rate, made 37.90 on the trades. But notice the percentage gains. We don't have 200, 400, 600. A lot of places will tell you about how much you can make on each trade, and it's in the hundreds of percentages. That's not true. You know, we grind out 20, 23, 25, 40%. This is typically what you're going to see on the trades that we take. You're going to get 20, 30, 40% on most of the trades. In July, we had a lot of trades in July. But you can see the percentages don't change a lot. 40, 20, 32, 52. We did have 166 on Sarepta, but generally speaking, they hung right around here about the 25, 30, 35%, right? And July was a big month. 30 wins and 3 losses. This is the best month we've had this year. That's a lot of trades. 33 trades is a lot of trades for us in a month. But 91% win rate, and 2,000 invested in each trade produced about almost 17,000. All right, August, 20 wins and 4 losses. I want you to see the win rate, again, keeps remaining in between 80, 82, 84, 86%. September, we had a decent month of September, 21 and 4, 84% win rate, 4,744 profits. But again, you see the percentages. We have some, and we have losses. Remember this, we have losses. Let's be honest about this. Everybody has losses. All right. So I'm not going to go back all the way to 2024. This was January. But again, you can see the percentages. We had some nice wins in January. February was a very nice month. But again, I think you get the idea of what we're talking about here as far as percentage gains are concerned. Okay. Because May we had some time spreads. A good month, very good month. June was a decent month, you know, 75, 90. The alerts actually made more in June than the room did. But in 25 and 4, 86% win rate. July was good. I do want to point out September last year. This was my only losing month. We had a losing month in September. I want you to be aware of that. We lost 1786 in the room, 295 in the alert service. Again, in August we had been up 45-35, and the alerts had been up 24-62. So this was a weak month for me. 8 and 5. This is an embarrassment for me. 62% win rate. It's embarrassing. But it is what it is. That's all. We didn't have a lot of trades we could take. We had some go against us. There was some news events that caught us on deer. But then we bounced to October and we went to 17-3 and 74.48. So that's how it went. And I'm not going to run through every one of these. Again, this was this year, 2025. But again, 84%, 89%, 83%, 81%. See the number of trades. Yeah, I have around 20, 25 trades or so a month. Now on the alert service, what you're going to get if you're on the alert service is you're going to get an alert. Obviously, you're going to get an SMS to your phone. It's going to have the date of the trade. It's going to have the stock symbol. This was Nike. This was a Nike trade. It's going to tell you to buy the April 11th 67 puts. So that is buying the April 11th. That means you're getting calls, right? Well, puts. You're buying puts. So you're buying April 11th 67 puts. April 11th is the expiration date. 67 is the strike price, and you're buying puts. So we're going to be short this, and you get them for 285. That's the entire alert you would see. Then you would get another one that's going to tell you the same thing, and it's going to say sell order, put a sell order in for $9. Then you're going to get another one that's going to tell you we sold it for $9 on April 3rd. There could be others. If we changed it from 9 to 950 or 9 to 850, you could get another alert. Right? So that's what they're going to look like when you get them on your phone. Again, we sent one out today on Apple. We haven't sent one in a while because the market has been not conducive to making swing trades. All right, so how do we achieve these stunning results? I'm just going to whip through this. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. We've already talked about this quite a few times. And we only take trades when both of these are in our favor. I will take trades if the institutions are in the trade and the market internals are neutral. I just won't trade against the market internals. And it does it by looking at triple screen assessment. Again, we've talked about momentum, we've talked about trend. It also looks at some money flow in there, but what you're interested in more than anything is the momentum. Okay, so I'm going to run through these again, some of these charts, just so you can see them in case you have any questions on these, so you can understand why we're taking them. Again, here is the actual chart. This is on Thinkorswim. Here is the modified Laguerre oscillator, current time frame momentum, multi-time frame momentum, and long-term trend. That's all you need. For 5-minute charts, all you need is this, current time frame momentum, that's it. Here's your VWAP, support resistance. Here's your 15, support resistance. Here's your 8, exponential moving average, support resistance. And your pop signals. And there's your market internals. That's everything you need all there on one screen. Right? And this is if you buy the software, you also get this template. You can swap them back and forth. This is for just folks who just want to do the SPY Super System trades on a 5-minute basis. They're only interested in doing quick trades. They're not looking at swing trades. Then you can have this particular template right here, right, which is for the SPY Super System trades. Right, so you got the current time frame momentum, and you've got all the indicators that you need. The 8 would be on here as well. All right, so this was a trade we took on the SPY Super System. This was a high connector reversal right here on the Qs. Came right down off the 15 right there. Right, take it right there, and it stays above the 15. That's the 15 right there. See, it stays below the 15. The institutions are selling. You notice how when we took it, they went from green buying to yellow selling. Take it right there. We ride this thing down, and you could just stay in this as long as it stays below the 15 and take profits whenever you want. This was a very long trade, and you can see that it stayed bearish the whole time. All right, the SPY Super System, I'm just going to talk about this. This is for folks who trade intraday. Most of the SPY, the Qs, the IWM, but you can also do it on stocks, Tesla, etc. A lot of things that you can trade off of this, looking at those 5-minute charts that we were looking at. But these are the results I've had for the SPY Super System. I can't post them. I can't send them out on alerts. So this is the results I've had since July of 2024. When we put this into effect, but you can see there's a lot of trades, and they're very quick. All these trades, you only have one on at a time. They're going to be very short duration. 1 candle, 2 candles, 3 candles. But this is the results I've had. I've never had a losing month with this. I just had on Monday I had 6 SPY Super System trades that were all profitable, and I wasn't in any of them for more than 15 minutes. We got a lot of people in the room that use it, but I just want to point out how well this works. All right. Again, these are my results. This was October, November, December last year. I want to make clear The SPY super system, which is taking these quick 5-minute trades on the indexes, right? This produced $4,831, 33 wins and 4 losses. The room itself, if you were in the room and you took these trades, you would have made this, right? This is what you would have got if you took all the trades, roughly. But this is what I made. I can't tell you what you would have got here because I can't post entries onto them and exits, right? But this does not include this. This does not include this. These are completely separate strategies with completely separate P&Ls. Okay, and this was November. Again, another nice month in November. December, another nice month. Again, the SPY super system was producing really, really good results, and it continues to do that. So this was the 4th quarter of last year. I mean, this is, but again, you may not be doing this. This is what I did, but this is what the room produced in that quarter, right there. Okay, at $2,000 per trade. Okay, so here's some more. This was another SPY super system trade right here. You notice that current time frame momentum. This is an old chart, so I'm going to skip that. So here's one here. Again, how it breaks down. It goes from selling to red right here as it breaks down with a pop out of the box symbol. You take it right here, out one candle. I was out on one candle on this thing, $90 profit per contract. Another one right here. This was using just the current time frame momentum. Okay, as it breaks down, boom, boom, and out. Again, this is the new super system tablet. Again, if you buy the software, you get both of the regular, they get the templates. This template and the normal template that has everything on there. Okay, this was a nice, beautiful SPY super system trade here. Again, it was red here, the current time frame momentum. This was an older one. I didn't have the gear down here at the time, but there it is. It's red and it's breaking below the VWAP. You can see how it breaks below the VWAP, and you get a pop signal. You take it right there. You write it down here. $120 profit per contract. All right. Now I'm going to show you some swing trades that we've taken so you can see how we use it for swing trading as opposed to just 5 minutes. This was a lot. This was going to be a swing trade, but we made so much money on it in the intraday that we took it off before overnight came along. We took it right here. See that it went from buying to selling right there, right? Buying to selling right there off the VWAP. We took it there. We rode this thing down for an hour, and we had a 51% profit in these puts that we had on, which were out in a few weeks in time because I was planning on swinging it. But we took 51%. I didn't see any reason not to take it off. So we took the profits right there. Okay, this was URGN. This is a daily chart. Is a swing trade right here. This is when we took URGN. See, it went from bearish to bullish right here, but it was compressing. Once we got this little move above this compression right here, we took it long right here. In for 710, out for 717. It didn't do much for 3 or 4 days, but it stayed green and blue, stayed bullish, and it stayed above the VWAP. I'm sorry, stayed above the 15 EMA. We took it right there, and then we took profits and it bounced up here. 48% profit on that. Another nice one in NVIDIA. I think I showed you this one. This was the PBO, the pullback to the 15 with the bounce. Nice trade there, 32%. SMR, I showed you that one already. It was Nike. This is a trade we took when they were putting the tariffs on. We took it right here. We actually had a pretty good profit on it that day, but we stayed in the trade. Notice that the institutions are selling. When you look at this, you can see that the institutions are selling Nike like crazy, right? Since this candle right here, they've been selling it like crazy. We stayed in it, and then we got this flush down, right? And that was a gap down that we took 216% on that trade that I showed you. All right, and one of the things I teach in the room is gaps are gifts. In other words, if you get a gap down, and you're in a short trade like this, take the money on a gap down, and take the money on a gap up if you're in a long trade. And there's 2 reasons I say that. One, obviously, you're gonna have a nice profit in there. And the second thing is trades when they gap, less than 1/3 of the time they'll do a gap and go and continue in the same direction. They'll do a gap and chop, or what they call a gap and crap, where they'll just turn around and head the other way. And when you get a gap down on an option that you've got, right? When you get a gap down on an option you've got, the implied volatility of the premium, which jacks the premium up, is going to be very high right at the open because of the big gap. Market makers move up the premium, the implied volatility goes up, the premium options go up. If you take a stock and sell it like at 931, 932, and the stock doesn't move, and at 940, the price will be down on the options because the implied volatility will go down. So that's why I say gaps are gifts, take the profits. Okay. Yeah, you'll get a replay of these exactly. These are all automated trades or manual. No, these are manual trades. I do these trades manually. I mean, you've got to take a look at several criteria. When I'm looking at a trade, I'm looking for the breakouts, et cetera, and I show you these breakouts. But I'm also looking at what's the market doing that day, and I've look at what else. I'm trying to find the best stocks that do that. So that's not automated. I just go in and put the trade on, and then I either put a trailing stop on it, or I watch it and go and just put a sell order on it, and do it like that. Now the alerts are not automated, but I send them to you and I tell you exactly what stock to take, how much to pay for it, what the expiration date is, and then I send you an alert to tell you when to get out, what to put in for sell order. Yeah, I don't use automated trades. Nah, I'm basing this on technical analysis, the SPY super system, all the things you need to really to really pinpoint the very best trades. The market's very dynamic. I mean, if you're taking an automated trade, you've got to take into consideration what the market's doing that day. It's very important to have that, because those things can change a lot. Or was there a news event that came along? You've got to take all those things into consideration, which I'm looking at all of those things and talking about them during the day. All right, and there's the Sarepta trade. Again, nice daily chart. Are they being sold? Absolutely. Institutions are selling the heck out of this thing. This was HIM's trade. This is a long trade I took. I kind of missed a better entry back here, actually. But I did take it here and made a nice profit on 25%. I left a couple of runners on, but I did include that in the results because it was kind of a lucky thing. All right, so those are the charts. That's the SPY super system. I don't want to take up all your time going into Thanksgiving, but again, here's a recap of what we do in the room and on the alert service, the different strategies we use. We have strategies for markets that are bullish, markets that are bearish, choppy markets. With different strategies we use to make them fit whatever the market happens to be doing, because the market's very volatile, it's very dynamic, and you can't just use one kind of strategy. You've got to have multiple strategies to take advantage of the market. Okay, so these are the offers that the right line's got. This is these 60% of this is a pretty big sale. These are the Black Friday sales. This is for the SPY super system software, the actual software I just showed you, right? This comes with the scanners. It comes with what they call a master classes. These are my videos on trading. I've got about 31 of them. All the different strategies you use, the criteria you use, what you look for if you're looking for a time spread, what you look for if you're looking for a straddle, etc. I have videos on all of those. You also get the software put on your machine. Right line will take over your machine and they'll put the software on there. It's going to look exactly like mine. You're going to look exactly like mine with the same scanners, everything. You'll have the exact same setup I had that you just saw. And you also get access to the live trading room. So you get the super system software and access to the live trading room. This is a really good deal, $9.98 for a year. This is really an outstanding deal for the room and for the software. I mean, really, really good. And if you want to, don't have to do it every year. You can do a one-time payment, which is the software and the SPY super system software, same as this. The scanners, my training videos or the videos that I've got. The software will be installed on your computer by Brightline. You don't have to worry about technical problems with it. And then you get room to the office's live trading room. You get access to the room and you get the software. That's $19.98 forever. You get the room and the software forever. Really, really good deal. Now they also have a Black Friday special where you can get a free 2-week trial, right? And you get the text alerts, you get the trading room, and you get these for 2 weeks. And then it rolls over, if you don't cancel it, rolls over to $3.96 for a quarter. All right. So this is the way you tiptoe into the system. Now this is going to cost you more than all the other stuff, of course, because it's done quarterly. You also have an annual on the text alerts, trading room access here for the text alerts, $11.95 for a year, right? And that also includes a Discord room where we have 2 professional traders in the Discord room as well. So you get access to that, $11.95, a really, really excellent deal. This is for if you're just looking at the room and the alerts, you're not looking at the software. And then over here, this is a one-time payment of the same thing, $24.96. Get you the alert service forever, the room forever, the training modules, and the Discord room, and all updates. I mean, you're going to get any changes we make. Like if you buy the software, you're going to get any changes we make to the software. So this is the software with the room, and this is the room and the text alert service, right? Pretty really good, pretty good deals. I do want to point out, this is I did this calculation, this is return on subscription. This is, I'm assuming that you're spending about $1,600 a year to get into the alerts in the room, based on the quarterly processing. The average trade size being $2,000. So I'm assuming you take all the trades that we post, right, for $2,000. The historical results for every single year, you're getting 40% in return of what you paid for the subscription back, 40 times ROI per year. So the annual profits have exceeded 40 times the subscription cost. And if you take the annual or the lifetime, it's much higher than that. All right, so the subscription is consistently paid for itself many times over. It's got higher ROI, simple math, proven results. And again, always disclaimer, past performance is not indicative of future results. I've been doing this for 16 and a half years, and I've had consistent results, but past performance is not indicative of future results. Trading involves risk. We all should know that. Okay. So that is the deals we have for the Black Friday specials. You can call Rory if you have any questions on any of these things. Right here, 786-732-4656. In the chat box, he has the links to these particular offers right now, so you can click right on that. Okay, so that's the presentation. I appreciate everybody coming here the day before Thanksgiving. I hope everybody has a great Thanksgiving day if you're here in the United States, and if not, just hope you have a good day off. Market will be closed tomorrow. Market will be open Friday, but only till 1 o'clock, half a day on Friday for trading. So I'll be in the room from about 9:15 till about 1 o'clock. But I'm in the room every day, all day long, which is I don't know too many rooms that do that, to tell you the truth, where they have somebody who's a professional trader in there all day long, answering questions, suggesting, showing charts, answering questions for, and teaching, basically teaching a lot about technical analysis and how to use the SPY Super System software. So do that all day long. Again, so thank you very much for being here today. I appreciate it. And I hope everybody has a great weekend. If you're going to be taking Friday off, have a great long weekend. If not, have a great Thanksgiving. And look forward to seeing folks in the room here pretty soon. Have a good one.
All right, thank you, David, for an outstanding conclusion to today's summit and a tremendous set of insights on precision SPY trading. David's Black Friday special is now in the chat. David, wishing you and your trading community a very blessed holiday season, and thank you for being here today. We really appreciate it.
Thank you. Say much thanks to you. Have a great Thanksgiving.
Thank you, David. Traders, thank you for spending the day with us at the 7th Annual Thanksgiving Investors Summit. A heartfelt thank you to each of our speakers for sharing their expertise, their insights, and their time with the Traders Corner community. We hope you enjoyed this full day of actionable education during one of the most opportunity-rich weeks of the year. As a reminder, the full replay will be sent to you tomorrow and will also be posted on our Traders Corner YouTube channel for on-demand viewing. From all of us here at Traders Corner, we wish you a very happy holiday season, a blessed time with family and friends, and continued success in your trading. Have a wonderful evening, and we'll see you at our next event. Thank you, everyone. You are appreciated.